So now let's get started with another chapter called as cost accounting systems. Right now, this chapter is a common chapter for CA and CMA students. In CMA, this chapter is called as cost bookkeeping. In CA intermediate, they call it as cost accounting systems. That's all is the difference. But for that, the content is exactly the same for both the courses. Now, shall we begin, guys? Yes, let's get started. Now, in this particular chapter, overall you have three different segments. Segment 1 is called as non-integrated system. Segment 2 is called as integrated system. And segment 3 is called as reconciliation of costing profits and financial profit. Sir, first of all, sir, what is this chapter talking about? Now, quickly, we will just revise this entire chapter, right, with all the concept and every single discussion. Now, guys, first of all, this chapter talks about preparation of your costing books, right? Preparation of your costing books of accounts. Now, or in other words, I can say that this chapter is exactly same as your cost sheet chapter with only one difference. There, we prepared the costing records in a statement format. Here we are going to prepare the costing records in a ledger format with a formal accounting system of debit and credit. Right? Now, before that, first, who needs to maintain books of accounts? Let's say your father is a salaried person. Now, will he prepare P&L balance sheet and all? No. Why? Because the law does not require your salaried individuals to maintain books of accounts and all. Then, sir, if I'm running a business, right? So, am I required to maintain books of accounts? Yes. Where is it maintained? Where is it mentioned? More specifically in the Companies Act. There is a section called Section 128 of the Companies Act that says every company needs to maintain books of accounts at the registered office. Right? Now, what do you mean by books of accounts? That is defined in Section 2, Clause 13 of the Companies Act. It says every company needs to maintain records with respect to their income and expenses. That is called as P&L account. Then receipts and payments. That is called as cash flow statement. Assets and liabilities. That is nothing but your balance sheet. And it doesn't stop there. It also continues to say, there is a fourth clause here that says every class of company as prescribed by the central government should maintain records with respect to utilization of material, labor and all other expenses, right, related to production and sale of their goods and services. Basically they refer to utilization or consumption based entries, which is nothing but they refer to cost records. Are you all able to understand this? Who needs to maintain cost records? Only certain class of companies as prescribed in section 148 of the Companies Act. Is that clear, guys? Now, this might look like a law session, but you need to understand the reasoning why you are actually studying this subject itself. Is that clear, guys? Right? Hence, under section 148, they say that they have prescribed that certain class of companies who meet the threshold, the turnover threshold and all, right, as prescribed by the central government, they need to maintain their cost records in a manner prescribed. There are forms like form CRA 1, CRA 2, CRA 3, CRA 4. There are 4 forms and all. And guys, this costing records, now if you see, the first 3 are financial records. Guys, correct? Yes. Now, your financial accounts need to be maintained as per accounting standards prescribed by ICAI. Am I right, guys? Our institute, CA Institute. Am I right? Similarly, your cost accounts, basically your costing records, need to be maintained as per cost accounting standards prescribed by the CMA Institute, that is the Institute of Cost and Management Accountants of India, and accordingly they have prescribed 24 cost accounting standards as on date. Is that clear, guys? Ideally, whatever you are studying as a part of your syllabus, for example, treatment of overheads, under or over absorption, whatever it is that you have studied, all these things are as per CAS, cost accounting standards. Are you all able to understand this? Yes. Next one. Now, financial accounts get audited by your chartered accountant. Guys, correct? Cost accounts needs to be audited by a qualified cost and management accountant, CMA. Are you all able to understand? Now, our subject has three objectives: stock valuation, profit computation, decision making, and control. And this chapter squarely comes within the ambit of objective A of our subject, stock valuation and profit computation. And ideally, guys, the first objective, stock valuation, profit computation, is called as cost accounting. Objective 2 and 3, decision making and control, put together is ideally called as your management accounting. Is that clear, guys? Right? Now, guys, what the law says is that every company which meets that threshold or criteria as prescribed by the government needs to maintain cost records. Am I right, guys? Yes. Now, these companies, they have been given a choice, right? They can maintain their cost records either under non-integrated system or under integrated system. There are two ways in which your costing records can be maintained. What are they? Non-integrated system and integrated system. Non-integrated system means what? Now, you will have a separate team to maintain your financial accounts, a separate team to maintain your cost accounts. Are you clear with this? Or in other words, your cost records and financial records are kept separately by two different teams. Is that clear? And at the end of the period, the finance team will report financial profit. The costing team will report costing profit. Is that clear, guys? Will both the profits be same? No. Why? In costing, we saw in cost sheet chapter, we only report operating profit. Now, certain other non-operating expenses, any cost incurred outside the three locations, are not considered in our subject. Non-operating incomes like your rental income, FD, interest, dividend received and all, these are not considered here, right? Certain other parameters are also there. These are not considered here, but they will be considered in financial accounts. Guys, correct? Hence, these two profit will be different. Am I right? Hence, at the end of the period, you need to prepare something called as a reconciliation statement. Are you all able to understand this? Yes. Now, understand, this will arise when the company is following non-integrated accounting system. Non-integrated system means what? Your costing records, financial records are kept separately. Whereas, if the company is deciding to maintain their costing records in an integrated system, it means that your financial accounts and the cost accounts are maintained together in an interlocked manner. Is that clear for everyone? Now, in this case, there is one team. It prepares a single set of books, hence they report only a single profit. Are you all able to understand? Now, in this case, now I don't have any two profits. Where is a question of reconciliation? Are you all able to understand? Hence, always remember, reconciliation arises only when the company maintains their accounts under non-integrated system. Hence, these are the three learning objectives of this chapter: non-integrated system, integrated system, and reconciliation of costing profit and financial profit. This is applicable only when the company follows non-integrated system. Are you all able to understand the background of this chapter? Now, with this, let's get started with the first segment called as integrated accounting system. Now, guys, for you to do this integrated accounting system, what is non-integrated accounting system? I'm sorry. The first segment is a non-integrated accounting system. Now, basically, guys, in this case of non-integrated accounting system, what do? Costing records and financial records are maintained separately. So here, costing records is completely outside the purview of your financial records, maintained separately by a separate costing team. Guys, correct. Now, in this case, now what do we need to do? We need to maintain our costing ledgers. It is nothing but you need to open some ledger accounts, debit and credit. You need to do the posting and all. Clear with this, guys? Now, this is a very simple area, provided you have some fundamental knowledge of your accounts. You guys have fundamental knowledge of accounts? Yes. Now, in accounts, what do? Now, there are modern way of accounting. They say there are 5 different items: expense, income, assets, liability, and capital. Guys, correct? Now, expenses and asset, increase of an expense or an asset will get debited and decrease will get credited automatically. Guys, correct? Now, with respect to income, liability and capital, increase gets credited, a decrease gets debited. As simple as that. You guys know this? Yes. Now, this is the knowledge that you need to have in accounts. Now, under non-integrated accounting system, costing records are maintained separately. Yes. Now, I will tell you the rules of the game. Now, you need to follow these rules, and overall in non-integrated accounting system, we will only maintain 11 ledger accounts, which means debit or credit of a particular journal should come only within these 11 ledger. Are you all able to understand? There are only 11 ledgers in cost accounts. That is basically your non-integrated accounts. Is that clear? Now, what are the 11 ledgers? First, stores ledger control account, called as SLC. Then you have WIP control account. We call it as WIP for classroom discussion. FG control account, we call it as FG. These three are asset ledgers, stock ledgers. Is that clear? Next, you have wages control account, right? Then you have production overheads account, administration overheads account, selling and distribution accounts. These four are expense ledgers. Is that clear? Next, you have a ledger called abnormal loss account. If there is any abnormal losses, you park it in this ledger. Guys, clear with this? It is a loss account. Means what? Any increase in this ledger will be, increase in loss will be debited. Increase in loss will be debited. Guys, correct? Next, you have a cost of sales account. Guys, this is nothing. Recall your cost sheet area. Cost of goods sold plus AOH plus SOH. If you add these three, you get your total expired cost. That is the total cost incurred. This is called as cost of sales. Guys, correct? This cost of sales should be knocked off against your sales to arrive at the profit. Am I right? Now, what I do, this cost of sales is like a truck ledger. Here, I will load it with cost of goods sold. I will load it with AOH. I will load it with SOH. Collect all the costs, and from here I will take it to my costing P&L account. Is that clear, guys? Right? The next ledger is costing P&L. This is where sales will be on the credit side, and on the debit side all the expenses will be there, and I will arrive at the profit. Is that clear, guys? So these are the 10 ledgers, right? There is 11th ledger called as general ledger adjustment, GLA, or this is also known as cost ledger control, CLC. What is this ledger? We will see. Is that clear, guys? Right? So basically there are 3 stock ledgers, RMWPFG, then 4 expenses, wages, POH, AOH, SOH, then abnormal loss, cost of sales, costing P&L, and 11th man is called as a GLA or a CLC. Is that clear, guys? Now with this, what we will do? Now we will see segment wise. I will narrate you the transaction. Within these 11 ledgers, I want you all to tell me the journal entries. Will you guys do that? Yes. Online folks, please participate. Assume I'm standing in front of you and teaching, right? Just attempt, and that's all it is. Shall we get started? Now, guys, first, please take your concept decoder book. Now, first, all these things I mentioned here. First, we will see journal entries related to purchase of journal entries related to raw material related entries. Now raw material is getting tracked under which ledger? Stores ledger control, SLC ledger. Guys, correct? Now let us say first transaction, I am purchasing raw material. What will be the journal entry? Now if I purchase raw material, asset will increase, so SLC account gets debited. 2, I purchase it from a creditor, let us say to creditor account. Now you tell me, do we have creditor account here? No. Since this creditor account, it is a financial ledger, I don't have a creditor account. If you can't find this ledger within the first 10 ledger, park it under the 11th man called general ledger adjustment account. Is that clear? Or this is also cost ledger control, whichever name you want you can use. Is that clear, guys? So, or in other words, these 10 ledgers are what? Your cost ledger. Now, suppose if a credit or a debit is coming from your financial ledger, we do not maintain that ledger. Simply put it under general ledger adjustment account, or it is also known as cost ledger control account. Is that clear, guys? That's all it is, right? So what is the first transaction that we saw? Purchase of raw material, entry SLC account debit to creditors is not there, hence I will take it to GLA. That's about the first line item. Second line item, materials issued to production. What happens? From my SLC, the product gets into my factory shop, WIP. Now what happens? WIP value will be more. So WIP account credit. Now SLC will be, balance will reduce to SLC. Is that clear, guys? So WIP account debit to SLC. Is that clear? Logic. Both are assets. Increase in asset gets debited, decrease in asset gets credited. Logic also I'm telling you right now in the marathon itself. Is that clear, guys? Next one. Now maybe there could be a scenario where now these guys, the factory manager, he took some extra materials. Now he's returning it back to the stores. Now visualize what happens when he's returning back to the stores. What happens? Stores value will increase, SLC account gets debited. Now WAP value gets reduced, WAP account gets credited. Is that clear? Entry SLC account debit to WAP. As simple as that. Next one. Now suppose purchase returns. Raw material gets returned back to the supplier. Now what will be the entry? Now you guys tell me. When I return back raw material to the supplier, my stores balance will reduce. Am I right? So SLC will get credited. Now SLC will get credited. Now what should be debited? Now when this happens, my creditor value will reduce. Reduction in a creditor, a liability will be debited. Am I right, guys? So I will debit the creditor account, but do we maintain creditor account here? No. Hence, instead of creditor, we will park it to GLA account or CLC account. Is that clear? So the entry will be GLA account debit to SLC. Are you all able to understand this? As simple as that. Please do not mug this up. Please do not mug this up. It is basic, your basic accounts inside costing. That's why it's called cost accounting. Is that clear, guys? Right? Next one. The next line item is direct materials purchased by factory. In exam, they will give you special orders. Sir, what is this, sir? Yes, you guys remember in regular batch we did? Yes, biryani example. Very good. How can we forget biryani? Now, I will explain this example. Now, guys, let us say in your house, there is a place called kitchen, right? And near the kitchen, there will be a storeroom. Now, from the storeroom, generally, your mom, from here only, she will take your rice and pulses, vegetables, whatever required, and she takes it to the production area, which is basically the kitchen. Guys, correct? Now, what happened one fine or not so fine day? Your guests came home and they said, only if there is biryani, we will eat. Now, there is the biryani rice got over. What mom asked, she called you and she asked you to go buy biryani rice. Right? Already what she did, cooker, she turned it on with water and all she has put inside. So water is boiling. So the moment you bring that biryani rice, maybe with that she will turn on the cooker and everything else can be done. Now what you did, you went and purchased biryani rice and you came back to home. What will you do? Option number 1, directly give it to your mom. She will cut the packet, put it here. Or option number 2, you will tell, no, I will put it in the store area. You go and take it. Which one will you do? So first, directly you will say, it is an urgent order. Now you please take it and start the manufacturing. In this case, start cooking that right away. Guys, correct? That's what we do. Similarly, in case of some urgent orders, now what happens? I will tell the supplier, look, don't come from this gate. This gate is stores area. I will open another gate for you. There you directly deliver to the factory shop. Why? It might be an urgent order. Guys, clear with this? In this case, what will be the entry? I am receiving raw materials, but directly to my factory shop. Entry, WAP value increases. So WAP account debit to creditor is not there, hence GLA. Are you all able to understand? That is called special order. WAP account debit to GLA. Are you all able to understand? As simple as that. Next one. Indirect materials issued for production. What is this, sir? Example. Yes, cotton. Let us say I am operating in Tirupur cotton mill or Tirupur cotton textile industry. For me, raw material is cotton used for converting it into t-shirts or maybe apparels, wearing apparels. Now what I do, suddenly some Ayudha Puja, there was a puja celebration in our factory. Now what happened, we had to clean all the machines. What I did, one bunch of cotton I took, not for converting it into t-shirt, but I used this for cleaning my plant and machinery. Is that clear? Now what I bought as a direct material gets converted into indirect material, guys, correct? Hence the entry will be what? Production overheads account debit to SLC. SLC gets credited. Why? Stock balance reduces, and this turns into an indirect manufacturing cost. Hence the entry will be what? Production overhead account debit. Increase in expense gets debited, reduction of asset gets credited. Is that clear, guys? Logic you remember. That's about it. POH account debit to SLC. Next, abnormal raw material loss. Obviously, abnormal loss. Let us say there's a theft of theft or any fire. So now your stock gets stolen and all. What is the entry here? Now SLC gets credited because stock balance reduces. Now there is a loss that gets created. So abnormal loss. The entry will be abnormal loss account debit to SLC. Is that clear, guys? That's about it. Finally, transfer of raw material from one job to another job. Now what happens? The entry is transferee job account debit to transfer of job account. Now sir, can you give us an example? What is this? Simple. Let us say I am operating in a job costing sector. Let us say I am operating in a job costing sector. Now what happens? I have stores area. Here I have a WIP area. In a WIP area, what happens? Multiple jobs are being in process. Multiple jobs are being in process. Let us say there are two jobs, job A, job B. Both these jobs require, let us say, a common material. Let us say screws, nuts and bolts. Now from the stores, I actually originally issued these bolts to whom? Job A. Now suddenly job A has excess nuts and bolts. Job B says it wants some nuts and bolts. Now two option. Option number one, from here itself A can transfer it to B. Or option number two, B is asking A, please supply. A is saying, no, I will return it to the stores. You go and take it from the stores. Now, if this returning and taking back comes in, it is a waste of lot of time. And remember, for every movement, there will be a cost incurred. Guys, correct? Now, what is the ideal thing to do? Here itself, A will transfer it to B. Guys, correct? Now, the entry will be what? B is also a WIP. A is also a WIP. All these are WIP subledgers. Guys, correct? So, job B value will increase. So, job B account debit, receiving job, transferee job. Transferee means the recipient. Transferee job account debit to transferor job. The value of A will reduce. Is that clear, guys? Right? Now, you might have a doubt. Sir, transferee job, transferor job are not within the 11 ledgers given, no? Guys, understand. Now, let us say you are making sales to Mr. A. He is a debtor. There is another debtor called B. There is another debtor called C. Right? You are making different sales to different people. The entry, though you say, is debtors account debit to sales. Ideally, you will actually say it is not debtor account. You will say A account debit to sales, B account debit to sales, C account debit to sales. That's what we do. Guys, correct? ABC value put together, I call it as debtors. Or here, debtor is a main ledger, ABC are sub-ledgers. Similarly, in this case, WIP is a main ledger, job A, job B, job C are sub-ledgers. Hence, these are all sub-ledgers inside WIP. Hence, the entry will be the receiving job value increases, hence debited, to giving job, so the value reduces, hence credit. Is that clear, guys? As simple as that. That's the reason why we have kept this entry transferee job account debit to transferor job account. Is that clear, guys? So now with this, we have finished all the journal entries relating to raw material. Shall we move on to the second discussion, which is what? Your wages. Yes, shall we get started? Yes. Now, with respect to wages, there are only two entries. Entry number one, incurrence of wages. Entry number two, utilization of wages. What is it, sir? First, I paid wages. Entry will be wages control account debit to cash or bank. I don't have cash or bank, hence put it in GLA. Is that clear? Now let us say I paid 100 rupees, 100 rupees. Now out of this 100 rupees paid as wages, let us say 20 rupees is direct wages. Let us say 30 rupees is indirect manufacturing wages. That is basically your supervisor salary, production overheads. Let us say another, I said 20 direct wages. 30 is production overheads. Let us say another 25 rupees is paid for administration overheads, right? Maybe your office boy salary. Another 25 rupees is paid to salespeople, salesmen. So it comes under SOH. Now, from my wages account, I need to take these figures to the respective ledgers. Guys, correct? The first entry is what? I build my wages account, wages control account debit to GLA 100, 100. Guys, correct? Now, what will I do? What will I do? From here, direct wages, I will take it to WIP because it is incurred there only. Direct wages should be taken to WIP. Yes, so I will say WIP account debit. How much? In our example, 20. Then, sir, supervisor salary was 30. Take it to POH account debit. How much? 30. Then, sir, office boy salary we paid. AOH account debit. How much? 25. Then, sales staff salary SOH account debit. Another 25 to wages control account 100. Are you all able to understand? This is what we saw here. So, your WIP account debit, POH account debit, administration overage account debit, selling overage account debit. Now there could also be some abnormal idle time. If there is an abnormal idle time, means what? I paid the amount but I couldn't derive any benefit out of that account. That amount you need to take it to your abnormal loss account. Guys, clear with this? Take it to your abnormal loss account to wages control 100. Is that clear? So basically what happens? Wages control 100 debit, wages control 100 credit, it gets knocked off. It's just a via media ledger. So wages control account you will have 100, I'll say to GLA, and then by I will be having what? WIP, direct wages, right? POH, AOH, SOH, and maybe abnormal loss. I will have the breakup of this 100. So this 100 and 100 gets tallied. Wages control will always tally. Is that clear, guys? Next one, that's about it. Are you all able to understand? Now with this, we have completed entries relating to material, entries relating to direct wages also. Now you might be wondering, sir, direct expense is also one of the components of cost, but here we can't see any direct expense ledger, only wages. After that you've gone to POH, AOH, SOH. Where is direct wages, sir? Now guys, let us say direct wages account was there. Now in that case, what will be the entry? I incur direct wages. Direct expense. What will be the entry? Direct expense account debit to cash or bank. I don't have, hence I put it to GLA. Am I right? Now, whatever direct expense cost I incur, I should transfer it to WIP. Guys, why? Because that is where the conversion of RM into FG happens. So, entry will be what? WIP account debit to direct expense. Ideally, direct expense and direct expense gets knocked off. Direct expense ledger, even if you open, you'll create the expense, transfer it to WIP. Guys, correct? Hence, one debit, one credit. What is the need for you to have a ledger? Hence, the net of entry is what? WIP account debit to GLA. Hence, directly, any direct expense, you take it to your WIP ledger itself. The journal entry will be what? WIP account debit to GLA. Is that clear, guys? Hence, there is no need for you to maintain something called as a direct expenses account. Is that clear for everyone? Are you all able to understand? So, with this, we have finished what all components? Material, direct labor, material, wages, and then direct expense is also done. Is that clear, guys? Now, the main part of discussion in this chapter revolves around overheads chapter. Now, recall our discussion in overheads chapter. It's very, very important. Shall we begin? Yes. Now, overheads, there are three types of overheads. What are they? POH, production overheads, AOH, admin overheads, SOH, selling overheads. Now, as we all know, AOH and SOH are your P&L account items. Period cost means it does not enter into your stock valuation. Whereas POH, this is considered as a product cost, right? So it needs to be considered for the purpose of stock valuation. Is that clear, everyone? Yes. Now guys, understand, in each of these three types of overheads, there are three phases of overheads accounting. What are they? First, actual overheads. Then you have absorbed overheads. Then at the end of the period, you compare actual with absorbed. You have under or over absorption. A very technical discussion. For you to know this, you should have a complete clarity on your overheads chapter, absorption, how it gets carried out and all. Is that clear, guys? Which you have already seen. Now, first, let me open this production overhead account and show it to you. Now, guys, POH account, how does it look like? First, POH account, indirect materials. For example, that cotton used for cleaning my machines, right? What was the entry? POH account debit to SLC. I would have got it from SLC. Guys, correct. That is an actual POH incurred. Similarly, supervisor salary paid, POH account debit to wages control. I would have received some amount there. Is correct. Next, let us say factory rent paid. That is production overheads I am paying out of my pocket. Entry, POH account debit to cash or bank is not there, hence to GLA. So to GLA, some indirect expenses I pay. Guys, correct? Indirect material plus indirect wages plus, indirect labor plus indirect expenses put together gives you your total production overheads. Am I right, guys? Now, let us say the total production overheads incurred was how much? 60. Now, this amount of debit, it will be happening throughout the year. Am I right, guys? As and when I incur, I will be debiting this amounts. Put together, the sum total of debits comes out to 60. Guys, correct? Now, can costing wait till the end of the year? No. Now, what do I do? Parallelly, as and when a product comes out of the machine, what will I do? I will have to charge these products with my absorption rate. What absorption rate? Predetermined rate into actual base quantity consumed. We've already seen that. Guys, correct? So now, based on a predetermined rate, I keep on charging the products with what? With my absorption rate, with my overheads. Guys, correct? Let us say at the end of the year, I notice till date throughout the year, the sum total of all the overheads absorbed was how much? 50 rupees. Now, entry for absorption of overheads. What will happen? Absorption is charged to the product. Where is the product getting manufactured? In my WAP area. Entry will be what? Now, WAP value will increase. So, WAP account debit to POH account. Guys, correct? Are you all able to understand? So, the entry will be WAP account debit to POH. Why? Because now I remove it as an expense and then I use this to value my product asset. Is that clear, guys? Are you all able to understand? Guys, any problem here? So, incurrence entry will be what? POH account debit to GLA. Guys, correct? Now, next one. My absorption entry will be what? WAP account debit to POH. Is that clear, guys? Now, at the end of the year, what I do? I have incurred 60, but till now, I have recorded only to the extent of 50. The balance, 10 rupees, is treated as an under absorption in this case. Guys, suppose on the contrary, actual incurred was 50, but absorbed was 60. There would have been an over absorption. Whatever we are doing here, it could have come on the debit side. Is that clear, guys? Now, this 10 rupees, what will you do? Under or over absorption? In this case, under absorption. Manner of treatment of under absorption. We have already seen that in our overheads chapter. Now, because of normal reasons, in that case, using supplementary rate, you will apportion it between three guys. Who are they? Units sold, that is cost of sales. Units unsold, that is FG, and units incomplete, WAP, using supplementary rate. Guys, correct? If it is attributable to any inefficiencies or abnormal reasons, take the entire amount as a period cost. Take it to costing P&L. You guys are aware of that? Yes, that's what you need to do. Are you all able to understand? So, three phases of accounting are there. Phase number 1, actual overheads. Phase number 2, absorbed overheads. Phase number 3, under or over absorption. Is that clear, guys? So now we saw with respect to production overheads. Now, shall we do with respect to administration overheads? Guys, AOH. Similarly, in AOH, any indirect materials used for materials, if I'm using it for, let us say, corporate office purposes. So, entry will be AOH account debit to SLC. Am I right, guys? Guys, correct? Then any director's salary or office boy wages, salaries paid and all. So, entry will be AOH account debit to Wages control. I would have already got these two figures. We already saw this in material labor related entries. Now I am incurring some. Let us say office rent. Entry will be AOH account debit to yes GLA cash or bank. I'll call it as GLA, guys. Correct? So here also I'll be having actual incurred, guys. Correct? Guys, are you all able to understand? Now parallelly, what will I do? I will be absorbing my administration overheads, guys. Correct? But remember, AOH is what? AOH is actually a period cost, should not be considered for the purpose of stock valuation. Am I right? Hence I will take it to costing P&L, guys. Correct? But wait, instead of directly taking to costing P&L, I have a truck waiting. For example, let us say, guys, you are shifting your house. Old house is there, new house is there. In your house, you have so many articles, right? So many articles, utensils you have. Now, two options. Option number one, take one by one on your head and go and come back and transport it. Or option number two, call a truck, transfer everything into this truck, single shot, take it to your new house. Which one will you do? Option 1 or 2? Option 2, you will transfer everything into a truck. Similarly here, whatever cost that needs to be taken to my costing P&L, I load it into the truck called as cost of sales. Basically, what will come? Here? Cost of goods. So we saw there, no? Remember, recall, format of cost sheet. Cost of goods sold plus AOH plus SOH. I will load it here the truck. This single shot, I will take it to my costing P&L. Are you all able to understand? Hence, what I do, AOH absorption, what will I do? It should be taken entry, cost of sales account debit to AOH. Are you all able to understand? Is there any issue here? No. Now what happens here? So if there is any under or over absorption, take it to your costing P&L. There is no multiple treatment here. It is fully treated as a period cost. Is that clear, guys? Right? Similar treatment for SOH. Actuals gets debited. Guys, correct? Absorbed SOH should be taken to SOH account. Any under or over absorption should be taken to your costing P&L account. Is that clear for everyone? Are you all able to understand? So each of the three overheads, we saw three phases. Absorption, actual overheads incurred, absorbed overheads, and under or over absorption treatment. We have seen it. Are you all able to understand? Is there any issue here? No. Now guys, there is one small issue as well. What is it? Now guys, till now we have seen that AOH should be treated as what? Period cost only. Guys, correct? Which means, is it considered for the purpose of stock valuation? No. However, in some cases, some people, they consider AOH as a part of, product cost, right? For example, CA Inter, we take it as period cost, but in CMA Inter, Institute takes a stand, treat it as a product cost. Not very logical, but yes, this is the method they follow. Is that clear? Now, in this chapter, in CA Inter also, I am saying, in this chapter, in some questions they would have mentioned, AOH is treated as a product cost. Now, in that case, what will you do? There is one small difference. What is it? I will tell you. Shall we get started? Now, if you look at the format of cost sheet, how does it look like? Now, direct material consumed plus labor plus direct expense gives you prime cost plus POH gives you gross works cost. Add opening WAP minus closing WAP gives you factory cost. Guys, correct? Now, what they are saying, now guys, here they are asking you to add AOH. Ideally, those 4 addition, 1 deletion will come. No, in this chapter, 4 addition, 1 deletion and all will be a part of POH only. Guys, are you clear with this? Right? 4 addition, 1 deletion is only for the purpose of cost sheet. Here they are not keeping all those things. That they want to present. That's all. Here everything is a part of POH. I told you. Now, what they are saying, they want, in case you are treating AOH as a product cost, they are saying add it here. Are you all able to understand? Right? Now, with this, you will arrive at a cost of production. Guys, correct? To this, add opening FG minus closing FG, you will arrive at cost of sales. Or in other words, if you notice in your WAP area, whatever cost you incur, guys, correct? Now, one portion, that is the cost incurred in respect of units completed and transferred, called as factory cost. The other one is closing WAP. Am I right? Now, what happens? This factory cost, this enters into your FG area. Am I right, guys? So, in FG area, you have factory cost. Now, if at all you are treating administration overheads as your product cost, they are asking you to add it here. Are you all able to understand? So, this will give you the cost of production. Guys, clear with this? To this, add opening FG minus closing FG, you will arrive at what? Cost of goods sold. Are you all able to understand this? Now, why, sir? This is a treatment. They want to do it. And one more thing, the treatment is different. If you notice, production overheads, if you're absorbing, you take it to WAP account. Whereas AOH, if it is being treated as a product cost, it is taken only to FG account. Why? Because they are saying AOH should be considered to value only your FG. If you take it to your WAP account, it is used for valuing WAP as well as FG. Guys, correct? Are you all able to understand? Hence, here there is a small difference in a way of treatment. Are you all able to understand? And now, if you're preparing that income statement, recall two format statement, two format approach. In that case, sales minus COGS gives me gross profit. From here, I will subtract only SOH. Why? AOH is already considered as a product cost. Is that clear, guys? I will arrive at the operating profit. So, if AOH is treated as a product cost, the treatment will be different. AOH absorbed should be taken to your FG ledger. Are you all able to understand? If that is the scenario, in that case, what will you do? AOH account, whatever you incur, actuals are debited. Absorbed AOH, don't take it to cost of sales ledger, take it to FG account. Is that clear, guys? And any under or over absorption, take it to your costing P&L. Are you all able to understand this? This is a very, very important treatment and adjustment. Is that clear, guys? Since this is a marathon, I am quickly brushing up all the concept. Still, we are doing every single entry and concept here. Are you all able to understand this? Right? So now, first one, your POH, actuals here, absorbed is taken to WIP. Under or over absorption, two treatments can be done. If it is normal reasons, distributed between these three guys using supplementary rate. Abnormal reasons, inefficiency, take it to costing P&L. AOH, what is the issue? Now, actuals are there. Now, absorbed, AOH absorbed. Now, if AOH is treated as a period cost, take it to cost of sales. If it is treated as a product cost, take it to FG account. Any under or over absorption, always taken to P&L, costing P&L. SOH, no problem, always same approach. What is that? Debit actuals. On the credit side, you will be having absorbed SOH taken to truck, always cost of sales. It's always a period cost. Balancing figure is going to be your costing P&L. You need to take it. Is that clear, guys? Right? And that's about the treatment here in this area. Are you all able to understand? Is there any issues here? No. This is what I have mentioned here with respect to overheads. If you look at this overheads, production overheads, AOH, SOH, incurred entry, respective overheads account debit to GLA. Clear? Absorption, POH absorbed will be taken to WAP. AOH absorbed will be taken to cost of sales, or if it is a product cost, will be taken to FG ledger. And SOH will be taken to cost of sales. Is that clear? Under or over absorption, these entries we have seen already. Now, doubt busters, look at this, very important. In case of over absorption, the journal entry will be exactly inverse of under absorption. Sometimes AOH may be considered as a product cost for valuing your FG. In that case, under or over absorption, this case will impact the FG account instead of the costing P&L account. Just now we did this. Is that clear, guys? And finally, you should also have some other transaction, that is transfer entries. Remember, in our subject, any movement or flow of cost should be tracked. Am I right, guys? Hello? Yes, guys. Are you all clear with this? So now, what will I do? First, now in my WAP, now RM to WAP, units are getting transferred now. That we saw the entry in RM area itself. What was the entry? WAP account debit to SLC. Now, from WAP area, some goods can be completed and transferred to your FG area. What will be the entry? FG value will increase, WAP value will decrease. FG account debit to WAP. So, this is the journal entry for completed goods. Is that clear? These are transfer entries. Next. Now guys, what happens? Sale can happen. Now, always remember, for sales, there are two entries. One entry is for recognizing the revenue. The other entry is for flow of cost. Why is there flow of cost? Now, when I'm selling, from my FG, the product goes out. Guys, correct? I need to track the value, cost of goods sold. Am I right, guys? Are you all clear with this? Right? And I should also recognize my revenue. Guys, correct? So, for sales, two entries, cost side entry and sales side entry. Now, you look at this. This is very, very important. Let us say the cost of goods sold is 100 rupees and the selling price was fixed at how much? 120. Now first you tell me what happens with respect to this 100 rupees worth of stock is actually moving out of my FG area. Am I right, guys? What is the journal entry here? Now first FG account value will reduce, FG gets credited. Am I right, guys? Right? Now two. Now there is no cost of goods sold account. Truck is waiting outside. Guys, correct? All the expired cost can be loaded onto the truck. Entry will be what? Cost of sales account. Is that clear, guys? Entry will be what? Cost of sales account debit to FG. That is, there is now an expired cost. Guys, correct? That is cost of sales account to FG. Why FG gets credited? Reduction in asset. Are you all able to understand? Is there any issue here? Guys, you guys are able to understand this? Yes. Next. Now, sir, 120 rupees, sir, is the selling price, I realize. What will be the entry? Logically think. Now, the entry will be, 1 second, I will tell you. First, normal financial accounts, what will be the entry? I'm making sales. Entry. Debtors account debit to sales. 120. Am I right? Debtor account debit to sales. And at the end of the year, sales account will be transferred to P&L. Am I right? So sales account debit to costing P&L. Am I right? Now if you knock off sales, one debit and one credit is there. So the net entry will be what? Debtor account debit to costing P&L. Now in our subject, do we have debtor account? No. Hence put it under GLA. Net sale revenue recognition entry will be GLA account debit to costing P&L. Is that clear? Are you all able to understand? This is revenue recognition entry. This is a movement of cost entry. Are you all able to understand? That's what I have mentioned here. So cost of sales of completed goods is going to be cost of sales account debit to FG account. And the sale of completed goods is going to be GLA account debit to costing P&L. Is that clear, guys? Now with this, all your journal entries in your cost accounting, in your non-integrated accounting is over. Now once again, guys, I will give you the big picture. Now, sir, I've passed all the entries, sir. Now, how will my ledger look like? How will my ledger look like? Now, guys, please focus. This is a closure. This is a closure, gives you a full-fledged closure here. Now, I have 3 asset accounts. What are they? SLC, WIP, FG. Then, I have 4 expenses. Wages, POH, AOH, SOH. Then I have abnormal loss. Then I have truck, cost of sales. Then I have costing P&L. Now, finally, if you're closing, these 3 are assets. They will be having a closing balance. Am I right? Debit side will be more. Credit side will be less. Guys, correct. This is a total raw material available. Out of which some I would have consumed. The balance is the closing stock of raw material. Guys, correct. Debit is more than credit. Hence, I balance the credit side. This becomes by balance brought down. So this is ideally debit balance. Am I right, guys? So I have debit balance in my SLC. This is nothing but value of goods unconsumed, raw material unconsumed. And WAP, this is nothing but value of goods incomplete. And FG, value of goods unsold. Are you all able to understand? All the 3 will be what? All the 3 will be what? Closing stocks, basically, guys. Closing stock comprises of 3 components. The 3 components of stock, RM, WAP, FG. Are you all clear with this? Next, wages account. Already it gets knocked off, right? One entry for incurrence and utilization, I take it to the respective ledgers. Your WAP, POH, AOH, SOH, abnormal loss and all. Guys, correct? POH account. Actual, absorbed. Any under or over absorption, I take it to costing P&L. Guys, correct? Similarly, AOH, actual, absorbed. Under or over absorption, costing P&L. SOH, actual, absorbed. Under or over absorption, costing P&L. Guys, correct? Abnormal loss. Now, material abnormal loss. Labor abnormal loss. Abnormal loss in labor is abnormal idle time. Whatever is there, I collect it, take it in a single shot to costing P&L. Guys, correct? Next, cost of sales ledger. What will it have? First, it will have the value of goods sold, cost of goods sold. It will get from FG plus AOH plus SOH gives you cost of sales. Take it fully to costing P&L. Is that clear? Now this ledger also gets closed. All are nominal accounts. Now, first in my costing P&L, I have by GLA. This is nothing but what? Revenue recognition entry. By debtors. Instead of debtors, I put GLA. Am I right, guys? Guys, correct? Now, this is my revenue. What is the cost? Cost of sales. I get all my expired cost. Guys, correct? That's nothing but cost of goods sold plus AOH plus SOH. Guys, correct? Then not just this. In this case, we had under absorption. So, in under absorption of AOH, POH, SOH comes here. If it is an over absorption, it will come on the credit side. Is that clear? Then abnormal loss, whatever was there, that also gets debited. Guys, correct? Now, overall, I have a profit, a revenue minus all the costs. I will get a profit. So, if the credit is more than debit, there is a profit. If the debit is more than credit, there is a loss. Guys, correct? Now, this loss, where will I transfer? Generally, in accounts, what do? Any profits you have, you transfer it to reserves. Entry will be costing P&L account debit to reserves. Now, here, reserve account do I have? No. Take it to GLA. Are you all able to understand? Hence, I will say to GLA this balance. Now, if you notice this GLA account, what happens? All these things, debits and credits, this GLA, what is the meaning of this GLA? It is not a single ledger. It is a summary of all your financial ledgers. Every other ledger except the first 10 ledgers is called as a GLA. Is that clear, guys? And GLA will always have a credit balance. That is, the credit will be more than the debit. That's why you have this on the debit side. It will be two balance brought down. Is that clear, guys? Now, if you want to prepare a trial balance, now you will be having three debits. What are they? SLC, WIP, and FG. Guys, are you clear with this? Right? And this is corresponded with one credit item called as a GLA. Is that clear, guys? Is everyone able to understand? Hence, now what happens? Your trial balance will tally. The total of debit will be equal to the total of credit. Is that clear, guys? And that is all predominantly this chapter says. Is that clear, guys? This is the first segment called as non-integrated accounting. Now, integrated accounting also is over. Sir, how, sir, it is over? Exactly same as a non-integrated accounting system with only one difference. What is that? Now, instead of GLA account, you take it to the respective financial ledger. For example, purchase of raw material entry, SLC account debit to bank or to creditor. Is that clear? So, don't take GLA. Are you all able to understand this? Is there any issue here? Wages paid entry, wages control account debit to bank. Is that clear, guys? So, instead of GLA, if you use a respective financial ledger, that is called as a integrated accounting system. So, the journal entries in integrated accounting systems are same as a non-integrated accounting system, except that instead of general ledger adjustment account, the respective financial accounts are debited or credited. Is that clear, guys? And that's about the first two segments of discussion, which is a non-integrated accounting system and integrated accounting system. So now, shall we move on to the third segment, which is reconciliation of costing profit and financial profit? Yes, so let's get started. Now, guys, let's move on to the third segment, which is reconciliation of your costing profit with your financial profit. Now, guys, this reconciliation holds good only if the company is following non-integrated system. Yes. So, 1 second, let me just take this up. Yes. So, this reconciliation applies only when the company reports two sets of profits. And when will the company reports two sets of profit? Only when the costing records and the financial records are kept separately. That is basically in case of non-integrated accounting system. Now, guys, in that case, the costing profit and the financial profit, they both need to be reconciled, right? We saw that these two will not be the same. They need to be reconciled, right? Now, before we move on to this reconciliation of costing profit and financial profit, there is one very important thing that you need to know. This is with respect to treatment of under or over absorption of overheads. Right, guys? Now, with respect to under or over absorption of overheads, now till now we have seen two methods. Method number one, if this under or over absorption is due to normal price level changes, we have studied this in our overheads chapter, then in that case, what should you do? It has to be apportioned between your cost of sales, then your FG and WIP using something called as supplementary rate and all of that. Guys, correct? Right? So the first method is basically what? Basically, it is treated as a product cost. Guys, correct? The second treatment is what? Now, if it is attributable to any inefficiencies or abnormal reasons, treat it as a period cost. Is that clear, guys? Now, there is also a third method of treatment of under or over absorption, right? So we have done a lot of sums in this method as well during a regular batch and even exam oriented batch, but here for the sake of marathon, now I'm setting you the context right before we get into this concept. Now, what is the third method? Eat 5-star, do nothing, right? Basically what you have to do, don't pass any accounting entries. For example, let us say POH, let us say POH, let us say POH incurred actual is 60,000. Let us say absorbed is 50,000. What is the balance? Under absorption 10,000. What should you do? You don't take it to costing P&L, or you don't apportion it between those three guys using supplementary rate. Just carry it forward by as a by balance carried down. Is that clear? Suppose an over absorption will be 2 balance carried down. Is that clear, guys? That's all. So in this case, what happens? The difference between my under or over absorption will never get accounted. Is that clear, guys? Are you all able to understand? This is another method. Logic for all that I have explained during our regular batch and all. Right now, the logic is not required. This is a method which people follow. So what is the third method? So it's going to be carry forward. Guys, correct? Now, this is the third method of treatment of under or over absorption. Is that clear, guys? Now, if I follow the first two methods, what happens? Actuals I incur. Absorbed overheads is the overheads accounted in costing. Actual will be the overheads accounted in your financial accounts. Absorbed is the overheads accounted in your cost accounts. At the end of the year, I compare the actuals with absorbed. Any difference, I now account it. Guys, correct? That is called as treatment of under or over absorption. Am I right? If I follow the first two methods, the difference is now being accounted. Guys, correct? Hence, if I follow the first two methods, the overheads accounted under financial accounts and under cost accounts will be the same. So because of overheads, there will not be any difference in profits. However, if I follow the third method, what is that? Eat 5-star, do nothing. That is carry forward. In that case, overheads accounted in my financial accounts would have been actual figure. Overheads accounted in costing will be absorbed figure. This under or over absorption never gets accounted at all since it escapes. Hence, this figure is going to be a reconciling item because in my costing, I would have only accounted for 50,000. In financial accounts, I would have accounted for 60,000. This difference, it never enters into my P&L. Hence, this would be a reconciling item if the company is following the third method of treatment of under or over absorption. Are you all able to understand this? Are you all able to understand this? Now, coming back to the main concept, what is this? Reconciliation of costing profit with financial profit. Now, guys, why will the costing profit and financial profit be different? Broadly, it can happen only because of 3 reasons. Reason number 1, in costing, we do not consider non-operating items. When I say item, it can be both income and expense. Do we consider any rental income? Do we consider any FD interest received? No. Similarly, do we consider any kind of interest paid, tax paid, dividend paid? No. So all these non-operating items could be a credit or a debit item are considered only in your financial accounts, not in your cost accounts. Hence, this is one reconciling item because of which my costing profit and financial profit could be different. Am I right, guys? Hello, guys, please respond. Yes. Now, the second reason is absorption of overheads. Please be very, very careful. This absorption of overheads can be a reconciling item only when the company follows third method, that is carrying forward. Is that clear, guys? Are you all able to understand this reason we just saw? Is that clear, guys? And finally, stock valuation. Sir, how can stock valuation be a reconciling item? Your financial accounts, the stock figure, we only give them. Costing only provides for the stock figure in financial accounts. Guys, correct? But remember, in your financial accounts, AS2, it says your closing stock should be valued at cost or NRV, whichever is lower. Now, the cost figure we give them, Suppose if there is an NRV value and the NRV is lower than cost, then in financial accounts, stock will be valued at NRV. Guys, correct? Hence, the stock valued under financial accounts and cost accounts will be different. Am I right, guys? Are you all able to understand? In that case, stock can be a reconciling item. Are you all able to understand this? Right? So, broadly, there could only be three reasons for reconciliations. What are they? Reason number one, consideration of non-operating items. Reason number two, absorption of overheads if carry forward, if you under or over absorption is carried forward. And third, stock valuation. Now, with this, let us directly go into reconciliation statements. Now, guys, you guys have done this bank BRS, bank reconciliation statement, right? So, you compare, you start with the bank book, arrive at the passbook, or you take the passbook, do addition, deletion, arrive at the bank book, guys. Correct? Correct. So now, in this case, what we are going to do, you can either start with costing profit, add less, arrive at financial profit, or you can start with financial profit, add less, arrive at costing profit. Whichever way you want, you can do. Now, with this background, shall we go and do the next sum here? Question number 7. This is an RTP question. So, I just want to take this one question and explain the concept of reconciliation statement. Shall we get started, guys? Yes. A manufacturing company disclosed a net loss of rupees 3,47,000 as per their cost accounts for the year ended March 31st, 2024. The financial accounts, however, disclosed a net loss of 5,10,000. Guys, correct? Now, the following information was revealed as a result of scrutiny of the figures of both the sets of accounts. They have given so many line items of reconciliation. Prepare a memorandum reconciliation account. Forget reconciliation account. Now, let's prepare reconciliation statement. Shall we, guys? Shall we, guys? Just follow what I say. That's more than enough. Now, guys, let's do this sum under the statement approach. Okay? Shall we get started? Hello? Shall we get started? Yes. Now, what do we need to do? We need to start with either costing profit and add less, arrive at financial profit, or you can start with financial profit, add less, arrive at costing profit. Both are allowed. Now, in this sum, let's start with costing profit. Okay, guys? Yes. Now, what is my costing profit? What is my costing profit? 3,47,000. Yes. Now, I am just taking it here. 1 second. Yes. My costing profit is going to be 3,47,000. Okay. We'll do something, guys, since we have already done it before. 1 second. Now, we will start with financial profit. Okay. Shall we do that? We'll start with financial profit. How much is my financial profit? Everyone, 5,10,000. So, my financial profit is how much? 5,10,000. Right? Now, to this, what do we need to do? Certain line items need to be added. Certain line items need to be subtracted. Now here, if you look at this net loss as per financial accounts, this amount is there. Certain items need to be added. Certain items need to be subtracted. If you do the net adjustment, you will arrive at the profit as per cost accounts. Guys, correct? Now, line by line, let us read and do this. First line item, what have they mentioned? Factory overheads under absorbed 40,000. Now, wait. Now, how do you do it? I will tell you a hack. Now, guys, you can have this as, maybe in your rough sheet, you can do this. Working note need not be done in exam. Now, what you need to do is put the transaction here. What is the starting point? We start from financial profit. First column, you put financial profit. Second column, costing profit. Starting point, destination. And the next column is TBD. TBD means to be done. What needs to be done? What is the first line item, guys? Guys, everyone. Factory overheads under absorbed. Under absorption of factory overheads. Now, logically think. Under absorption means what? Absorbed is less. Actual is more. Now, actual gets debited in your financial accounts. Actual is more means in financial accounts there is a more debit. When the debit is more, financial profit is less. Am I right, guys? Relatively, costing profit is more. This is my starting point. I'm starting from financial profit. I need to reach a higher point, which is costing profit. Now, in this case, you will have to add. Are you all able to understand? Guys, is this clear? Very simple, isn't it? Yes. Next line item. So now this is add. So what we do, under add we do under absorption of factory overheads 40,000. Is that clear? Very, very simple. That's all. Next one. What is the next line item? Administration overheads over absorbed. Over absorbed means what? Absorbed is more, actual is less. Actual is less means in my financial accounts I would have debited less amount, hence my financial profit will be more. Are you all able to understand? Financial profit will be what? Financial profit will be more. Costing profit will be less. Why costing profit is less? Absorbed is more. More debit, which means I would have debited more amount of the costing P&L, which means profit reported is less. From a higher point, you now need to reach a lower point. Subtract this amount. Is that clear? Some students they do, sir, over absorption mean add, either under absorption means subtract. Guys, no. It depends on the starting point and the ending point. Logically, you think. Is that clear, guys? Right? In this case, you will subtract this figure over absorption of AOH. Are you all able to understand? Is that clear? Next line item. What is it? Depreciation charged in financial accounts, depreciation charged in cost accounts. In financial accounts, 3,25,000 was debited. In cost accounts, 2,75,000 was debited. Now subtract. The difference between the two is how much? Guys, everybody, 50,000. Now you tell me, financial accounts charged more depreciation. Cost accounts charged less depreciation. The difference is how much? 50,000. Financial accounts charged 50,000 rupees more. More debit in financial accounts means lesser profit. Financial profit is less. I need to reach costing profit which is more. From a lower point reach a higher point. Add. Are you all able to understand? Difference in depreciation. Financial profit less. Costing profit more. Low to high. Add. Is that clear, guys? So we can just mark it here. Difference in depreciation should now be added. Are you all able to understand? Very simple, isn't it? Logically think and do. That's about it. And guys, in the marathon itself, I'm doing this sum. Now, these kind of questions you can expect in an exam. Next one. Interest on investments not included in cost accounts 96. Tell me, what should you do? Financial profit will be lesser. Interest on investments mean I receive. So, credit item there in financial accounts, hence financial profit is more, costing profit no credits sir, hence it is less. Higher point to lower point, subtract. Simple. Look at this. Interest received on investment, financial profit is more, costing profit is less. Higher to low, subtract. So this comes under a subtraction item. Are you clear with this? Next line item. Income tax provided. Now in our subject, do we do we create an expense for income tax? No, but income tax is debited in your financial accounts, which means more debit in financial accounts refers to lesser profit. So financial profit less, costing profit is more, lower point to higher point, add. So add this amount. Are you clear with this? Income tax comes under add. Is that clear? Next one. Interest on loan funds in financial accounts. Do we in costing do we consider interest? No, EBIT only we report, operating profit, right? The finance cost not considered. So financial profit will less. Exactly. Why? Because amount debited, guys, correct, in your P&L. So lower profit. Costing, this amount does not get debited. So it is a higher profit. Low to high, add. So what do you have here? Interest on loan comes under add. Is that clear, guys? Next one. Transfer fee. What do you mean by that? We don't know. They have given it is credit in financial books. Means what? Some non-operating income. Your financial profit will be more. Costing profit is less. High to low, subtract. That's about it. So look at this. Transfer fee comes under less. Next one. Stores adjustment. What is that? We do not know. Credit in financial books. So financial profit is more. Costing profit is less. High to low, subtract. That's about it. Clear? Next one. Dividend received. Once again, non-operating income. So financial profit, more credit. Costing profit less. High to low, subtract. 32,000. Here comes under less. Is that clear, guys? Now what do? Add all the sums. Get 3,89,000. Add all the subtractions. You get 2,26,000. So existing financial accounts loss is negative 5,10,000. From this, add this figure, subtract this figure. Now the net amount you will get is exactly a loss of 3,47,000. This is as per cost accounts. If you want, you can go and check. It is exactly matching with the 3,47,000. Is that clear, guys? You arrive at the figure and compare it with this. Is that clear for everyone? Is that clear for everyone? Guys, are you all able to understand? Any issues, any problem here? No. No. Once again, we did it under statement format, no? Now, suppose they are asked you to prepare a memorandum reconciliation account. Don't worry, nothing great. What you need to do, simple. You put it in a statement format, debit, credit. Guys, correct? Now, you can start with anything, same thing. Here we started with financial profits. There, in the question, they have started with the costing profit. No problem. Guys, correct? Now, let us say the same question, we have to do it under statement approach. Simple. First, you're starting with the financial profit. No. Profit or loss? It is a loss. Had it been a profit, this is as good as a nominal account. It's like a P&L account only. Had it been a profit, you would have credited it. Since it is a loss, you will start here. Guys, correct? All additions will be credited. All deletions will be subtracted. And whatever is the balancing figure, it will be the profit or loss as per the other one. Are you all able to understand, guys? In this question, they started with costing profit, arrived at a financial profit. Hence, our addition will be deletion for them. Ulta no completely. They would have started with costing and they would have reached destination is what? Financial profit. Simple. If you start from costing and reach financial profit, now instead of low to high, it would have been starting point to ending point, high to low. Guys, correct? Whatever is addition becomes a subtraction there. Whatever subtraction becomes addition there. Guys, ultimately the answer will change. Answer will be the same. Are you all able to understand? Guys, starting and ending point can be anything. Simple. The same question, if they are asking you to prepare it under the statement approach, what will you do? Since it is a loss as per financial accounts, you will start it from here. All additions, put it on the credit side. All deletions, you put it on the debit side. The net loss will be here. Are you all able to understand? As per cost accounts. Are you all able to understand? Why loss? That is the reason why you have debit is more than credit. That's the reason you have here. Are you all able to understand? Is there any problem here? Are you guys able to understand? So statement approach means instead of plus or minus, it is credit and debit. Is that clear, guys? And that's about this entire segment of reconciliation statement. Please go and update your library of adjustments. Write down reconciliation of costing profit and financial profit. That's all. Reconciliation of costing profit and financial profit. Right, guys? Fine. So with this, literally the revision of this entire chapter, cost accounting system or cost bookkeeping, is completely over. We have seen all the 3 segments of discussion in this chapter. Segment number 1, your non-integrated accounting system. Segment number 2, your integrated accounting system, which is nothing but non-integrated accounting system. Instead of GLA, put it in the respective financial ledger. And number 3, we saw what? Reconciliation of costing profit and financial profit. This is applicable only when the company follows non-integrated system. And that's about this entire chapter, guys. Fine. So with this particular chapter is over. Let's move on to the next one. So now let's get started with the revision of yet another important chapter called material cost. Now, guys, generally from this chapter, around 5 to 10 marks gets tested in your exam. And once again, this particular chapter is a common chapter for CA and CMA inter students. Now, guys, this particular chapter is very important, not only from an examination perspective, but also from a real life perspective. Hence, now quickly we will revise this entire chapter, right, in a proper manner. Now, guys, if you see in this chapter, you have multiple concepts, right? Components of material cost, economic order quantity, EOQ with price discount, stock levels, issues valuation, stock out cost, ABC analysis, inventory turnover ratio, treatment of losses. These are all the list of concepts covered in this particular chapter material, right? Now, our subject as a whole has 3 objectives. One is stock valuation profit computation. Then you have decision making, and then you have control. The reason why we study this subject, cost and management accounting, is because it goes on to achieve 3 objectives. Now, this chapter fits into which objective? Now, there are some concepts in this chapter which go on to achieve the first objective. There are some concepts which go on to achieve the second objective, and there are some concepts which go on to achieve the third objective. For example, the components of material cost, treatment of losses, issues valuation, all these things come under the first category, that is stock valuation profit computation. Whereas for the purpose of decision making, you can take EOQ. That's for the purpose of decision making. Even stock levels, all these things come under the category of control. Even EOQ, you can say, it achieves both your decision making and control perspective. clear with this, guys. So which means this chapter has so many concepts. Some of the concepts go on to achieve objective A, some of the concepts go on to achieve objective B, and some other concepts go on to achieve objective number C. Is that clear, guys? Yes. Now with this context, now let's go and do the first learning objective, which is components of material cost. Now when I say material cost, right, in my cost sheet, this is the first line item. Am I right, guys? What forms part of material cost? Simple. Now whatever cost you incur to bring your raw material from the supplier's location to your location include all the costs. Is that clear? This includes the amount you pay to the supplier, purchase cost. This includes freight inwards, transportation cost. All these things you can add it up. Is that clear, guys? Now treatment of some special items. If they are giving a trade discount, you can subtract it. Quantity discount, subtract it. Suppose cash discount is given, no, this should be ignored. Why? We saw this earlier in cost sheet. Cash discount is in the nature of finance cost, should be ignored. Any subsidies or grants or incentives, so any benefit that I get should go on to reduce my material cost. Any duties and taxes, right? Road tax, toll tax and all, yes, these are the costs I incur to bring my material to my present location. Yes, add it up. GST should be added only if ITC is not allowed. If GST should be added only if ITC is not allowed. If ITC is allowed, then it is ideally not a cost. Hence, it should be excluded. Is that clear, guys? Right? Next, customs duty. Yes, customs duty should be added because there is no credit on customs duty. Any kind of penalty and charges. One popular adjustment is demurrage. What do you mean by demurrage? Demurrage is basically a penalty which the transporter will charge his customer. Let us say I am arranging a transport facility. For some reason, documents are missing. So that GST officer, what he did, he stopped my vehicle for 3 days and then he left it. Now what happens? For this transporter, there is a huge loss, right? Now the transporter will ask me to pay something called as a demurrage. Is that clear? So if the government charges, it is called as fines, penalties and all. Other people, if they charge, it's called as a demurrage. Is that clear? Now, any kind of abnormal expenditure like demurrage, detention charges, fines, penalties and all, they are abnormal in nature, should not form part of your material cost. Take it separately to costing P&L. Is that clear, guys? Yes. Any other expenditure? Insurance, freight insurance, right? So for the freight, during the freight insurance, yes, added to the cost. Commission brokerage paid for identifying the supplier, added to the cost. Freight inwards, added to the cost. Cost of containers, what will you do? Now, if they are non-returnable nature, the supplier says, look, you need to pay for the container, that's all non-returnable, then in that case, container cost, I should add it. It's a cost I incur. Suppose they are returnable containers, right? In that case, he's saying maybe you pay a deposit. This is like your water can. You pay a deposit. Once you return back the containers, I will refund the amount to you. This is not a cost only. Just an advance you pay and you get back. In that case, it should not form part of cost. Let us say he took an advance of 100 rupees, but when I returned back the containers, he repaid only 80. In this case, the net amount of 20 should be treated as a container cost, should be added to your raw material cost. Is that clear, guys? These are all the different types of adjustments you can see in this area. Is that clear, guys? So technically, what forms part of material cost? All the costs which are incurred to bring my raw material from my supplier's location to my own factory, to my present location. Is that clear, guys? Remember, most importantly, any kind of abnormality should be excluded. GST, if ITC is allowed, should be excluded. And one very important thing, cash discount should be excluded. Are you all able to understand? These are all the catches here. That's why I have kept it here in our concept decoder book. Is that clear, guys? Right? Now, let's move on to the next concept called as economic order quantity. Economic order quantity. Now, what do you mean by this concept of economic order quantity? Now, guys, let us say in a year, I need to purchase a total of 1,20,000 kgs of raw material. I have two options. What is 1,20,000? The annual consumption requirement of raw material. Let us say I have two options. Option number one, place a single order, right? Buy the entire 1,20,000 kgs. Or option number two, no sir, not a single order. 12 times I will order, which means per order I will order only for 10,000 kgs. I will buy 10,000 kgs. Once it gets over, another 10,000 kgs. Like that, 12 times I will order. Now, in both the cases, 1 into 1,20,000 is 1,20,000. 12 into 10,000, this is also 1,20,000. In this case, annual consumption will not change, but the manner in which I buy it, that alone changes. Is that clear, guys? Now, between the two alternatives, which one is better? Now, you can't come to a conclusion directly because each of these alternatives will have one advantage and one disadvantage. Sir, what are you talking about? How can there be one advantage, one disadvantage? Now, for the purpose of this segment, economic order quantity. Now, overall raw material cost is bifurcated into three. One is your purchase cost. Then you have something called as ordering cost, and then you have something called as carrying cost. What do you mean by ordering cost? Ordering cost means the cost that you incur whenever you place an order, which means the cost driver here, we have seen in activity based costing, the cost driver here is number of orders. It is not number of units. Every time I place an order, I will incur this cost. Sir, example, sir. Now, large companies, before they place an order, bulk orders they will place, right? They will first make a newspaper advertisements. Now, they will invite suppliers to give quotations. Now, once for that newspaper advertisement is required, cost you incur, no? Number one. Number two, upon receiving the quotes, they will have a team and they will have to select the best supplier, the vendor. Now, once the supplier is selected, they will place an order. It gets transported to my location. Guys, so transportation cost is every time I place an order only I incur, guys, correct? And once I receive it, I need to break it will be in bulk, right? I need to break the bulk and properly I should store it in my stores area. Is that clear, guys? Now, all these process involves costs and these costs are linked to the number of orders. Every time I place an order, only then I will incur these costs. Is that clear, guys? Now, on the other hand, I have something called as carrying cost. What do you mean by carrying cost? Carrying cost also refers to storage cost. Right? Now, basically your warehouse rent, warehouse keeper salary, the insurance on the stock which you are holding with you. Are you all able to understand? Right? Opportunity cost, it also comes here. Right? Opportunity cost means what? Sir, when you and I go to a godown, let's say there are 50,000 units of a particular raw material. We will say there are 50,000 units of raw material. But when a supplier, when the businessman comes and sees, he'll say, sir, I have 5 lakh rupees worth of stock, sir. Because every unit costs me 10 rupees, let us say. So he will say, I have 5 lakh rupees worth of stock. Now I have blocked 5 lakh rupees of my funds in this stock. Now, had I not blocked it here, maybe I would have put it in an FD and I would have generated some interest. Because I have purchased this particular stock right now, I'm losing out on that interest, guys. Correct? That is an opportunity cost of carrying or holding this inventory. Is that clear, guys? So, always remember, for the purpose of EOQ discussion, what happens? Stock is classified into three. The purchase cost, which you pay to the supplier, ordering cost, and carrying cost. Now, guys, I gave you two scenarios here, option 1, option 2. In both the scenarios, I end up purchasing the same 1,20,000 kgs. Guys, correct? So, because of this decision, that is what decision? Order quantity. Per order, should I place an order for 1,20,000 or should I place an order for 10,000 kgs 10 times, 12 times? Are you clear with this? Now, because of this order quantity decision, does my total consumption change? No. When my total consumption is not changing, right, obviously my purchase cost will also not change. Am I right, guys? Because whether you place an order for 1,20,000 kgs as a whole in a single order or 10,000 kgs per order, he does not give you any discount. Guys, clear with this? Hence, in this case, your purchase cost is not affected by your order quantity decision. Am I right, guys? So, now what gets impacted is only your ordering cost and carrying cost. How, sir? Now, if I increase the order quantity, you look at this. In this case, per order, I increase the order quantity. Now, what happens? The number of orders, the number of times I need to order is going to be less, which means the ordering cost will reduce. Guys, correct? But on the quantity, what will happen? Since I have 1,20,000 kgs with me, I'm purchasing. Now, the quantity of stock that I hold, the average inventory size will be more. Guys, correct? Hence, because of this, what will happen? Your carrying cost, that is the cost of holding your inventory, will increase. Is that clear? So here the advantage is by way of low ordering cost, but disadvantage is by way of high carrying cost. Suppose if I reduce my order quantity, what will happen? The number of orders will increase. Correct? Now because of this, the total ordering cost will go up. Guys, correct? But what happens, sir, at a time I used to hold only maximum of 10,000 kgs. So average inventory is coming down. Because of this, my carrying cost will come down as a whole. Guys, are you all able to understand? Hence, now if I have a more order quantity, example, scenario 1, advantage is by way of lower ordering costs. Whereas if I reduce my order quantity, the advantage is by way of a lower carrying cost. Now, which will give you, which alternative is better? Sorry, which alternative is going to be better for you? Now, you can't come to a conclusion directly. This is where they are saying the economic order quantity means what? The best order quantity is going to be root of 2 into A into O divided by C, where A stands for annual consumption, O stands for ordering cost per order, and C stands for carrying cost per unit per annum. Remember, carrying cost is driven by two things, per unit per annum. Is that clear? Per unit. Basically, this talks about your quantity, and per annum, this talks about your duration. Whenever I am saying, sir, the carrying cost is going to be 3 rupees, I will say, sir, it costs me 3 rupees to hold 1 unit for 1 year. Is that clear? So this cost is driven by two things. One is your quantity, the other one is your duration. That's why it has to be mentioned with two cost objects, per unit per annum. Is that clear, everyone? Guys, are you all able to understand this? So now, this is what the formula says. Now, sir, how does this formula arise? Simple. They use the law of economics here. Let us say on the x-axis I have rupees, and on the x-axis I have order quantity, and on the y-axis I have rupees. Now, guys, if I keep on increasing my order quantity, what happens? The number of orders will fall down, guys, correct? And my ordering cost will be less, guys, correct? So the ordering cost curve will look like this. As you increase the order quantity, the ordering cost will reduce, guys, correct? Whereas, if I keep on increasing my order quantity, average inventory will increase, hence carrying cost will also increase. Guys, correct? Now, by using law of economics, we say that the best optimum quantity, the economic order quantity, will be at a point when your ordering cost is equal to your carrying cost. Is that clear? Why? This is what you would have studied in your economics also. Your optimum production level is at a point when marginal cost is equal to marginal revenue. Guys have studied that? Yes, similar, the same concept here they are using. At this point, which is the best economic order quantity, it happens at a point when your ordering cost is equal to your carrying cost. Is that clear, guys? Right? Now, at this point only, your overall cost will be kept at minimum. Right? If you deviate from economic order quantity, your overall cost will definitely be more than what you get at the EOQ level. Is that clear, guys? No. So, which means at the EOQ level, ordering cost should be equal to carrying cost. Am I right, guys? Now, ordering cost, how much is it? Can I say it is number of orders into O? What does O stand for? Ordering cost per order. Carrying cost is nothing but average inventory into carrying cost per unit per annum. Guys, average inventory means what? The inventory that I hold on an average at any given point of time. Is that clear? Now, number of orders, I can rewrite it by a formula A divided by OQ. Sir, how, sir? Now, for example, number of orders. In the first case, now, how many orders do I place? Guys, 1. How did you get this? In a year, I have to purchase 1,20,000, and in this per order, I'm purchasing 1,20,000. Divide that, you get 1. Whereas in the second scenario, in a year I need to purchase 1,20,000, but every time I place an order, I place an order for 10,000 kgs. So 1,20,000 divided by 10,000, you get 12 orders. Guys, correct? Are you all able to understand? Which means the number of orders is nothing but A divided by OQ. Am I right, guys? Into O. So if you do this, you get the total ordering cost. Am I right, guys? This should be equal to your carrying cost. What is carrying cost? Average inventory into C. So average inventory, how can you find out? This is half of order quantity. Sir, how did this formula arise? I will give you the logic here. Let us say my order quantity is 10,000 kgs. Now, what will I do? I will purchase 10,000 kgs. Now, I will keep on consuming it. Now, the moment it hits 0, once again I will purchase another 10,000 kgs, consume it. And once it is 0, once again I will purchase another 10,000 kgs and I'll keep on be consuming it. Am I right, guys? Or in other words, at any given point of time, my maximum stock I hold is how much? 10,000. Minimum stock I hold is how much? 0. The average stock I hold is how much? 10,000 plus 0 divided by 2, which is going to be 5,000. Or in other words, it is 1 by 2 of order quantity. Guys, are you all able to understand every single logic I'm explaining in the marathon itself? Right? So, half of order quantity into C is going to be your total carrying cost. Is that clear, guys? So now, if you equate this to A by OQ into O is equal to 1 by 2 into OQ into C. If you do that, what happens? OQ, you can take it to this side, becomes OQ square. Guys, correct? And this is equal to take this to the numerator, 2AO divided by C. Is that clear, guys? So OQ square is equal to 2AO by C, or OQ is equal to, so to the power 2, if it goes to the other side, it becomes to the power 1 by 2. Guys, correct? Or in other words, so it is going to be OQ is equal to root of 2AO by C. Is that clear, guys? Right? And this is the order quantity where your total cost is the least minimum. Hence, I call it as a EOQ, economic order quantity. Is that clear, guys? This is the derivation for EOQ. Should you mug this up, guys? No. Very, very simple and straightforward. Is that clear? So now, what is the formula for EOQ? Root of 2AO by C, where A stands for annual consumption requirement, O stands for ordering cost per order, and C stands for carrying cost per unit per annum. Is that clear, guys? Right. And that's about this particular concept of EOQ. Now, shall we just go and do one sum here? So please take question number 3. Please take question number 3. Yes, please take question number 3. Shall we begin? Yes. Compute the EOQ and the total variable cost for the following. What have they mentioned? The annual demand is going to be 5,000 units. The per unit cost is going to be 20. Then ordering cost is 16 rupees per order. Then storage rate is 2%. Interest rate 12%. Obsolescence rate 6%. Now, add these three. How much you get? 2 plus 12 plus 16. 20%. Guys, this 20% represents your carrying cost. Guys, correct? Right? That is storage cost is 2%. Interest opportunity cost is 12%. Obsolescence rate. Obsolescence means the chances of it getting destroyed or not destroyed, spoiled. Is that clear? 6%. Add up all these things. This is the total carrying cost, but it is expressed as a percentage, sir. It is 20% on what? The 20% on the value of material that you hold. So what is the value of material? Guys, it's going to be 20 rupees. Is that clear? So 20% on 20, how much is that? 4 rupees. 4 rupees per unit per annum is going to be my carrying cost. Is this clear, guys? Is this clear? Now, sir, why are we applying this carrying cost as a percentage on value? Obviously, guys, because your carrying cost is dependent on the value of your product. For example, I am a diamond manufacturer. In that case, I need to have a very good and a proper sophisticated system of storage. Guys, correct? Right? I will be having, different ducts and all, and I will be having, so many lockers and all these things, and security and other things I will be having. Suppose I am a chappal manufacturer. Now, in this case, I need not actually have so much sophisticated security system and all. One small garage is enough for me. I can store it. Put one shed and a lock also. One small rod I can keep and come. No one is going to take it. Guys, correct? Are you all able to understand? Right? So no one is going to take it. If at all someone wants to steal it, they will steal only outside temples. They will not steal inside this garage. Guys, correct? No. Correct? Okay. So hence, look at this. So depending on the value of the material, your carrying cost also varies. Is that clear, guys? Hence, this 20% should be applied on what? The value of the raw material, which is 20 rupees. So it's going to be 4 rupees. What is the ordering cost, guys? Hello? What is the ordering cost? 16 rupees per order. And the annual consumption requirement is how much? 5,000 rupees. Simple. Determine the total cost that would result for the items if a new price of 12.8 is used. So first, you arrive at this 20%. 20% on 20 is going to be 4. So root of 2AO by C. A is 5,000. O is 16, C is going to be 4. Am I right? So root of 2 into 5,000 into 16 divided by 4. So it's root of 40,000. So you get 200 units. What is the meaning of this? So overall in a year, I need to purchase 5,000 units, but purchase it in lots of 200 units. Is that clear, guys? That is the meaning of this. Are you all able to understand? Is there any issue here? No. Now, if I purchase in lots of 200 units, what's going to be my total cost, guys? First, in a year, I'll purchase 5,000 units at the rate of 20. The cost is 1 lakh. Correct? Then ordering cost. How much will that be? Number of orders. 5,000 divided by 200. How many orders are there in a year? 25 orders are there in a year. Every time I place an order, it costs me how much? 16 rupees. 25 into 16. So 400 rupees is going to be the total ordering cost, guys. And how much is going to be my carrying cost? Average inventory, that is 1 by 2 into 200. Guys, correct? Into carrying cost per unit per annum, which is 4 rupees. Am I right, guys? Right? So look at this. It's going to be how much? So 1 by 2 into 200 into 4. So this is going to be 4 into 100. It's going to be 400 rupees. Is that clear, guys? So overall the cost is 1 lakh plus 400 plus 400. So 1 lakh and 800 rupees. And remember, at the EOQ level, ordering cost is equal to carrying cost. It is matching. Is that clear, guys? Right? Are you all able to understand? So we have computed the EOQ. We have also computed the total cost at the EOQ level. Is this clear for everyone? Guys, correct? Fine. Next. Now, suppose they are changing the price. Sir, price is not, currently it is 20. Price is not 20, sir. It is only 12.8 rupees. In this case, sir, how will you compute EOQ? Simple. A will continue to be 5,000. O, ordering cost per order is 16. C will change now. C will be 20% on the value, 12.8. How much is that? 2.56 rupees. It becomes 2.56 rupees. So root of 2 into A, 5,000 into O, 16 divided by C, 2.56. How much you get? 2 into 5,000 into 16 by 2.56. Yes, 62,500. Square root of that, you get 250 units. So if the price is reduced to 12.8, now what will you do? Now it's better if you purchase it in lots of 250 units. The cost at that level, 5,000 into 12.8 gives you 64,000. Ordering cost will be number of orders, 5,000 divided by 250. So 20 orders you will be placing in a year at the rate of 16, which is going to be 320. And average inventory is half of order quantity, 250, into carrying cost per unit per annum, which is 2.56. So how much will you get? You will get 320 again. So the total cost in this case is going to be how much? 64,640. Is this clear, guys? As simple as that. Is that clear? It's as good as doing two different sums, but this is all it is, right? In our regular and exam oriented batch, we actually work it out in detail, right? In a marathon, I'm doing it as a discussion, right, guys? Fine, clear with this? Fine. Can we just go and update our library of adjustments? Write down calculation of EOQ and total cost computation. Calculation of EOQ and total cost computation, right, guys? Fine. So that's about the second segment of discussion, which is EOQ. Now let's move on the next important segment of discussion, called as stock levels. Now guys, in this concept, stock levels, now there are 5 different stock levels. One is called as reorder level. Then we have something called as minimum stock level, then maximum stock level, average stock level, and there's something called as danger level. So these are the 5 different stock levels that we have got. Now one by one we will see. Reorder level, that is the first thing we are going to see. The formula is maximum consumption per period into maximum lead time. Now before we get here, first we need to understand some terminologies. Now there is something called as lead time. It is also called as a reorder period. What is the meaning of this lead time or reorder period? Let us say today you place an order for a product on Amazon, okay, but you receive it only after 3 days. So the delivery happens only after 3 days, guys, correct? Now the time gap between the date of placing an order and the date of receipt of delivery is called as a lead time. It's also known as reorder period. Is that clear, guys? Right. Now, let us say I'm running a company, right? And I'm having some raw materials. Let's say 1000 kgs of raw materials are there. I keep on consuming it. Now, what happens? Suddenly, I notice that the stock balance is 0, right? Now, I take the phone call and call this guy, call this supplier to supply me raw material. Now, he will tell me, sir, I will supply it. It will take 3 days. Now, what is my stock balance? 0. Now, I have already reached 0. Now, if I place an order for the next 3 days, what I will have to stop my production, guys, correct? Now, you tell me, any logical and a prudent company, will they wait for the stock balance to hit 0 to place the order, or they will be noticing the stock level before it reaches 0 itself? They will pick the phone and place an order. What will they do? Before even it hits 0, they will take the phone call and place an order. Am I right, guys? Right. Now, in that case, when will they place an order? That is, at what point of stock level should they place an order? That is the question, guys, correct? So, when will they place an order is called as reorder level. For how many quantities should they place an order? That is called as EOQ, right? The question is not how many quantities you should purchase at a time. The question is, when should you place an order? That is, when should the person pick the phone call and place an order? Logically, you tell me, the company knows every day exactly they will consume 100 kgs of raw material, and they know exactly this supplier will also take 3 days to supply this raw material, which means 100 into 3. How much is it? 300 kgs. Now, the moment the stock balance touches 300 kgs, now this guy will pick the phone call and place an order, right? Now, what will happen? This guy, as expected, will say, I will take 3 days, correct? Now, what happens? In each of these 3 days, I will be consuming 100. Exactly when my stock balance is 0, fresh stock will come in. So, I need not stop my production because there is no stock, guys, correct? So, in this case, so when will you place an order? The reorder level will be what? Consumption per day into lead time, guys, correct? That is ideally your reorder level. Am I right, guys? But you are absolutely right. This is the formula we need to use when we are certain about the consumption. We are also certain about the lead time. Now, in reality, every day exactly will I consume 100 kgs? No. And in reality, every single time I place an order, exactly will deliver in 3 days? Not necessary. Now, that is why I'm giving you a range. Let us say lead time. Minimum lead time is 4 days. Maximum lead time is 6 days. Means what? Even if you want, before 4 days, you will never get the stock. And I always know this supplier, he will definitely take a minimum of 4 days, but he will not take beyond the 6 days also. Max the time he takes is only 6 days. Is that clear, guys? So the minimum lead time is what? 4 days. Maximum lead time is 6 days. Or average lead time will be 4 plus 6, 10 divided by 2, 5 days. Am I right, guys? So minimum lead time 4, maximum lead time 6, average lead time is 5. Is that clear, guys? Yes. Suppose, how about consumption? Sir, minimum consumption every single day, 4 units of raw material will be consumed, right? Below 4, it will never go. Maximum consumption is going to be 6. Beyond 6 also it will not go. So I've given a range. So minimum consumption is 4 units per day. Maximum consumption is 6 units per day. Average consumption is 4 plus 6 by 2. 10 by 2 is 5 units per day. Is that clear? Now, reorder level is what? Consumption per day into lead time. Now I have 3 figures in each of the category. Sir, consumption I have minimum, average, maximum. Lead time also I have minimum, average, maximum. So now, sir, what is the figure I will have to take? Is that clear, guys? Now, this is where we are going to see the formula. The first thing that we are going to see in stock levels is a reorder level. Is that clear, guys? Now, guys, for the purpose of this example, for the purpose of this concept, we will take an example of our mothers, right? Now in your kitchen, your mom will have a big drum to store rice, correct? Now, now she has to decide when should she place an order. Again, I'm telling you, this is not for how much quantity. How much quantity is EOQ. At what point of time should she pick the phone call and place the order? Now, you tell me, will your mom ever let you sleep in a hungry stomach? No, she will never do that. Now, she will always, provide for extreme case scenario only. She will always provide for extreme conservatism, prudence, guys, correct? Now, she will assume that every day the family consumes a maximum consumption. Let's say 6 kgs of rice, example, right? Every day the family will consume 6 units. And this guy, that is the supplier also, let us say he will take the maximum period of time. Guys, clear with this? So, what is the maximum consumption? 6 units. What is the maximum lead time? 6 days. 6 units into 6 days. How much is it? 36 units. The moment stock touches 36 units balance, your mom will pick the phone call and she will place an order for the fresh stock. Is that clear, guys? Are you all able to understand? And this decision is taken based on extreme prudence. She will assume the family will also consume the maximum every day, and she will assume the supplier also takes his maximum lead time. Is that clear, guys? Are you all able to understand? If at all he comes earlier, it's very good. I will be definitely having some balance. It will never run out of stock. Is that clear, guys? So that is the formula for reorder level. What is the formula, guys? It's going to be maximum consumption into maximum lead time. That's about it. Shall we move on to the next formula? Yes. Now, what is the next one? Minimum level. What is the formula for minimum level? Reorder level minus average consumption into average lead time. Sir, what is it, sir? Logic. Simple. Now, reorder level 36 units. This was when she picked the phone call. Am I right? But she chose 36 units as a matter of extreme prudence, conservatism. But during this lead time, normally, what would have been consumed? Generally, I know average family consumes 5 units, and average lead time, this guy also generally takes 5 days. So 5 into 5, 25 units would have only been consumed during this lead time. So I place an order when I had a balance of 36 units minus during this lead time I would have consumed 25 units. By the time I complete this 25 units, fresh stock will come in. Guys, correct? Which means the minimum possible stock at any given point of time will be what? 36 minus 25, 11 units. Now, if you see at any given point of time, even in the worst of the worst scenario, minimum she will have 11 units or 11 kgs of rice. It will never be below that. Is that clear, guys? That is the meaning of a minimum stock, right? So it's going to be reorder level minus what happens generally, that is normal average consumption into average lead time. Is that clear, everyone? Yes, this is the formula. See how simple and logical it is. You need not mug up anything. Next, maximum level means what? Now, even in the best possible scenario, what is the maximum level of stock she will hold? Beyond this, she will not hold. Are you all able to understand? Now, what is the formula for that? Reorder level minus minimum consumption into minimum lead time plus reorder quantity. Reorder quantity is nothing but ideally it should be equal to your economic order quantity. Now, sir, what is this formula? I will tell you. Now, she picked the phone call and placed an order when the stock balance was 36. That is reorder level. Am I right, guys? Now, during this lead time, what happened? Everything happened in her favor. The family also consumed the minimum consumption every day, 4 kgs only of rice every day. And this guy, the supplier also, this time he took only the minimum lead time. So in 4 days itself he delivered, guys, correct? So which means he took 4 days. Each of the 4 days, everything happened in my favor. I consumed only 4 kgs every day. 4 into 4. How many kgs have I consumed? 16. So what has happened? 36 units. This was when I placed an order. Now, during the lead time, I consumed 16 kgs. So now what is the stock balance? 20 kgs. The moment the stock balance hits 20 kgs, now what happens? That guy is ringing their door with a fresh order. Guys, correct? Let us say every time I place an order for 50 units, now on top of the balance 20 units, what he will do? He will pour this fresh 50 kgs. Guys, correct? So the balance will be whatever I have, 20 plus the new 50, I will get a 70 units balance. This is the maximum possible stock she will hold. She will not hold beyond this also, because if you hold if you hold a large quantity of rice unwantedly, then it is prone to some insects and other things. So no, she will never hold beyond requirement also. Are you all able to understand? Guys, is this clear? So what is the formula here? Simple. Reorder level minus, everything happens in my favor, minimum consumption into minimum lead time plus reorder quantity. He rings the door, he rings the bell with the fresh order. Is that clear, everybody? Is that clear, everybody? Yes, that's about your maximum level. Next, average level. Now, there are two formulas for average level. One is your arithmetical formula. What is it? Minimum plus maximum by 2. Right? Now, this is not a very good formula. This is not a very correct formula. Minimum is how much? 11. Maximum is how much? 70 by 2. So, 11 plus 70 by 2 gives you 40.5 units is the average stock level. However, formula number 2 is the most logical method. What is it? It says minimum level plus 1 by 2 into reorder quantity. Reorder quantity is nothing but economic order quantity. Now, what is the formula, sir? In this case, anyways, she will hold minimum is what? 11 units. Guys, correct? At any given point of time, she will be having 11 units with her. Guys, correct? Now, whenever this guy loads and comes with a fresh stock, how much is it? 50 kgs, no? 50 units. Guys, correct? Now, what happens? 50 units will be consumed. The moment it hits 11, once again another 50 units will come. And this gets consumed. The moment the balance hits 11, the fresh unit will come. Guys, correct? Or in other words, always she will be having 11. What averages is only this 50 units. Guys, correct? At maximum it could be 50, or at minimum it could be 0. That is over and above 11. Hence, what should average is only your reorder quantity. Hence, the formula is what? Your minimum level, 11 units plus half of reorder quantity. Is this clear, guys? Are you all able to understand? Is there any issue here? Any problem here? Guys, clear with this? That's about these two formulas. One is your normal arithmetical formula. What is that? Minimum plus maximum by 2. The other one is your logical formula. Minimum level plus 1 by 2 of reorder quantity. Is that clear? Fine. That's about this part, which is your average level. Now, there's something called as danger level. Now, danger level, the formula is average consumption into lead time for emergency purchases. Now, let us say your some guests have come home, right? Some guests have come home. Now, some special variety rice. Let's say you need some biryani rice. Guest means biryani, no? So, you need some biryani rice. Now, in this case, now you can't ask the guest to wait for so long. Guys, they are staying, let us say, for 2 days. Maximum by tomorrow, you should give them biryani, no? Guys, correct? Else, what will they do? Only they know. So, what you should do now, during this time, you are asking the supplier, look, I am in trouble. So, please deliver with in the minimum possible time. This is not a normal order. This is an emergency order. Now, he says, for emergency purchases, the lead time is only 1 day. Right? Are you all able to understand? And average consumption. What is the average consumption, guys? In our example, the average consumption was 5 units. Guys, correct? So, 5 units into 1, it's going to be what? 5 units. Means, sir, what is the meaning of this? In this case, what is the minimum level, guys? What is the minimum level? Guys, come on, everyone tell me. Minimum level is 11 units. The stock generally will not go below 11 units. But if at all it goes below 11 units, minimum level, make sure it does not go below 5 units. That is, it does not go below danger level. Why? Suppose this is another level of security for you, another level of safety for you. Guys, correct? It should ideally not go below 11. If it goes below 11, make sure it doesn't go below 5. Because up to 5, suppose the balance is only 5, what you can do, you can immediately place an order, and 1 day you can manage with this 5 units. Suppose if it goes below 5, the balance, you can't even manage for 1 day. You will run out of stock. Are you all able to understand this? Right? Hence, danger level means what? Your average consumption into lead time during emergency purchases. As simple as that. Now, guys, shall we tell all the formulas? Let's revise this. Come on, tell me. First, reorder level formula. Everyone. Maximum consumption into maximum lead time. Your mom will never let you sleep in a hungry stomach. Right? Extreme prudence. Next one. minimum level, minimum level, yes. Reorder level minus what generally happens? Average consumption to average lead time. Excellent. Then, third, maximum level. Everything happens in your favor. Reorder level minus minimum consumption into minimum lead time plus reorder quantity. As simple as that. Next, average level. Bifurcated into two. One is your mathematics, arithmetical formula. Maximum level plus minimum level by 2. On the other hand, you have a logical formula. Minimum level plus 1 by 2 of reorder quantity, because anyways I have the minimum. What averages is only above the reorder, the minimum level, which is basically a reorder quantity. And finally, danger level. What is the formula, guys? Average consumption into lead time during emergency purchases. As simple as that. No need to mug up anything. Everything is fully conceptual. Is that clear, guys? Right? Now, let's go and do one numerical problem here. Please take question number 7, a very good sum. Please take question number 7. It's a very, very good sum. Okay. Mohit Enterprises manufactures a special product called Z. The following particulars were collected for the year. Monthly demand of Z is going to be 1000 units. So monthly demand for Z is going to be 1000 units. The cost of placing an order is how much? 100 rupees, which means this is ordering cost. The annual carrying cost per unit is 15. So 15 is per unit per annum. Correct? No, annual cost only they have given. Next, normal usage 50 units per week, minimum usage 25 units per week, maximum usage 75 units per week. So they have given, it is not per day, everything is per week. Guys, correct? Minimum 25, maximum 75, average is 50. Reorder period, minimum 4, maximum 6, average will be 4 plus 6 by 2, 5. Fine. From the compute from the above, reorder quantity means what? EOQ you need to compute. Reorder level, minimum level, maximum level, average level. Danger level you need not to. Now, how do you do this? First, for the purpose of computing reorder level stands for, in this case, your EOQ, your reorder quantity. Reorder quantity in this case stands for economic order quantity. How will you arrive at this formula? Root of 2AO by C. Now, O we have 100, C we have 15. Now, what is A? What is A? Annual consumption requirement. How much is it? How much is it? Come on, calculate and tell me now. You're looking at me. Come on, tell me. Now, guys, this is a place where many students commit a mistake. Now, as they say, sir, monthly demand of Z is 1000. Rightfully, I found out it is monthly. Hence, multiply this with 12 and make it as 12,000 units. Right? Absolutely wrong. Because, please read the question fully. Mohit Enterprises manufactures a special product called Z. Z is an FG. It is not a raw material. We are in materials chapter. Hence, we need to compute economic annual requirement, consumption requirement, which means you're talking about raw material. Hence, this is a completely irrelevant data for the given question. They have just kept it to confuse you. Now, how do we do it? Now, guys, here they have given normal usage. Generally, average usage is how much? 50 units per week. In a week, in a year, how many weeks are there? 52 weeks. So, 50 units into 52 weeks. How much is that? 15 to 52 gives you 2,600. Hence, 2,600 units is going to be my annual consumption. Is that clear, everyone? Is that clear, guys? Right? So now you can compute your EOQ. So EOQ is going to be what? Root of 2 into A, 2600 into O, 100 divided by C. How much you get? 2600 into 100 into 2 into by 50 now. Okay, square root of that. You get 186.18 something. So it's rounded off to 186. Is that clear, guys? Are you all able to understand? So 186 is going to be what? My reorder quantity. That is nothing but EOQ. Guys, correct? Next, we need to compute what? Reorder level. Reorder level is going to be maximum consumption into maximum lead time. Maximum consumption 75 units per week. Maximum lead time 6 weeks. So 75 into 6. Am I right, guys? So it's going to be how much? 75 into 6. It's going to be 450 units. Am I right, guys? Yes. Next one. What is the next one? Minimum level. Minimum level. How will you find out? Reorder level, that is 450 minus average consumption into average lead time. Average consumption 50. Average lead time 5. So 15 to 5 is going to be 250. It's going to be 200. Is that clear, guys? That's about it. So that's about it. This is going to be how much? 200 units. Is that clear? Next, maximum level. Recall the formula. Everything happens in my favor. Reorder level minus minimum consumption to minimum lead time plus reorder quantity. So now clearly you will see reorder level 450 units minus minimum consumption into minimum lead time. Minimum consumption 25, minimum lead time is 4. So 25 into 4, which is 100, plus reorder quantity. Just now we found out it's going to be 186. Correct? So it's going to be 450 minus 100. 350 would have been the balance by the time that guy rings the bell. So now I get an additional 86 units here. So how much is that going to be in total? 536. Is that clear, guys? See how easy it is, provided you understand the subject conceptually. That's all it takes, guys. That's all it takes. And finally, average level, two formulas: minimum plus maximum by 2. In that case, 200 plus 536 by 2. How much you get? 368. That's going to be the first formula. Second formula, minimum plus 1 by 2 of reorder quantity was my minimum level, guys. 200 plus 1 by 2 of reorder quantity, 1 by 2 of 186. It's going to be 93. So the overall is going to be 200 plus 93. It's going to be 293. Is this clear, guys? Are you all able to understand? And that's about this particular question. The catch here is with respect to identifying the fact that Z is not a raw material, it is an FG, and that should not be considered for the purpose of arriving at annual consumption. You need to use the normal usage multiplied with 52 weeks to arrive at the annual consumption requirement. Is that clear, guys? Right? Please go and update your library of adjustments. Right on. EOQ computation and stock levels. EOQ computation and stock levels, semicolon, tricky calculation of annual consumption requirement. Tricky calculation of annual consumption requirement. Now, let's move on to the next concept, which is stock out cost. Now, guys, this is not that clearly explained in our institute study material, but they have given one question regarding stock out cost. Now, guys, what is this concept of stock out cost? Basically, this concept, stock out cost, helps us to achieve the objective B, which is decision making. What do you mean by stock out cost? Now, guys, if I hold my inventory stock, now I will be incurring a carrying cost, that is the cost of carrying this inventory. Am I right, guys? Yes. Suppose if I do not hold this stock, right, that is if I do not carry the inventory with me, then what is the cost of not holding the inventory is called as stock out cost. Are you all able to understand? Sir, if I don't hold the stock, how will I incur the cost? Here, cost refers to opportunity cost. That is, let us say, if you have one unit, every unit can give you a revenue of, example, I am saying, let us say, using one unit, you can generate 10 rupees of profit, right? Now, someone walks in with a demand of 5 units, but you do not have the 5 units with you, which means you are losing a profit of how much? 5 into 10, 50 rupees. This is called as stock out cost. You need not pay this 50 rupees out of your pocket. This is nothing but the amount of profit you are unable to make because you don't hold the stock. Is that clear, guys? Right? This is called as stock out cost. Now, in this context, now let us go and do one numerical problem. This is a general problem which is one question which many students are generally they struggle to understand this particular question. Now, quickly, let me just read out the question for you. Of course, there is some issue with the wordings as well. I will just walk you through fully. Mrs. Tyro Tubes trades in four-wheeler tires and tubes. This is a tube company. It stocks a sufficient quantity of tires for almost every vehicle. In year-end 20X1X2, the reports of sales manager revealed that Mrs. Tyro Tubes experienced stockout tires. The stockout data is given as follows. Now, what have they given here? Stockout of tires 100, number of times of stockout 2. Stockout of tires 80, number of times 5, 50, number of times 10, 20, number of times 20, 10, number of times 30, 0, number of times 33. Mrs. Tyro Tubes loses rupees 150 per unit due to stockout and spends rupees 50 per unit on carrying out and on carrying of inventory. Determine the optimum safest stock level. Now, first of all, many students don't understand what the question says. Now, guys, what is this question talking about? Simple. If you are holding one unit, right? If you are having one unit of stock, you need to incur what? You need to incur your carrying cost. Am I right, guys? What is the cost of holding every unit? 50 unit. If you do not hold this stock with you, right? And if someone walks in with a demand, now in that case, you will lose out a profit of how much? 150. The company loses 150 rupees per unit due to stockout. Means what? Someone is having a demand, but I'm not able to honor him with this demand. Are you all able to understand? So the cost of holding is 50. The cost of not holding is how much? 150. Now, if you do not hold sufficient level of inventory, you will have stockout cost. If you hold too much level of inventory, excessive inventory, you will incur excessive amount of carrying cost. Now, which means you need to balance the two and arrive at the optimum level of buffer stock, safety stock that you need to maintain at all times, guys, correct? Now, what is the number of units of safety stock that I need to maintain so that I don't incur too much of carrying cost or too much of stockout cost? There is a balance between the two. Is this clear, guys? Are you all able to understand? Now, sir, here one dabba they have given. What is this? I will tell you. They have used some words, stockout tires, number of times of stockout. Now, it is ideally wrong usage of terminologies. What is the meaning of that? I will tell you. Someone walks in with a demand of 100 tires, 100 units. Now, how many number of customers will walk into your store with a demand of 100 units? 2 customers. Now, 80 customers can walk in with a demand of, 5 customers can walk in with a demand of 80 tires, right? So someone walking in with a demand of, let's say they want 80 tires, right? How many such customers are possible? 5. Someone walking in with a demand of 50 units, the number of times this particular event happens is 10. Someone walking in with a demand of 20 tires, 20 customers. Someone walking in with a demand of 10 tires, 30 times it has happened, 30 customers. Someone walking in with a demand of 0 tires, window shopping, right? Maximum 33 of the customers. Is that clear, guys? Now, what is the total number of customers that can visit my shop? 2 plus 5 plus 10 plus 20 plus 30 plus 33 comes out to 100, right? Or in other words, the probability of someone walking in with a demand of 100 tires is 2 by 100, which is 0.02. Am I right, guys? The probability of someone walking in with a demand of 80 tires is going to be what? 5 by 100, which is 0.05. The probability of someone walking in with the demand of 50 tires is 10 by 100, 0.1. The probability of someone walking in with the demand of 20 tires is going to be 20 by 100, which is 0.2. The probability of someone walking in with the demand of 10 tires is going to be 0.3. The probability of someone walking in with the demand of 0 units is going to be 0.33. Is this clear, guys? Right? So I should have some stock, right? It is dependent on people walking with how much demand. Is correct? Now, any of these customers can come to my shop. It is not certain exactly every day if people will walk with a demand of exactly 43 tires. I can't come up with this kind of relationship. They are taking a data and trying to analyze that. Is that clear, guys? So which means you know what is the demand that can happen, that can come, and the probability of the event happening. Is this clear, guys? Now, with this background, now let's go and do the sum. Now, guys, for you to do this sum, you need to have a template. Computation of stockout cost and inventory carrying cost. Now, what is it? The first column, you should have safety stock. Then you should have stockout units. Then probability. stock out cost, expected stock out cost, inventory carrying cost, and total. Don't worry, I will walk you through. Now, first, let us say I am maintaining a safety stock of 100 units. Means what? At any given point of time, if you come to my shop, I will always have 100 units. Is that clear, guys? Now, in this case, you tell me, if someone walks in with a demand of 100 units, will I be able to honor him fully? Yes. Someone walks in with a demand of 80, obviously yes. 50, 20, 10, 0. In all these customers, I will be able to honor any customer's demand. Am I right, guys? In this case, will I be having any stock out units? No. So my stock out units will be 0. Are you all able to understand? Is there any problem here? Hence, this probability is not there. That is, the stock out chance itself is not there. So the expected stock out cost will be 0. Are you all able to understand? Because for every unit you are running out of stock, you incur how much? 150 rupees. They have given in the question. So 0 and 150 is 0. Guys, correct? Are you all able to understand? The chances of this happening is nil. Hence, the expected stock out cost is 0. Is that clear, guys? But however, what happens to my inventory carrying cost? At any given point of time, I'm holding 100 units. Every unit you hold, you incur how much? 50 rupees as the inventory carrying cost. So 100 into 50 comes out to how much? 5,000 rupees. So the total cost you incur is what? Stock out cost plus carrying cost. 0 plus 5,000. You incur a total of 5,000. Is this clear, guys? Now, let's move on to the second scenario. Let's say I am maintaining a stock of 80 units. In this case, what happens? If anyone is walking to my shop with a demand up to 80 units, will I run out of stock? No. Guys, correct? I will never run out of stock if these customers walk in. Correct? Now, only if a customer walks in with a demand of 100 units, even to that customer, I will be able to supply 80 units. To the extent of 20 units, I will run out of stock. Are you all able to understand? Right? So in this case, only one scenario of stock out will be there, 20 units. And when will this stock out scenario happen? Only when someone walks in with a demand of 100 units. The chances of that happening is 0.02. So the probability you will put here is 0.02. Is that clear? No, don't take 20. Sir, here it is 20, sir. I will take 0.20. No. This 20 stock out can happen only when I maintain 80 units, but someone walks in with a demand of 100 units. So person walking in with a demand of 100 units, the chance of that happening is 0.02. This is why I said the wordings are not that clear. Ideally, this should have been demand. Is correct. This should have been number of times with that demand or number of customers. Is that clear, guys? Right? Are you all able to understand this? Yes. Now in this case, what's going to be my stock out cost? 20 units stock out. Guys, correct? And every time I'm running out of stock, I'll have to incur how much? 150. So 20 into 150 gives you 3,000 rupees. Now, so for sure you will incur this 3,000, huh? No. The chances of this happening is only 0.02. So 3,000 into 0.02. The expected stock out cost was only going to be 60 rupees. Are you all able to understand this? We are using the concept of probability, right? The chance of this event happening. Is that clear, guys? Right? So it's going to be how much? Expected stock out cost is 60. Now, what is the inventory carrying cost? I hold 80 units at any given point of time, and every time I hold a unit, I need to incur 50 rupees. 80 into 50 gives you 4,000 rupees. The total cost is 60 plus 4,000, 4060. If you maintain a stock of 80 units at all the times, are you now able to understand? Now, the next scenario, I will say, okay, sir, now I want to maintain a stock of 50 units. Perfect. If you maintain a stock of 50 units, what will happen? Now, if someone is walking in with a demand up to 50 units, you will be able to honor him fully. When will you run out of stock? Only when a person walks in with a demand of 100 or 80. Is correct? If someone walks in with a demand of 100 units, to him you will be able to supply 50 units. Is correct? So, you will run out of stock to the extent of 50 units. If someone walks in with a demand of 80, you will be able to supply 50 units. You will run out of stock to the extent of 30 units. The chances of this happening is 0.02, 0.05. Is that clear, guys? So, what you will do here? 50, 30, 0.02, 0.05. Are you all able to understand this? Guys, have the clarity when you do this. Are you all able to get this? Yes. Now, what is the stock out cost here? 50 into 150. That's going to be 7,500. Then 30 into 150. How much is that? 4,500. Guys, correct? Now, will I incur 75? For sure will I incur 4,500? No. The chances of me incurring 7,500 is only 2%, 0.02. So 0.02 into 7,500 gives you 150. Similarly, the chance of me incurring 4,500 is only 0.05. So 4,500 into 0.05 gives you 225. Now add the two, you get an expected stock out cost of 375. We are using probability, right? Statistics here. Probability. Is that clear, guys? Are you all able to understand? Right? So this is going to be 375. Because I don't have certainty, I have to necessarily use probability. Is that clear? Now, 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 because I hold 50 units, I have a carrying cost. 50 into 50 is going to be 2,500. So now, if I'm holding 50 units, the expected stock out cost is 375. Carrying cost is 2,500. Add the two, you get how much? 2,875. Is this clear, guys? Now let's go to the next level. Now, sir, I want to maintain a stock of only 20 units. In this case, what happens? Everybody tell me. Up to 20 units, sir. If someone walks in with a demand of 20, 10 or 0, I will not run out of stock. Correct? I will run out of stock only if someone walks in with a demand of 100, 80 or 50. If someone walks in with a demand of 100, I will be able to supply them 20 units. So stock out is for 80. Someone walks in with a demand of 80, I will be able to supply them 20. Stock out 60. Someone walks in with a demand of 50, I supply them 20. Stock out 30. The chance of this happening is 0.02, 0.05, 0.10. As simple as that. So 80, 60, 30. 0.02, 0.05, 0.1. Guys, clear? Now, what is the stock out cost? The respective units into 150. Guys, correct? So, 150 into 80 is equal to 12,000. 60 is equal to 9,000. 30 is equal to 4,500. But these are the costs which I do not incur for sure. Multiply them with probabilities. 12,000 into 0.02 gives you 240. 9,000 into 0.05 gives you 450, 4,500 into 0.1, remove 1 0, you get 450 here. Add the 3, 450, 450 is 900, 900 plus 240 is 1140. This is the expected stock out cost. Now, what is going to be my inventory carrying cost? 20 into 50, that's going to be 1000. Add the 2, you get what? 2140. Are you all able to understand this? As simple as that, guys. Now, one more scenario here. If I only decide to maintain a safety stock of 10 units, then up to 10, no problem. So, if someone walks in with the demand of 100, 90 units stock out, 80, 70, 50, 40, 20, 10, and that's all. Guys, correct? Now, probability is 0.02, 0.05, 0.10, and 0.20. Is that clear, guys? 90, 70, 0.4, 0.1. Sorry, 90, 70, 40, and 10. Guys, correct? So, 90, 70, 40, 10. Repeat the same process, respective probability. Now, for every unit that you're running out of stock, you multiply that with 150. You arrive at the stock out cost, multiply that with the respective probability and add it up. You get the expected stock out cost. Now 10 units into, so what is the carrying cost? 50, you get 500. Add the 2, you get the total cost. Are you all able to understand? Now suppose if I'm saying that no problem, I will maintain zero stock, safety stock nil. In that case, what? You can handle window shoppers, no problem, right? But all other scenario, you will run out of stock. Am I right? So 80, 100, 80, 50, 20, 10, 0.02, 0.05, 0.1, 0.2, and 0.3. So it completely enters your. So what will you do? So the respective stock out into 150 here. Yes, you'll get the total stock out cost here, multiplied with the respective probability and add it up. This is going to be your expected stock out cost. Carrying cost is 0 because I don't hold any inventory. So the total cost is going to be 2,700. Now what will you do? Sir, so what is the amount of safety stock that I need to maintain? Go for the total cost column. Whichever one has the least total cost, you should go for that one. So the total cost is least when you maintain a safety stock of 20 units. Hence, it is recommended for the company to maintain 20 units as safety stock. Are you all able to understand? Is there any issue here? This is how you need to compute your safety stock, guys. Are you all able to understand? Perfect. And that's about this particular question. Right, guys? Fine. So, a very different question, a unique question, which many students don't understand. Right, the wordings of the question. Of course, there is also some issue in the wordings of the question. That's about it. Please go and update your library of adjustments. Write down stock out cost computation. Stock out cost computation. And that's about this particular concept, and that's about this particular question. Let's talk out cost computation. Now, let's move on to the next concept called as EOQ with price discount. Now, guys, EOQ formula we've already seen. What is that? Root of 2AO by C. But this formula holds good only when there is no price discount. Guys, correct? What do you mean by price discount? He's saying at a time, if your order quantity at a time per billing, if you are placing an order for more number of units, then I will give you more discount. So purchase cost will come down. Guys, correct? Now, in the first scenario that we saw, the price will not change based on the order quantity. Am I right? Guys, correct? But now, what if the price is also changing based on the order quantity? Or in other words, when they are offering discount, now when there is no discount, only ordering costs and carrying costs are impacted by your order quantity decision. Correct? Suppose now they are going to give me a discount. In this case, even my purchase cost will be impacted by my order quantity decision. Am I right, guys? Right? Now, if I use this formula, root of 2AO by C, here ordering cost is considered, carrying cost is considered, but purchase cost is never considered here. First of all, whenever you have a price discount, in this case, your EOQ formula cannot be used. Are you all able to understand? Sir, can you give us an example? Please take the next sum, question number 11. With the help of this question only, we will do this. Now, this is what the supplier says. If you're ordering less than 250 tons, or in other words, 0 to 249 tons, if you're ordering, price will be how much? 6 rupees per ton, right? Suppose if you're ordering 250 to 799, between this range, if you have an order quantity, price is slightly less, 5.9, because you're increasing the order quantity. Suppose if the order quantity is between 800 to 1999, cost is 5.8. Suppose if it is 2000 to 3999, it's going to be 5.7. It's going to be 4000 and above. In this case, it's going to be 5.6. Is that clear, guys? Right? This is what they are saying. Now, depending on the order quantity, my price is also changing. No, guys, correct? Now here I can't use the formula root of 2AO by C because we only consider ordering cost and carrying cost. Your purchase cost is also being dependent on what? Dependent on your order quantity. Hence, in this case, how do we do it? Are you all able to understand? That is the subject matter of discussion. Now, how do we do it? Very simple. In this case, there is no formula approach. You need to use only trial and error concept. Is that clear, guys? Now, how do you do trial and error? Now, if I keep order quantity as 1, right, what will be my purchase cost, what will be my ordering cost, what will be my carrying cost, total it up, right? If I keep my purchase quantity, order quantity as 2, total cost, 3, total cost, like that, try for 4000 alternatives, right, and arrive at the total cost. Go for that alternative which gives you the least total cost. Is that clear, guys? Now, this is how it needs to be done. However, in examination, can you do 4000 alternatives? No, in real life it's easy to do. Excel easily you can do. Formula and double click, it will automatically come down. That's about it. But in exam it is not possible, right? Hence, for examination purpose, what you need to do, in every range, take the lowest quantity, right? For example, here I will take 250, 800, 2000, 4000. For each of these alternatives. In first alternative alone, you don't take 0. Somewhere in between, you take one order quantity. Let us say 2000. So if 200, if you keep your order quantity as 200 or 250 or 800 or 2000 or 4000, for these scenarios, you compute what? Your purchase cost, your ordering cost, your carrying cost, and you compute your total cost. Right? Now total these 3, and whichever gives you the least total cost, that will be called as your EOQ. Is that clear, guys? But in reality, it is not limited to 5 alternatives. You have 4000 alternatives, but for examination purpose, they are not testing you on the correct answer. They are testing you as to whether you know the correct approach. Is that clear, guys? Are you all able to understand? Is there any issue here? Now, with this context, let's go and revise one particular question, which is question number 11. What are they saying? From the following particulars, with respect to a particular item of materials of a manufacturing company, calculate the best quantity to order. What are they saying? So if the order quantity is, so this range, they are given the price. The annual demand for material is going to be how much? 4,000 tons, which means whichever I pick as order quantity, at the end of the year, overall I'm going to purchase 4,000 tons. Is that clear, guys? Stock holding cost is going to be 20% of material cost per annum, which means what? Carrying cost they have given. Delivery cost per order. Ordering cost is how much? 6 rupees per order. With this, we need to compute what? EOQ for every single alternative. Shall we do this, guys? Yes. Now for this, you need to have a template. Have order quantity, right? Order quantity. Number of orders. Number of orders, how will you arrive? A divided by order quantity. What is A? 4,000. Am I right? Yes, 4,000. Then average inventory. How do you arrive at average inventory? 1 by 2 of order quantity. Guys, correct? Right? Next, what is carrying cost per unit per annum? We need to arrive at it. What is it? 20% on the purchase cost. Purchase cost, we know range wise it will differ. Hence, because of that, carrying cost will also differ range wise. Correct? Next, the total carrying cost. How will you arrive? Average inventory into carrying cost per unit per annum. That is 3 into 4. That's what I have mentioned here. Is correct? Then the total ordering cost. How will you arrive? Number of orders into ordering cost per order. 6 rupees flat. So, second column into 6 rupees. Then total purchase cost. How will you compute? Don't say order quantity into purchase cost. No, it is annual 4,000 units, 4,000 tons. All the cases I will purchase. Guys, correct? So A into purchase cost per unit. Are you all able to understand? This is where many students commit a mistake. They take order quantity into purchase cost. No, in all these cases, overall I will end up purchasing 4,000 tons only. So it's A into purchase cost per unit. Then total cost will be 5 plus 6 plus 7. Total carrying plus ordering plus purchase cost. Is this clear, guys? Are you clear with the template? Yes? Now, the different order quantities I told you. In the first range alone, you take somewhere in between, right? We took 200. For all other ranges, the lower level needs to be taken. 250, 800, 2000 and 4000. 250, 800, 2000, 4000. Is that clear, guys? Yes. Now, what is the number of orders? Take your calculator. So, it's going to be 4000 divided by 200 gives you 20. 4000 divided by 250 gives you 16. 4000 divided by 800 gives you 5. 4000 by 2000 2. 4000 by 4000 1. You got the number of orders. Average inventory, how much is it? Half of 200 is 100. Half of 250 is 125. Half of 800 is 400. Half of 2000 is 1000. Half of 4000 is 2000. Next one. Carrying cost per unit per annum. 20% of the respective prices. Calculator trick can we use? Yes. 0.2 into 6 is equal to 1 by 2. 1 second. 6 is equal to 1.2. Then 5.9 is equal to 1.18. Then 5.8 is equal to 1.16. Then 5.7 is equal to 1.14. And 5.6 is equal to 1.12. You got these figures? Yes. Now the total carrying cost, what is it going to be? So average inventory into carrying cost per unit per annum. 100 into 1.2 gives you 120. 125 into 1.18 gives you 147.5. 400 into 1.16 gives you 464. 1000 into 1.14 is 1140. 2000 into 1.12 gives you 2240. Is that clear? What is the total ordering cost? Ordering cost will be 6 into the number of orders. So 6 into 20 is equal to 120. 16 is equal to 96. 5 is equal to 30. 2 is equal to 12. 1 is equal to 6. Right? And the total purchase cost is going to be 4,000 into the respective purchase cost here. Guys, correct? Price here. So 4,000 into. So these respective figures, if you do, you will get this 24,000 and it keeps on going. Guys, correct? Right? I'm not getting into the calculation since this being a marathon here. Right? So now what do? Add these three. You will arrive at the total cost for each of the alternatives. Now, choose the one which has the least total cost. The least total cost happens when your order quantity is going to be 800 tons. Hence, 800 tons should be the order quantity. So, this 4,000 tons you are going to order as a whole. Yes, place the order in number of 800 tons, which means the total number of orders has to be 5. Is that clear? So, 800 tons you purchase at a time, right? Like that you purchase for 5 times. You will make sure that you will purchase totally 4,000 tons. Is that clear, guys? So EOQ with price discount, there is no formula method. You only need to do using what? You only need to do using your trial and error method. Is this clear for everyone? Guys, that's about this particular concept of EOQ computation with discount. So please go and update your library of adjustments. Write down EOQ computation with price discount. EOQ computation with price discount. EOQ computation with the price discount. Is that clear, guys? Fine. Now, guys, there is a next concept called as issues valuation. Now, guys, this particular concept, I am not going to do it in the marathon because this is something which you would have already studied in your CA foundation, right? And as well as CA or CMA foundation, you would have already studied this particular concept. What is this? Basically, this is nothing but your FIFO, LIFO, weighted average, simple average method and all. Now, direct, they ask you to prepare some stores ledger. This is something that you would have already done. Date, particulars, your receipts, issues, balance, under that quantity, rate, amount. First in, first out means what? The first lot should be utilized against the issues first and then go to the next lot. Guys, correct? LIFO means first completely exhaust the last lot, come in the descending order. Guys, correct? And weighted average means the total value divided by total units. Simple average means take only the price and arrive at an average of that. Now, these are things which you would have already studied at your foundation level, which is very much there at the intermediate level, which we see in detail in our regular and exam oriented batch. But for the purpose of marathon, since it is a direct area, so I am just giving you a bird's eye view of that. This is very much easily manageable, right? Now, let's go on to the next concept called supplier selection. 1 second. Yes, let's go on to a next concept called as supplier selection. Now, please take question number 16. Please take question number 16. So all these things we have done in our regular batch. That's why, it's all annotated here. Yes, question number 16. Now, a very good question. Now, after inviting tenders, 2 quotations are received as follows. Supplier A is saying for every unit, you will have to pay how much? 4.4. Supplier B says, sir, you pay me only 4.2 plus flat 4,000. You are required to calculate the order quantity for which the purchase price per unit will be the same under both alternatives. Number 2, select the supplier if the purchase department wishes to place an order for 15,000 units. Now, guys, which supplier is better, A or B? Now, guys, this is ideally a concept of indifference point which we have seen in our marginal costing chapter. Sir, how's our indifference point? Now, if you notice here, now there is a supplier A. Now, how much does he charge? 4.4 per unit. Does he charge anything flat? No. Whereas supplier B, he says, per unit you pay me 4.2 plus you pay me a flat 4,000. Or in other words, these two guys, right, they have a variable component and a fixed component. Am I right? In this case, A's fixed component is 0. Now, the advantage of A is that he has a low fixed cost. In this case, no fixed cost. Is that clear? The advantage of B is that he has a low variable cost. Is that clear, guys? So now you can't come to the conclusion and say, sir, always A is better, always B is better. No, each of them have one advantage and one disadvantage each. Hence, it is not as simple as saying who is better always. No. Are you all able to understand? Now, this is where the concept of indifference point come in. What do you mean by indifference point? The point where whether I purchase from supplier A or I purchase from supplier B, the overall cost remains to be the same. So how many number of units should I purchase exactly so that the total cost under A is equal to total cost under B? This is called as indifference point. Now, what is the total cost under A? 4.4x. Let x be the number of units. 4.4x plus 0. Guys, correct? Hello? Yes, this should be equal to 4.2x plus 4000. Am I right, guys? Right? So now bring x onto one side. Right? So this is going to be 4.4x minus 4.2x is equal to 4000 minus 0. Or if you take x out in common, x the whole into 4.4 minus 4.2 gives you 4000 minus 0. Or x is equal to 4000 minus 0 divided by 4.4 minus 4.2. This comes out to 4000 divided by 0.2, which is going to be 20,000 units. Is that clear, guys? Now, if I exactly purchase 20,000 units, the total cost, if I purchase it from A, and the total cost, if I purchase it from B, will be exactly the same. Is that clear, guys? Are you all able to understand? This is called as indifference point. Sir, with this indifference point, what am I going to do? How will I arrive at a decision? I will tell you. Now, guys, let us say you are a person who is dealing in very less volume. Okay, you are a person who is dealing in very less volume. Let us say you want to buy only 1 unit. Okay, you rationally think and tell me whether will you buy it from A or will you buy it from B? Huh? Will you buy it from A or B? Huh? From whom will you buy? A or B? You will obviously buy it from A. Why? Just 4.4 rupees you need to pay. Whereas if I have to pay buy it from B, sir, 4.2 rupees only per unit, no? Plus flat you should pay 4000. Guys, correct? Or in other words, when your volume is low, the overall component of your cost, the total cost, is predominantly driven by your fixed cost. Guys, correct? So you will go for that alternative which gives you the lower fixed cost. Are you all able to understand? Guys, clear? Because variable cost is very less when my volume is low. Guys, correct? Suppose if I am purchasing it from B, 4.2 only per variable cost, but fixed cost is going to be 4000 rupees. So the significant component of my total cost will be fixed cost. Hence, when my volume is low, I will go for that option that gives me a lower fixed cost. Suppose you are planning to purchase, let's say 1 lakh kgs, like 1 lakh kgs. In that case, your overall cost will be predominantly driven by variable component. Hence, you will go for that alternative that gives you a lower variable cost. Is that clear? In that case, you will go for B. Are you all able to understand? Now, sir, now, where did this indifference point come in? Don't worry. Now, at the indifference point, you will either go for A or you will go for B, because both will give you the same result. If you want to purchase units which is less than the indifference point, you should go for that option that gives you a lower fixed cost. Is that clear, guys? In this case, it is A. If you are planning to purchase units which is more than the indifference point, you'll go for that alternative which gives you a lower variable cost per unit, which is in this case going to be B. Is this clear, guys? Right? This is the reason why we compute indifference point, and based on the indifference point, we can arrive at the decision directly. 15,000, 20,000 units is the indifference point. Now, sir, I want to buy 10,000 units, sir. Go for A. Just like that I can say, because you try and calculate, it will always be less. Sir, I want to buy 30,000 units, sir. Then go for B. So I will clearly have a demarcation as to when to purchase from which vendor. Are you all able to understand? This concept is called as supplier selection. Is that clear, guys? This is basically a decision making area. The second part of the question they have asked, select the supplier if I wish to purchase an order for, place an order for 15,000 units. From whom will you purchase? Yes, sir, it is less than 20,000. Hence, I will purchase from A. Are you all able to understand? As simple as that, guys. So the concept of marginal costing is being mixed in the concept of material cost, and this concept is called as supplier selection. Is that clear, guys? Fine. That's about this particular area. Of course, indifference point, directly if you want to apply the formula, it's going to be 4,000 minus 0 is nothing but difference in fixed cost divided by 4.4 minus 4.2, this is nothing but difference in variable cost per unit. We have already seen that in marginal costing. So difference in fixed cost divided by difference in variable cost per unit, it gives you 20,000 units. Is that clear, guys? By the way, marginal costing has already been uploaded in part 1. So please watch that in case you want to get more clarity on the concept of indifference point. Fine. So now with this, we have completed this particular question. Please go and update your library of adjustments. Write down supplier selection. That's about it. Supplier selection. That's all. Now guys, let's move on to the next concept called as ABC analysis. ABC analysis. Now here ABC does not mean activity based costing. It is completely a different concept as a whole. Now guys, you guys generally do this ABC analysis. What is it that you do? During your exam, you will say A category means most important, B category means somewhat important, C category, omit category. Yeah? Yes. So you guys do that, no? Right? So never omit anything. Now, prioritize, that is okay. Now, similarly, now that ABC, that is the order of importance, is what this particular concept talks about. And guys, this particular concept helps you achieve objective C of our subject, which is control. Is that clear? Now, what is this? Now, this ABC analysis is based on the concept of Pareto rule. What is Pareto rule? There was a guy called Pareto. He invented this rule. It's popularly called the 80-20 rule. Now, what he says, 80% of the population, global population, controls 20% of the wealth, which means the remaining just 20% of the population control 80% of the global wealth. So if you are the income tax department, now you will give more focus on the 20% of the population. Why? If you give focus on 20% of population, you can get control on 80% of the wealth. Guys, correct? For example, let us say the total wealth in the entire world is 100 crores, right? And let us say 100 people are living in this world. Example I'm saying. Now, what Pareto says is 100 crores the total wealth. Out of that, 80 crores are being held by just 20 people. The balance 80 people put together control only 20 crores. Is that clear? Which means, what will you do? You will give extreme importance to this 20 people. Let's say you are income tax department. You want to get control over significant component of the wealth. You will focus on these guys. Guys, correct? Are you all able to understand? And the balance 80, it's okay. Though they are more in number, in value they are very less. Are you all able to understand? Now, this is exactly what happens in a company also. What they are saying, there are so many different types of raw material that we have, right? But understand, there are certain raw materials which are less in number, but more in value. There are certain raw materials which are more in number, but less in value. For example, I'm a car manufacturer. In a car, I need only one engine, guys, correct? Which means engine in terms of quantity is very less. Only one engine per car is required. Whereas, if you look at the same car, I need so many nuts and bolts. No, I need 1,000 nuts and bolts. Now, nuts and bolts are huge in quantity, but in value, it is nothing. Guys, correct? Now, what this ABC analysis says is, look, you categorize your raw materials into A category, B category, C category. Now, for A category materials, give a very high level of control, very important. Now, A categories are generally low in number, more in value. Example, engine. Guys, correct? Next, moderate B category items, you give a moderate level of control. They are moderate in terms of, medium in terms of number of quantity, and moderate in terms of value. C category, they are high in terms of quantity, nuts and bolts, but very low in terms of value. Give them the low level of control. Now guys, when it comes to control, we saw the concept of stock levels, reorder level, minimum level, maximum level, average level, and we saw reorder quantity, EOQ formula, everything. Now I have 25,000 different types of stocks. Now you tell me, Can I exercise the same level of control for even a nut and bolt and the engine? No, it is really not possible for a company to exercise the same level of control. Hence, what they do is they categorize their raw materials into A, B, and C category. A category, there is no shortcuts, 100% control they will do. B category items, moderate level. C category item, least level of control. Are you all able to understand? Is there any issue here? Right? This is actually called as selective inventory control. What is it called as? Selective inventory control. Means what? I select the categories of inventory based on the category and rating. I actually give them control. Is that clear, guys? Right? This is actually this stems out from a concept in your business studies, right? In your MBA, they will be seeing, of course, even in your school days, you might have seen in your business studies, is a concept called as management by exception, right? It means you take the exceptional items out and you give more control on them. This is called as management by exception. Now, sir, how do I carry out ABC analysis? Let's go and do one numerical problem. With the help of that, we will be seeing it. Shall we get started, guys? Right. I'm just going to share the procedure of doing it. Computation part, let's not get into it right now. In our regular and exam oriented batch, we do the computation in detail. In fact, whatever notes I'm sharing here, there's all these things, I did it manually along with the students. That's how we do it. In a marathon, since there is a limitation of time, so we will quickly understand the concept and the structuring of these questions. Now let's get started with this question number 70. Now, from the following details, draw a plan of ABC selective control. What have they said? Item number. So there are 12 different types of items, means raw materials, right? Now, raw material 1, physically how many units are there? 7,000 units. Per unit, what is the cost? 5. Like that, for every type of raw material, physical units they have given, and they have also given the per unit cost. With this, you need to chart out your ABC selective control system. How to do that? Very simple. First, we need to prepare a statement of total cost and rank it. How do you do? So, items 1, 2, 3, 4, 5, 6 till 12. Units, all these are physically given. Now, what you need to do is, you need to compute percentage of total units. What is this percentage of total units? Now, all the units you add up, physically I have a total of 2,19,000 physical quantity units with me. Now, item number 1 is 7,000 divided by 2,19,000. It comes closely to around 3.1963%. Means what? Item number 1 contributes to 3.19% of physical value. I mean, of physical units. Is that clear? Not in terms of value. Overall, in terms of quantity. So, this item number 1 contributes to 3.19% in the physical quantity. Is that clear, guys? Like that, item number 2, 24,000 by 2,19,000. Physically, if you see, 10.95% of the total units are coming from what? Item number 2. Like this, for every item, you need to arrive at the percentage of total units. Is that clear? Then, have the unit cost. Copy paste from the question. Total cost will be units into unit cost. So 7,000 into 5 gives you 35,000. 24,000 into 3 gives you 72,000 and so on. So what you need to do, item wise arrive at the value. Now, the total value of inventory that I hold is going to be how much? 3,55,770. Now, calculate each item as a percentage of the total value. For example, item 1 is going to be 35,000 upon 355,770. That's going to be 9.83%. Item number 2 is 72,000 upon 355,770. That's going to be 20.23% and so on. Now, calculate this in terms of the total value, percentage on the total value, total cost. Is that clear? Now, we need to do the ranking based on the percentage of total cost. Means what? So, the highest will be actually item number 11. How? It contributes to 22.95% of the total value of raw material. So, 22.95% of the total value of raw material comes from item number 11. Is that clear, guys? So, you can mark it as rank number 1. Rank number 2, the next high category item. So, item number 2, it contributes to 20.23% of the total value of the raw material. So, item number, the next ranking is 3. This is for item number 5, 16.0216%, right? And then 4 is going to be 9.8378%. This is from item number 1. So, based on the percentage of total value in the descending order, you will actually do the ranking. Is that clear, guys? Highest contribution percentage will get the first ranking and then go to the next, and so on. Is this clear, guys? Right? Now, once you do the ranking, now you need to get into another table. But before that, there has to be a basis on which you need to segregate your raw materials into A, B, and C. Generally, this will be given in the question. Now, if a raw material is 50,000 rupees or more in value, I will categorize it as A category. And for A category, I'll give high control. If it is between 15,000 to 50,000, put it under B category, moderate control. Below 15,000, put it under C category, low control. Is this clear, guys? Now, generally, this will be given in the question. In this question, it was not given, since hence we took assumed, but generally it will be given in the question. Without that, you can't do. Is that clear, guys? Now, what will you do? On the basis of rank, you need to put it up here. So, rank number 1, 2, 3, right? Rank number 1 comes from item number 11, guys, correct? Now, item number 11, if you see, what is its contribution to the physical units? 5.85, correct? 5.8512, 5.2512, sorry, 5.2512. This is its contribution in terms of physical units. Now, what is the value of this? 81,650. Put it here. And what is its contribution as a percentage? What is the contribution to the total value? It's 22.9502. Now, the value is how much? 81,000, more than 50. Guys, correct? Hence, I will give it as A category. Similarly, if you notice, rank number 2, rank number 3, these items are also more than 50,000. Hence, it comes under the first ranking. Is that clear, guys? Now, if you total the percentage and see, now what we are saying, approximately just 3 items contribute to 60% in value. However, if you look at it in terms of physical units, it only comes to about 33% in physical units. Guys, are you clear with this? Just being 33% in physical units, it contributes to 60% in value. Pareto analysis comes into picture. Are you all able to understand? Hence, A category items, if I just control 33% of my overall physical inventory, I will get a control on 60% of the total value. Is this clear, guys? Hence, these 3 takes the topmost priority. Next category is 15,000 to 50,000. Guys, correct? So anything between 50, less than 15 will come here. Anything between, more than 15, less than 50 will come here. Guys, correct? Right? This is B category. If you add up, you will find moderate level. That is, it contributes to 26% of value. And in terms of physical units, it comes close to around 24%. More or less, the value and the number are more or less matching. Guys, correct? It is moderate level. Is that clear? And then C category, if you see, 42% in physical units contribute to only roughly around 14% in value. Hence, we give it as a C category, least level of control. Is this clear, guys? Are you all able to understand? This way, this manner of presentation is called as a ABC analysis. Are you all able to understand? Right? There is no specific calculation in terms of arriving at the answer. This is how you need to do and leave it here. So first step, do the ranking based on what? Percentage of total cost. And second one, based on the range, arrive at the category and arrive at the total of percentage of total cost and percentage of total units. So 33% of units will contribute to 60% of value. 24% of units will contribute to 26% in value, and 42% of units will contribute roughly to around 14% in value. So physically they are huge in number, like nuts, bolts, screws, spares, all these things. But value wise, it is nothing. Hence, only C category I give them. Are you all able to understand this, guys? Right? And that is the concept of your ABC analysis. Are you all able to understand? So this also gets tested then and there. In case this comes in your exam, you now know how to handle it. Please go and update your library of adjustments. Write down question number 17, give all the cross-referencing and write down ABC analysis. Write down, guys, ABC analysis. And that's about this particular segment. Now, let's go on to the last segment of discussion in this chapter, which is inventory turnover ratio. Now, guys, inventory turnover ratio. So, what is the formula to calculate inventory turnover ratio? Ideally, this inventory turnover ratio is there in your financial management paper, ratio analysis chapter, right? But in this chapter also, they have kept this concept of inventory turnover ratio. The formula for calculating inventory turnover ratio is cost of materials consumed divided by average stock of raw material. Here, by inventory, there are three types of stocks. No, what are the three types of stocks? RM, WIP, and FG. Am I right, guys? Now, we are in which chapter? Material cost. Hence, we are only talking about raw material. What is the formula to compute this? Cost of materials consumed during a year or a period divided by average stock of raw material. Average stock means what? Opening stock plus closing stock divided by 2. Is that clear, guys? Now, sir, why do we compute this? Why do we compute this? Let us say, guys, let us say I have a raw material A. In a year, I consumed total raw material A. The annual raw material consumed was worth how much? 12,000 rupees. Let us say on an average, I maintain the stock of raw material of how much? 1,000 rupees. I always maintain 1,000 rupees worth of raw material. Is that clear, guys? Now, as per this formula, inventory turnover ratio is how much? Raw material consumed divided by average stock of raw material. I get it as 12 times. Now, what is the meaning of this? What is the meaning of this? Very simple. In a year, I consumed raw material A worth 12,000 rupees. And generally, I maintain a stock of how much? 1,000 rupees worth of raw material. Or in other words, I will say, I first bought 1,000 rupees worth of raw material, right? It got emptied. Once again, I purchased 1,000 rupees worth of raw material. It got emptied. Once again, I purchased 1,000 rupees of raw material. It got emptied. Like this, I purchased my raw material and it got emptied. Once again, I purchased and it got emptied. Like this, it happened 12 times in this year. Guys, are you all able to understand? This is called as stock turnover ratio. Are you all able to understand this? Are you all able to understand this? So what is the meaning of this stock turnover ratio? It represents how many number of times your stock got refilled and emptied, refilled and emptied, refilled and emptied. Are you all able to understand? So in this year, it got over how many times? 12 times in this year. Guys, correct? Huh? Guys, correct? 12 times. Now you tell me, which means, can I say, once a month it gets over and I will actually replenish it once again. So, and once again, after 1 month, it will get emptied. Guys, correct? How long does it take for me to empty this one batch? It actually takes me 1 month. Guys, how did you get this 1 month? Very simple. 12 months divided by the inventory turnover ratio 12 times. That's how you did it, no? Guys, correct? So 12 months divided by 12 times, I get 1 month. Now, 1 month is what? This is called as stock holding period. What is it called as? Stock holding period. Or in other words, if I purchase a raw material A today, it will take 1 month for me to empty it. Guys, correct? Right? Are you all able to understand? And once again, if I purchase another lot, it will take 1 more month for me to completely empty it. Are you all able to understand? Guys, are you all able to understand? So, what is the formula for inventory turnover ratio? Raw material consumed divided by average stock of raw material, right? Then with this, what will you do? You can arrive at the stock holding period. How will you do this? 12 months or days if you want 365, or if you want it in weeks, 52 weeks divided by inventory turnover ratio. With this, you can calculate how long you are holding the stock, or in other words, how long it takes for you to empty the stock. Is that clear, guys? Yes? Now, so with this, what are we going to do? I will tell you. Let us say there is another stock, raw material stock called B. Okay, inventory turnover ratio 12,000 divided by 2,000. How much is it? 6 times, which means in this year it got emptied, refilled 6 times, which means how long does it take for me to empty it once? So 12 divided by 6, it takes 2 months. Is that clear? Now with this, what can I do? I can analyze and find out. Look, raw material A gets emptied quickly in just 1 month, whereas raw material B takes 2 months to actually for me to consume. Are you all able to understand? Or with this, I can make one analysis. Raw material A is a fast moving stock. Raw material B is a slow moving stock. Is this clear, guys? Are you all able to understand? Now, if you go to a shop and all, now they will give some discounts, no? They will give discounts only on products which are slow moving. They will never give discounts on fast moving stock. Why? Because anyways they know it will be sold. Only to push the sales, they will give you discount on slow moving stock and all. Guys, are you all able to understand? So with the help of this particular stock holding period, you will do something called as FSN analysis. What is it called as? FSN analysis. Full form: fast moving, slow moving, non moving stock. Is that clear, guys? Based on this, you can categorize which stock is under which category, and accordingly you can take corrective actions. Is that clear? Suppose in this case raw material B is in slow moving category. Now immediately what will I do? I will try to dig out the reasons and find out why is it slow moving. Then I will try to push it and convert it into a fast moving category. Is that clear, guys? Are you all able to understand? Right? So I should know where I stand, guys. Correct? For that purpose, I compute the inventory turnover ratio. With the help of inventory turnover ratio, we can compute the stock holding period, and with the help of that, you can do FSN analysis. With the help of FSN analysis, you will know whether your stock raw material is fast moving, slow moving, or non moving. If it is non moving, means it is not all moving. Now it's got dead stock. What will you do? Don't keep it with you. Immediately scrap it off, realize some income and close it. Are you all able to understand? But slow moving, if it is there, try to improvise certain measures, bring it under fast moving. Is that clear? If it is fast moving, try to maintain it. Are you all able to understand this? This actually gives you to exercise control over your inventory. Are you all able to understand, guys? Yes? Fine. That's about this concept. Let's go and do one sum. Please take the next question, number 18. Right? The last concept in this particular chapter. From the following data of the year ended 31st of March, calculate the inventory turnover ratio of 2 items and put forward your comments. No comments, huh? Right? You will have to write your comments. For you to write the comments, first you should understand the concept, guys. Are you all able to get this? So you can't directly jump to the conclusion or comments by just mugging up and doing something. No, it doesn't work that way. Are you all able to understand? Now, how do we do this? Now, raw material wise, they have given opening stock, purchase, closing stock. Now, what is the formula for calculating inventory turnover ratio? Everyone, raw material consumed divided by average stock of raw material. Guys, correct? Average raw material is what? Opening plus closing by 2. That you know. Now, in this case, what is the raw material consumed? Now, raw material consumed is not purchased. It is opening plus purchase minus closing. Recall, raw material you have opening stock plus purchase gives you the total raw material available. Out of this, partly you can consume, partly will remain in your closing stock. Now, with this, how can I find out raw material consumed? Opening stock plus purchase. This is the total available. Out of that, how many kgs I have not consumed? The balance will give me what? The raw material value of raw material consumed. Are you guys able to understand? Hence, it will be what? 10,000 plus 52,000 minus 6,000. How much is that? 56,000. This is the raw material consumed. Are you clear with this? A. B is going to be 9 plus 27 minus 11. How much is that going to be, guys? 25. Guys, 25,000. So 56 and 25. You got the raw material consumed. Numerator, denominator. 10 plus 6 by 2. That's going to be 8. 8,000 here. And here it's going to be 9 plus 11 by 2. 10,000. Right? So now 56,000 by 8,000. How much is it? 7 times. 25,000 divided by 10,000. How much is it? 2.5 times. By looking at this itself, you can say material A has turned over 7 times. Means what? So many number of times it has got over, and we replenished it. Got over and we refilled it. So which means it means it is fast moving. No, guys, correct? Now, how will you arrive at the stock holding period? Simple. In a day, in a year, how many days are there? 365 divided by 7 gives you how much? 52.14. Rounded off. 52 days, or in other words, if I purchase raw material A today, it will take 52 days for me to completely empty it. Guys, correct? How about B? 365 divided by 2.5. So it will take 146 days for me to actually empty raw material B. With this, what can you conclude? You can say raw material A is relatively fast moving as compared to raw material B. Don't say this is fast moving, this is slow moving. No, we do not know. It depends on the industry also. We can only say between these two materials, this is fast moving. Material A is moving faster than material B. For you to write this comment, you should know that you should arrive at inventory turnover ratio. That is anyways given in the question. The next one is what? You need to arrive at the stock holding period, inventory holding period. Based on this only, you can arrive at the comment. Are you all able to understand? Right? And that is about this particular question. Please go and update your library of adjustments. Write down inventory turnover ratios with comments. Inventory turnover ratio with comments. We done? Yes. And guys, with this, we are done with this particular chapter. So literally, guys, we have seen components of material cost. Guys, correct? We saw EOQ without price discount, root of 2AO by C. EOQ with the price discount. We saw stock levels. What are the different stock levels? Reorder level, minimum level, maximum level, average level, danger level. Guys, correct? Then issues valuation. We see that in detail in our regular and exam oriented batches, right? But right now, for the purpose of this marathon, since it is a foundation level area, so I didn't do it here. Then stock out cost, we did the sum. You remember tyro tubes and tires, right? ABC analysis, we did inventory turnover ratio. This also we did. In fact, we did one more concept called as this one. Supplier selection, indifference point. Good. Supplier selection, that also we did. Treatment of losses, that is normal loss, abnormal loss. Ideally, it is a part of discussion in process costing. So that's a technical area in process costing. Hence, that also I have just reserved it. It's not for this purpose of marathon. So that's a detailed discussion which we generally do during our process costing area. But in this chapter, generally, if they test, it comes only from the areas which we have discussed till now. Is that clear, guys? Right? A comprehensive coverage for around 2 hours. Literally the entire chapter with the numerical problems we have done. Guys, now, one last time, I want you all to tell me stock levels. Come on, guys. Come on, everybody, online folks, whoever is watching this, come on. Tell the formula. Assume I'm standing in front of you. Tell to the screen it's okay. Come on, guys, everybody. First, reorder level formula. Maximum consumption into maximum lead time. Your mom will not let you go to bed with a hungry stomach, right? Next one. Minimum level formula. Reorder level minus normally what happens? Average consumption into average lead time. Next, maximum level formula. Reorder level minus everything happens in my favor. Minimum consumption into minimum lead time. Now that guy rings the bell and yes, plus reorder quantity. Next, average level formula. Two formulas. One is normal mathematical formula, arithmetical formula. Minimum level plus maximum level divided by 2. But logical formula. Minimum level plus half of reorder quantity. Next, finally, danger level formula. Average consumption into lead time during emergency purchases. Excellent, guys. Very good. That's all it is. And inventory turnover ratio formula. Raw material consumed divided by average stock of raw material. That's about it. EOQ formula. Root of 2AO by C. Literally, you guys have told all the formulas in this entire chapter. And that's about this chapter. And whatever formulas that you can find in this chapter, guys, I have neatly put it in, a different, ink, not only this chapter, throughout the subject for both costing and FM in our concept decoder. Literally, this itself is your main source of preparation, and this itself can be acted as a revision book also for you, right? You can revise from the same book which you used to prepare initially. Literally all the formulas are mentioned, and logic also we have seen. In fact, in our regular course and all, we actually spend more time and we spend more detail on the logics and detailed sum solving. But here, due to a shortage of time as well as for revision purpose, we are condensing the discussion, and that too, guys, in a span of just about 2 hours. This entire chapter, which is important from an examination perspective, we have covered. Is that clear, guys? Fine. So with this, we have completed this chapter called material cost. So now let's move on to the next one. So now let's start the revision of the next chapter, employee cost and direct expense. So this is A much awaited chapter, because I've seen so many students have commented on the comment section, like asking me for the revision of employee cost chapter. So yes, so then I considered, fine, let's do a full-fledged revision of this chapter, employee costs and direct expenses. Now guys, once again, this is a common chapter for CA and CMA students. Now in a CMA intermediate students, this direct expense is not there. It's taken as a separate chapter. But in CA Inter syllabus, they have given employee cost and direct expense. But trust me guys, this direct expense, there is nothing great here, because ideally this is already covered in your cost sheet chapter. Anyways, in this chapter, two parts are there, employee cost and the second part is direct expense. In employee cost, these are the learning objectives. We'll be seeing the the components of employee cost. Basically, in your employee cost, your wages, what are all the compositions? It comprises of what? Basic, DA, PF and all of that we'll be seeing. That is a very small thing. The most important aspect of this chapter is wage payment schemes. So you have something called as a time rate system, you have something called as a piece rate system, and then you have something called as bonus plans. And there are two bonus plans for our syllabus. One is called as the Halsey premium plan, the other one is called as the Rowan premium plan. So Halsey and Rowan are names of two individuals who have given their own manner in which bonus needs to be computed. And then there is a segment called as overtime, treatment of overtime in cost accounts. And then the fourth segment deals with the labor turnover ratios. And then there is also a concept called idle time in labor. That's a very small concept. So for the purpose of our marathon, I will be covering these four main important objectives of this chapter. Shall we get started? Yes. Now guys, if you see, you might have studied in your school days or even earlier, there are 5 factors of productions, probably known as 5 M's. Money, machine, men, material and methods. Money, capital. Machine, plant and machines. Men basically is your human resource. Men includes women, right? But excludes children. Child labor not allowed. Okay. Then material, of course, raw material. And methods means technology, latest methodology of converting your RM into FG. Now 5 factors of productions are important. Out of this, if you notice, the only living factor is men, basically human resource. Now the most difficult and the challenging part of any company is to handle human resource, because you do not know what motivates a person. Now an employee can be motivated by way of monetary benefits, money, or there could be non-monetary benefits like promotions, like maybe you increase the responsibility. There could be so many things. Now we are more concerned about the monetary benefit. How do I motivate my workers to make sure that they are working at the peak of their productivity and I extract the maximum work out of them? Is that clear, guys? That's the objective of this particular chapter. Now the first part deals with your components of employee cost. Now employee cost consists of what all? Basic, bonus, allowances, overtime premium, everything you add up. This is called as your gross wages. Guys, clear with this? Now let us say the gross wages comes out to rupees 100, right? Now sir, will I pay this 100 rupees to my employee directly? No. In reality, what happens? Government has made something mandatory. What is that? That is called as PF. Now let us say 100 rupees is the gross wages. This is basic, DA. It could also be all other allowances and all. Government says on top of this 100 rupees, the employer needs to contribute some amount towards the provident fund account of the employee. Ideally speaking, the provident fund belongs to the employee, but he can't take it today. He can take it only at the time of retirement. Is that clear? So now government says, let us say 12% of his salary, the employer will actually transfer it to his PF account. Whose PF account? Employee's PF account, right? Which means from the perspective of the employer, because he's having this employee, what is his cost? 100 plus 12, that is employer's contribution. Is that clear? Now how about employee? How much amount the employee will get? Now government has made it mandatory whatever amount the employer is contributing to PF, employee should also contribute to the PF. Is that clear? Now, what you can do, the company can pay this 100 rupees to the employee, and then the employees can, out of this 100 rupees, they can remit their share of 12 rupees to their PF. Guys, correct? Now, government knows this. If you give 100 rupees to the employee, he will spend everything. He will not transfer his share of 12 rupees. Hence, the government says, look, Mr. Employer, you don't pay this 12 rupees to the employee. On his behalf, you deduct 12 rupees and remit that 12 rupees also on his behalf. Is that clear? Hence, what is the cash received by the employee? 100 minus 12. The employee receives only 88 rupees. Now, what will happen? The employer, on top of this 100, he contributes 12 rupees right to the PF. This is called employer's share of provident fund. Right, over and above that, employee's share also, he deducts from his share and he remits it. This employee share is not a cost to me. This is ideally a part of 100. Instead of the employee paying it, government is asking me to pay it on his behalf. I'm reducing and I'm putting it there. Is that clear, guys? So literally, the monthly contribution will be 12 plus 12, 24. Guys, but what is the cost to the company? 100 plus employer's contribution. Is that clear? And what is the net cash received by the employee? 100 minus 12. Is that clear, guys? But what is the net amount of cash? What is the net amount of earnings to the employee? Obviously, it is going to be 100 plus 12. Guys, correct? Or you can say today he receives 88 plus 24 rupees is his savings which he will receive at the time of retirement. So 88 plus 24 comes out to 112. Obviously, the cost to the company is the earnings to the employee. Guys, obviously, one man's cost is another man's income. Guys, you go buy a pack of biscuit. You pay 10 rupees to the shopkeeper and you're buying it. For you, it's a cost. Correct? For the shopkeeper, it's an income. Guys, correct? That's the rule of world. Right? So here, that is a cost, but I'm talking about net cash received. Cash received, he will only receive 88. Is that clear, guys? Now, basically, that's what I have kept it here in the concept decoder book. Look at this. Cost the company will be what? The gross wage is 100 plus employer's contribution to PF, Provident Fund. There's something called ESI. ESI stands for Employee State Insurance. Now, for that also similar treatment is there. So you need to contribute some premium amount for the benefit of employee. Employee should also contribute something that gets deducted and all. Whatever you do in PF, ESI also it is there. The rate is different, right? They will give in the question. So add that whatever amount the employer is contributing, and on top of it, if he is giving any other perquisite, add them. That is going to be the cost from the perspective of company. Is that clear, guys? This is going to be treated as employee cost. Now, how much is the amount that the employee will receive? This gross wages minus all this employee's contribution to PF, ESI and professional tax, income tax and all you deducted. This is the net amount the employee will receive in cash. Is that clear, guys? This is how you compute the wage bill. So when you're talking about it from the company's perspective, this amount is the cost to the company. This will be treated as what? Employee cost. Are you all able to understand? If this employee cost is paid for the benefit of a direct worker, I call it as direct wages. If this is paid for a factory supervisor, I put it under POH. If this is paid for the benefit of let us say an accountant, I will put it under AOH. If this is paid for a salesman, I will put it under SOH. Is that clear, guys? Right? The treatment differs based on to whom you pay the amount. But what comprises of employee cost, that will remain the same in all the cases. Is that clear, guys? Right? That is about the first part of discussion. What is that? Employee cost computation. Is that clear, guys? Now, let's move on to the second part, the most important part. What is that? Wage payment schemes. Now, guys, wage payment schemes. Now, broadly, there are two ways in which the wages can be paid. Guys, please understand very carefully. Now, there are two methods in which I can scheme my wage payment. Let us say I am hiring workers to work in my factory. Now, there are two methods through which I can pay. There are two methods through which I can compute the wage amount that I need to pay. Is that clear? The manner of computing the wage bill can be done in either of the two cases. I can only follow one of the two. Right? Clear with this? What is that? One is called as a time rate system. The other one is called as a piece rate system. Now, what are the two? Time rate system. What is it? Simple. I hire workers. I tell them, look, sir, they will ask me, no, first thing, sir, how much you will pay, sir? That is the first question, no? I tell them, simple. Every day you come to my factory. Yes, correct. Now, whatever is the time you spend inside my factory, that time into whatever per hour I will pay you 100 rupees. Example, in a day they come and they spend 8 hours in my factory, right? I will pay how much? 8 into 100, 800. This will be your wages. Is that clear? If I compute the wages based on the time spent by employees in my factory, this is called as what? Time rate system. Under time rate system, how much will be the wages? Simple. Time taken into time rate. What is time rate? 100 rupees per hour. Are you all able to understand? It is cost is driven by what? Number of hours. Is that clear, guys? Hence, here I mentioned the rate per hour. Are you all able to understand? He spends how much? 8 hours. So 8 hours into 100 per hour gives me how much? 800 rupees. That's going to be the wages. Are you all able to understand? Is that clear, guys? Yes. Next one. No, I don't want to pay wages on the basis of time spent. Now, there is another method called as piece rate system. What is piece rate? Now, I tell my workers, look, I am not bothered about how many hours you spend in my factory, right? Simple. For every unit that you produce, let us say I will pay you 10 rupees. How much? For every unit produced, I will pay how much? 10 rupees. Now, one worker, he produced 100 units. What will I do? For every units you produce, I will pay how much? 10 rupees per unit. So, it's going to be how much? 1000 rupees is going to be the amount I will pay him. Are you all able to understand? Here, the manner of computing the wage bill is not based on the number of hours spent by him in the factory. It is based on the number of output that he produced. Is that clear, guys? Are you all able to understand? In this case, what will be the wages? Units produced into piece rate. Piece rate, how will it be expressed as? So much rupees 10 per unit. So here the cost driver is per unit, the number of units. Is that clear? The cost object here is per unit. Here it is going to be per hour. Is that clear, guys? Is everyone able to understand this? Yes. Now, so looking at the rate itself, you can find out which method the company is following. If the rate is per hour, then they are following time rate system. If it is per unit, then the company is following piece rate system. Is that clear, guys? Is everyone able to understand? Yes. Now, you tell me, between these two methods, which method will motivate the workers to work better? Piece rate. Why? Only if they work and produce the quality output, they will be able to earn more. Right? Whereas time rate system, they will be inefficient. Come to the office, come to the factory, just like that they do something. Anyway, sir, 8 hours if I stand here, they will pay me. Guys, correct? It's not that easy. Anyway, supervisors will be there. But whatever it is, anyways, they are not motivated to perform better. No. Anyways, even if we perform better, what will you do? You are anyways going to pay me only based on hours spent in the factory. Guys, correct? Now, time rate system lacks an inbuilt motivation. Am I right, guys? Hence, when the company is following time rate system, now what has happened? They can also follow a bonus system. Is that clear, guys? Along with the basic wages, if you are paying them bonus, then the workers will be motivated to work better. Yes. Are you all able to understand? Hence, you have two bonus systems. One bonus plan is given by a man called Halsey. Another bonus plan is given by a guy called Rowan. Is that clear, guys? Halsey, what does he say? Simple. First of all, understand. These two are bonus plans. When will you follow these bonus plan? Only when the company is following time rate system. Piece rate system already has the inbuilt motivation. No need for you to give you additional bonus and all. Are you clear with this? When the company follows time rate system, then a company can follow either Halsey plan or Rowan plan for paying bonus. What does Halsey say? Simple. You pay the basic wages under time rate system. How much is that? Time taken into time rate. On top of that, bonus, how much will it be? 50% of time saved into time rate. This is the manner of computing your bonus. Whereas Mr. Rowan says you pay the basic wages, time taken into time rate, plus the bonus will be time taken by time allowed into time saved into time rate. Sir, what are all these things, sir? We don't understand. I will give a numerical example for you. Now, let us say I have produced 100 units. Guys, let us say I have produced 100 units. Let us say the time allowed is 1 hour per unit. For every unit, you are supposed to take 1 hour. Time rate is what? Rupees 10 per hour, which means what? For every hour you work, I will pay you how much? 10 rupees. Perfect. Now, in this case, what is the total time allowed for the actual output? What is the time you are allowed to take? 100 into 1, 100 hours. Let us say our guy, a worker, has actually taken only 80 hours, which means time allowed was 100, time taken was 80. How much was the time saved? 20 hours he has saved. Guys, correct? Now, if I am following Halsey plan, what is he saying? Anyways, for every hour he has worked, pay the time rate 10 rupees. So 80 into 10, anyways you pay. Guys, clear? On top of that, pay bonus. Sir, how will I pay bonus? He says, how many hours he has saved? 20 hours. Now, on these 20 hours, had he worked, the company had to pay how much? 10 rupees. But he saved this 20 hours. Guys, correct? Now he says, on whatever hours he has saved, 20 hours, 50% you pay as bonus. He didn't work for 20 hours, still 50% of the bonus hours you pay. So he says 50% of time saved into time rate. So 50% of 20 into 10 is the amount of bonus. Is that clear, guys? So 80 into 10 is going to be 800. 50% of 20 into 10, how much is that going to be? 100. So overall, he will be paid how much? 900 rupees. Is this clear? Guys, are you all able to understand? So, what is the bonus computed under Halsey method? Guys, come on, everyone answer. 50% of time saved into time rate. Now, Rowan says, you pay the basic wages. What is that? Time taken into time rate. 80 into 10, which is going to be 800. Now, he doesn't agree with Halsey. He says, yes, your bonus should be some percentage on time saved into time rate, because that is the total savings he has made for you. Out of that, 50% you're passing on. That is what as per Halsey. But Rowan says, what is the logic for this 50? Why flat 50%? I will give you a manner of computing the percentage that you need to pay. What he says, simple. Time taken by time allowed into time saved into time rate. Is that clear? So he has saved how much? 20 hours into 10. How much percentage? Don't take 50%. I will give you a manner of computing the percentage. What is that? Time taken by time allowed. Time taken is how much? 80. Time allowed is how much? 100. So time taken by time allowed into time saved into time rate. In this case, it comes out to 80%. Are you all able to understand? Guys, so here the basic wage is going to be 800 and bonus is going to be 80 by 100 into 20 into 10. I think this comes out to 18 to 2, which is 160 rupees. Is that clear, guys? So the bonus paid under this system is going to be 800 plus 160. It is going to be how much, guys? 960. Is that clear for everyone? Right? So this is how you compute the bonus. Remember, Halsey and Rowan systems are followed only when the company follows a time rate system. Piece rate system, already there's an inbuilt motivation. You need not motivate them by way of bonuses. Is that clear, guys? Are you all able to understand? Now, there is another doubt which you guys might have. Now, sir, you are saying that these bonus plans will motivate him to perform better. Sir, let us say time allowed is how much? 100. Let us say he actually took 100 hours, which means the time saved is 0. In that case, there is no bonus. Am I right, guys? Am I right? Because in both the cases, time saved will be 0. There is no bonus. Sir, in that case itself, what will be his earnings? 100 into 10, he would have earned how much? 1000. Now, had he taken the normal time, he would have earned how much? 1000. Now, because he is being efficient and taking less time, even under this bonus scheme, Halsey says pay 900, Rowan says pay 960. Now, sir, had he not been efficient, he would have got 1000 rupees now, sir. Then how can you say that these methods are motivating him to perform well? Guys, are you understanding the issue? Now, I will tell you the issue here. No, it still motivates them. I will tell you how. Now, let us take Halsey for example. What is the total earnings, guys, under Halsey? Everyone? 900. Suppose there is no bonus. He took actually 100 hours. 100 into 10, he would have earned how much? 1000. Now, you tell me, he earns this 900 rupees by spending how many hours? 80 hours. Am I right, guys? Whereas this 100 hours he earns by spending how many hours? This 1000 rupees he spends by earning 100 hours. Now, effectively for every hour spent under Halsey, how much he earns? 900 by 80. How much is that? 11.25 rupees he earns for every hour worked. Whereas under a no bonus plan, he earns only 10 hours, 10 rupees per hour. Now, if you look at this, he works only for 80 hours, no? For each of the 80 hours, he's earning how much? 11.25 effectively. The balance 20 hours is available. Maybe he'll work for another job. There once again he will earn some bonus and the normal wages. Are you clear with this? So definitely he is being motivated to perform well. Are you all able to understand this? So don't compare the absolute earnings. Here it might be more. Compare it on the basis of effective earnings per hour. Then you will see that these bonus systems will incentivize him to perform well. Are you all able to understand this? Is this clear, guys? Right? Now, I'm just summing it up. First, there are broadly two methods of wage payment scheme. One is called as time rate system. The other one is called as piece rate system. Time rate system. How will you pay the wages? Time taken into time rate, right? Whereas piece rate system, units produced into piece rate. Piece rate is per unit. Time rate is per hour. Now, piece rate system naturally motivates the workers to perform well. Whereas that is not the case with the time rate system. Hence, what should you do? Introduce a bonus plan. Now, there are two different bonus plans. One is called as Halsey plan. The other one is called as Rowan plan. Halsey plan, what he says? Pay the basic wages plus 50% of time saved into time rate. Whereas Rowan says what? What is the logic for 50%? There is no logic. I will give you a manner of computing that percentage. What is that? Time taken by time allowed into time saved into time rate. Is that clear? Pay the basic wages plus this figure as bonus. Is that clear for everyone? Is that clear for everyone? Now, remember this. The first guy, Halsey, says 50%. Rowan has this different method, complicated method of computing bonus. Is that clear, guys? That's all this area says. Fine. Let's go and do one problem here. Shall we? Guys, shall we? Yes. Question number 2. A very, very good sum. This is how your exam questions will look like. Shall we begin? Yes. Now, during 1 week, the workman X manufactured 200 articles, 200 units he produced. He receives a wage for a guaranteed 44-hour week at the rate of rupees 15 per hour. Okay, guys? Yes. So what is he saying? What is he saying? In a week, this guy produced how many units? 200 units. He received wages for how much? 44 hour at the rate of 15 per hour. This 15 per hour means what? They are paid under time rate system. Very good. That is the first observation. So this 15 rupees per hour indicates that he is being currently paid under what method? Time rate system. So this is basically under time rate system. Is that clear? Next. Now, currently, he works for 44 hours in a week. The estimated time to produce one article is how many minutes? 15 minutes. 15 minutes means how many hours? 15 by 60 is 0.25. 1/4. 0.25 hours. So, to produce one unit, you are allowed to take how many hours? 0.25 hours. Is that clear? Yes. Next. The estimated time is given. And under the incentive scheme, the time allowed is increased by 20%. Means what? Incentive means Halsey Rowan, for the purpose of computing the time allowed under Halsey Rowan, increases 15 minutes by 20%. Is that clear, guys? Are you all able to understand? Calculate his gross wages under each of the following methods of remuneration. Number 1, if he is being paid only under time rate, what will be his total earnings? Number 2, if at all he is being paid under piece rate with guaranteed weekly wage. What is guaranteed weekly wage? I will tell you. What will be his total wages? Suppose he is paid under Rowan scheme, how much? If he is paid under Halsey scheme, how much? Under these 4 systems, we now need to compute. Shall we get started, guys? Yes. Simple. If he is paid under time rate. Now, you think, guys, everyone, focus here. In a week, he produces, we are talking about 1 week. He produces how many units? 200. I am following time rate. Am I bothered about how many units he produces? No. Time taken into time rate. How much time you took? 44. What is the time rate? 15. 44 into 15. How much is that? So 44 into 15. So in a month, for this week, you will be paid how much, guys? You will be paid 660 rupees. Is that clear for everyone? Guys, are you all able to understand this? Any problem? No. No. Sir, piece rate, sir. If I am paid under piece rate, how much will it be? Now, piece rate, what is the formula? Number of units produced. Sir, he produced 200 units, sir. Into piece rate. What is piece rate? The rate that he is willing to pay per unit. Now, is the piece rate given in the question? Guys, is the piece rate given in the question? It's not given in the question. So you need to find out the piece rate. Sir, how can we find out the piece rate, sir? Now, simple, identify this. Now, what are they saying? If at all the company is paying under time rate, they are willing to pay how much? For every hour they are willing to pay 15 rupees. Correct? Yes. Now, look at this. One more thing they have given. Now, to produce 1 unit, they are allowed to take how many minutes? 15 minutes. Or 15 minutes is nothing but 0.25 hours. Am I right? Now, for 1 unit, you are allowed to take 0.25 hours. Which means, in 1 hour, how many units can you manufacture? Simple. 1 divided by 0.25. Guys, correct? How much is that? 4. Simple, pa. For 1 unit, you are allowed to take 15 minutes. In 1 hour, you can produce 4 such units, no? So, in 1 hour, you can produce how many units? 4 units. Now, with this, you can identify the intention of the company. For every hour, they are willing to pay 15 rupees. For every hour, they are expecting you to produce 4 units. Or in other words, they are willing to pay you 15 rupees for every 4 units produced. With this, you can understand the intention of the company. So, if at all the company is scheming a piece rate system, this is how they would scheme it. Guys, correct? Are you all able to understand this? Hence, what will you do it here? So, in this case, what should you do? So, 4 units, they are willing to pay 15 rupees. Or per unit, how much are they willing to pay? 15 divided by 4, it comes out to 3.75 rupees per unit. Is everyone able to understand? This is the step. Are you all able to understand this, guys? Clear with this? Right? So what you can do is, now with this you arrive at the piece rate, which comes out to 3.75 rupees per unit. Guys, are you all able to understand? Now, if at all he gets paid under piece rate system, what would be his total earnings? 200 into 3.75. How much is that? 750 rupees. Is that clear, guys? And that's exactly what's being done here. It's going to be how much? 750 rupees. Are you all able to understand this? Are you all able to understand? Is that clear, guys? Everyone? Yes? Now, look what they have given. But then what is this guaranteed weekly wage, sir? I will tell you. Piece rate with guaranteed weekly wage. Now, under piece rate system, his total earnings comes to 750. Guys, correct? If he is paid under piece rate system, his earnings depends on what? The number of units produced, Suppose in a week, they have a very low demand. Company itself is asking him not to produce much. Now you tell me, in this case, he is ready to work, but the company doesn't want him to produce more units. Sincerely, he will get affected, no? Guys, correct? So what the company will tell him is, look, don't worry. You will be paid under piece rate system. But suppose if the amount as computed under piece rate system, if it comes below the time rate system, 660 rupees, then I will pay under time rate system. Don't worry, you will not be paid less. Or in other words, you are definitely guaranteed of 660. But if the amount that comes under piece rate is more than 660, then I will be paying you under piece rate system. If the amount is coming less than 660, then you will be paid the guaranteed time rate. Are you all able to understand? Or in other words, in this case, so the amount computed under piece rate or the amount computed under time rate, whichever is higher, I will pay him. Guys, correct? Are you all able to understand? If this amount comes to just 550 rupees, example, I will be paying him 660. If it comes out to 600, I will pay him 660. If it comes to 659, I'll still pay him 660. But if this comes out to 800, then I'll pay him 800. Is that clear, guys? That's what is called as guaranteed weekly wage. Weekly means time rate. So it is piece rate with a guaranteed time rate. Are you all able to understand? Is there any issue here? That's what I've mentioned here in the book. If this piece rate wage turns out to be less than 660, then he will get a guaranteed weekly wage of 660 rupees. Is that clear? Now, next one, what is that? Rowan. Rowan is the second guy. Guys, don't get confused. I'll say Rowan. HR. In alphabetical order, if you see, A, B, C, D, E, F, G, H. H comes first. First one is a easy method, 50. R comes later, complicated method. What is that? Time taken by time allowed into time saved into time rate. Complicated method. Okay, relatively complicated method. Is that clear, guys? Correct. So the first one, H is flat 50, simple method, and second R, HR, human resource. Okay, remember it like that. Okay, now row 1 premium. Now how will you pay him? Now in this case, I need to compute what? Guys, what all I need to compute? Come on, everyone. Time taken, time allowed, time saved, time rate I already have. Now time taken, how much time he took? 44 hours. 44 hours. Is that clear? What is the time allowed? Now look at this. What have they mentioned? What have they mentioned? They have actually produced how many units, guys? 200. Every unit you are allowed to take how much? 15 minutes. But wait, the time allowed is increased by 20% for the purpose of a incentive scheme. Are you all able to understand this? Which means 50 into 1.20 or 120% is going to be the revised time allowed per unit. How much is that? 18, huh? Guys, correct? So 18, you are allowed to take 18 minutes per unit. Guys, are you all able to understand this? Are you all able to understand this? So for every unit, you are allowed to take how much? 18 minutes. Or if you want to convert this into hours, it's going to be 18 by 60. Guys, correct? And actually, how many units have I produced? 200. So the time allowed will be how much, guys? It's going to be 18 by 60 into 200. How much does it come out to? How much does it come out to? This gets knocked off. 6 3s are 18. So 3 2s are 6. It's going to be 60 hours. Guys, correct? Are you all able to understand? Any problem here? So now time allowed is 60. But you've actually taken only 44 hours. Which means you've saved how much for the company? 16 hours. Is that clear, guys? Is that clear? So now if you're being paid under your Halsey or Rowan. First under Rowan. Rowan. Basic wages. He will be paid. What is the time rate, guys? Time rate. No. Time rate. 15 per hour. Am I right? So anyways, 44 into 15 basic wages. Whether I'm following Halsey or Rowan, I'll be paid. Am I right, guys? So 15 into 44 into 15. How much is that? 660 rupees anyways will be paid. Correct? Next, bonus alone will be different. If I am doing it under Rowan scheme, time taken by time allowed into time saved into time rate. Time taken 44, time allowed 60, time saved 16 into time rate 15. How much does it come out to? 175.9, round it off to 176. So now the total wages under Rowan is going to be how much? 660 plus 176. It works out to how much, guys? It works out to 836. Is that clear, guys? Are you all able to understand? Is there any problem here? You guys are now understanding? Suppose if the same guy is being paid under Rowan's Halsey system. Basic anyways will be the same. Time taken into time rate 15 is going to be 660 rupees. What is going to be the bonus? 50% of time saved into time rate. Now 50% of what is the time saved, guys? 16. So it's going 50% of 16 is going to be 8. So 8 into 15 rupees. How much is that? So it's going to be 120. So 660 plus 120 is going to be how much, guys? It's going to be 780 rupees. Is this clear? Is this clear? So we have got all the answers that we want. So simple time rate is going to be 660. Then straight piece rate, simple piece rate 750. If row 1 is followed 836, Halsey is followed 780. Now, sir, under the 4 methods can I follow all the 4 at a time? No. Right? Any one the company has to follow. For a worker, maybe worker wise they can have difference, but will you be paid first under row 1 and then under Halsey? 2 times they will pay salary, yeah? No, they will not pay you. Guys, clear? Are you all able to understand? The company has to choose a method. Guys, clear with this? It's a very good question to cover the entire concept of your Halsey, Rowan and all the wage payment schemes. Is that clear, guys? Right? Of course, in our regular and exam oriented batches, we'll be doing fully all the sums, but I wanted to take one representative sum and solve it and show it to you as to how it works. Clear with this, guys? Fine, that's about the sum. Please go and update your library of adjustments. Right now, comprehensive sum on time rate, piece rate, Halsey and Rowan. Comprehensive sum on time rate, piece rate, Halsey and Rowan. Done? Right, fine guys. So that's about this particular question. Now, guys, let's move on to the next segment of discussion, which is regarding treatment of overtime. Treatment of overtime. So all these things we have done, every single sum we have worked out during our regular class. In fact, our regular class students are sitting happily here. Okay. Right. Now, let's start, guys. So now, let's move on to the next one, which is called as a treatment of overtime. A very important discussion. Now, guys, what do you mean by overtime? What do you mean by overtime? Overtime refers to what? Working beyond your normal working hours. Let us say my office is between 10 a.m. to 6 p.m. If they are asking me to work before 10 a.m. or after 6 p.m., that time is called as overtime. And let us say my office timing is Monday to Friday. If they are asking me to work on Saturdays, Sundays, that is also overtime. Any time beyond my office hours is called as overtime. Now, when you are making your workers work during the non-office hours, now obviously you will have to pay them a little more than what you generally pay them. Guys, correct? Now, that extra amount that you pay is called as a overtime premium. Is that clear? I will give you an example. Let us say, guys, the normal wage rate is 100 rupees per hour. For every hour the worker works, he will be paid how much? 100. In a day, generally he should work only for 8 hours. But what happened? I made him work for 10 hours, which means I made him work for these extra 2 hours. For these 2 hours, you tell me, will I pay him 100 or slightly more than 100? More than 100. Let us say I pay him 1.5 times the normal wages, which is I pay him 150 rupees. Is that clear, guys? Is that clear? Now, what will be the total amount of wages I will be paying him? Now, guys, this will be first normal hours, 8 hours at the rate of 100, 800 rupees, correct? Next 2 hours beyond the office hours at the rate of how much? 150. The amount will be how much? 300. What is the total amount? 1100. Now understand, this 800 is called as a normal time wages. This 300, which amount, whatever amount I paid for those 2 hours extra, is called as overtime wages. Now guys, please understand what is the total normal wages that I'm paying. It is 10 hours into 100. 10 hours into 100 is going to be my normal wages. Sir, why, sir? Look, those 2 hours he worked beyond office hours, no? Whether he worked beyond office hours or not, whichever hour he works, definitely 100 rupees I need to pay. That goes without saying. Guys, correct? Because he worked during the after the office time, how much I paid extra? I only paid extra 50 rupees. That 50 rupees treatment alone we are talking about here. Hence, the normal wages is total hours into normal rate. Guys, clear? And what is the overtime premium? It is that extra hours into that extra amount of 50. 2 into 50, 100 rupees. Is that clear, guys? So always understand we are talking about treatment of overtime premium, not overtime wages. Is that clear, guys? Yes. Now here out of this 1100, 1000 rupees is always treated as a direct wages. Now this 100 rupees, what is the treatment for that? Should I treat it as a direct wages, or should I treat it as production overheads, or should I take it to my costing period? What is going to be the treatment? We need to see. Is this clear, guys? Are you all able to understand this? So here we're talking about the treatment of overtime premium, not the treatment of overtime wages. Is that clear, everyone? Now, that is clear. Now let's move on to the next one. Okay, sir, fine. Now, how do you treat overtime premium, sir? What is the manner of treatment of overtime premium? There is no single treatment. Now, the treatment of overtime premium depends on the reason why you are making your workers work overtime. Is that clear? Now, there are 4 possible scenarios why you can make your workers work overtime. What are the 4 possible scenarios? Scenario number 1, overtime is a regular feature. That is, it is generally a company's policy. Second reason, overtime due to customer specific request. Third one, seasonal demand. Fourth one, abnormal reason. Sir, can you explain? Yes. Overtime is a regular feature. What is this? Let us say the company is a conjuice company, right? Now, let us say for the workload which the company has, ideally they should have hired 100 workers. But what did the company do? They didn't want to hire 100 workers and pay wages and all. They hired only 70 workers. Now, for a work which requires the presence of 100 wages, if you want to get the same work done using just 70 workers, obviously each of these 70 workers, you will have to make them overtime, work overtime every day, right? So Saturday, Sunday, all days are Monday only for them. Every day you will make them work, guys, correct? Before office, after office, if possible, you will also give them accommodation, stay here only, guys. Now, in this case, you tell me, is it really an overtime? No. Had you employed 100 workers, you would not have entered into the situation at all. Now, you wanted to save the cost of extra 30 workers. 30 workers, full cost itself you're saving. For that, for each of these 70 workers, extra little amount you pay. That is overtime premium. Now, ideally speaking, this is not a case of overtime at all. It is because of your company's staffing policy that you are making them work overtime. This is not treated as overtime. I will treat it only as direct wages. Are you all able to understand this? Substance over form. Is that clear? You call it overtime, but ideally it's not overtime. You are saving some money. That's why you are making them work overtime. Hence, in this case, it will be treated as a part of prime cost. That is direct wages. Is that clear? Next one. Overtime is due to customer's specific request. Now, what is this? Now, let us say, guys, a particular job, right? Let us say it takes, example, it takes 6 hours to complete a job. Okay. Now, let me give you an example which you guys might relate. Income tax filing. Okay. Let us say you are an article, right? You have to do income tax filing. Okay, guys. Now, in this case, what happens? Let us say for a particular return, it takes 6 hours to file this ITR. Okay. Now, what happens? Your office time is generally 9 a.m. to 6 p.m. Okay. 9 a.m. to 6 p.m. Now, this particular work takes how many hours? 6 hours. One particular client's income tax return takes 6 hours. Okay. Now, what you did, you started this work at 3 p.m. Okay. Now, 3 p.m. to 6 p.m. today, how many hours have gone? 3 hours. Now, this job will take how many hours? 6 hours. So, 3 more hours are required. What you said? Sir, tomorrow I will come and you do. Your boss also said, okay. You packed your bag and when you're about to leave, the client came inside and he said, sir, I want the ITR today itself, sir. Please file it today itself. Then your boss said, if I make him work overtime, then it will cost extra. The client is saying, customer is saying, sir, don't worry, I will pay you. Whatever is extra, I will pay you. Now, what you did, instead of completing this work tomorrow morning, your boss, his favorite job, asked you to work today itself. He asked you to stretch after the office hour. Sir, instead of 6 p.m., work for 3 more hours. What? Till 9 p.m. you work. Are you able to understand this? Now, the same work would have been done tomorrow. But the customer asked you to do it today. And for each of these overtime hours, in our example, in this case, now there was an extra premium of 100 overall. Guys, correct? Now, this the customer is willing to bear. If that is the case, now what will you do? You will treat it as a direct wages. But remember, of that particular job alone, you will treat it as a direct wages. Is that clear? Why? The customer is willing to bear it. Are you all able to understand this? Next one. Suppose overtime is due to seasonal demand. What is this, sir? Example. Let us say we are talking about a sweet manufacturing company, laddu manufacturing company, right? During the month of Diwali, or before the month of Diwali, right? Why Diwali? Elections. You have elections this year, right? 2026 elections, right? Now, obviously, the sweet shop, these guys will they will get one contract from all the parties, right? One party will win, but all the party contract they will get, correct? Right? So, anyway, someone has to celebrate. Now, there will be one winner at least. Whoever is the winner, it doesn't matter for me. I will only make laddus and give it to them, guys, correct? Now, during this season, peak season, heavy demand is there. Guys, correct? Now, because of that heavy demand, every year once it will be there. right? Maybe because of Diwali or something like that. 1 or 2 months, there will be heavy demand. Now, because of that, I make my workers work overtime. Now, this is not a regular feature. This is also not due to one customer's request. This is my general nature of business. So, I will treat it very much as a product cost only. But this is seasonal in nature. I will treat it as an indirect manufacturing cost, and I will treat this overtime premium as a production overheads. Is that clear, guys? Are you all able to understand? Reason, it is related to my business, but not directly specified to one particular job or unit. Is that clear, guys? Hence, I will take it as POH. Next one, overtime is due to abnormal reason. For example, after COVID, the staffs were asked to work extreme overtime. Now, because of that abnormal reason, rarely it happens. In that case, now take it to costing P&L, treat it fully as period cost. Is that clear, guys? So how many reasons are there? 4 reasons. Reason number 1, company policy, conjuice, right? Treat it as a direct wages of all the jobs. We will see the treatment. Number 2, customer specific request, take it as direct wages of that particular job. Next one, seasonal demand, POH, abnormal reasons, costing P&L. Is that clear? Now I'll give you an example. Mr. X, he works for a total of 120 hours, breakup. Normal hours, 100 at the rate of 10. Overtime wages is 20 hours at the rate of 15. Overall, 100 into 10, 1000. 20 into 15, 300. Total amount, 1300 they pay. Job A, 70 hours. This job A includes 20 hours of overtime. Guys, job B, 50 hours, all normal time. 70 plus 50, total how much is it? 120. That is the total number of hours he has worked. So which means the entire overtime is worked on job A. Is that clear, guys? Is that clear? Now, scenario number 1. If overtime is a regular feature, now what happens? Guys, overtime is a regular feature. Now, every day I'm going to work overtime. Guys, correct? Maybe this particular day, I started in the morning with job B. I finished it during my office hours. Then, job A, 20 hours alone, I worked in overtime. Now, this was coincidental. Maybe in this day, I started with job A. Overtime hours, I would have worked on job B. Or in other words, this is not job specific. This is because of the company policy. They have made me work like that. Are you clear with this? In this case, what will I do? Simple. What is the total labor cost? 1300 divided by all the total hours. 120 hours. So I get 10.83 rupees per hour. This is the effective wage cost per hour. Right? Job A, I spent 70 hours. Job B, I spent 50 hours. Multiply that respectively with the average labor cost, and you will arrive at wage cost job wise. Is that clear, guys? So you take the total wages divided by the total labor hours, arrive at the labor cost per hour, and evenly charge it to all the jobs. So here, though this 20 hours was worked exclusively on job A, now it is not job specific. Right? It was because of the company policy I made to work. Maybe in the morning I started job B. I finished entirely during my normal time. So the overtime was used on job A. Anyways, overtime I will work. Maybe had I started job A in the morning, job B I would have worked overtime. That's all. Are you clear with this? Hence, both the jobs were equally likely to be subject to my overtime. Hence, it is not job specific. Average everything and charge it evenly to all the jobs. Is that clear, guys? In this way, what happened? So, job A's wage cost was 758. Job B's wage cost was 542. Overall, 1300 rupees entirely treated as a prime cost. Is that clear, guys? Now, scenario number 2. What happens? Overtime is due to customer specific request. Now, in this case, am I a conjuice company? No. The overtime generally is not required, sir. Sorry, every hour, I generally pay only 10 rupees. Right? But suddenly, on one job alone, right, that is job A alone, they asked me to work overtime, but the customer was willing to bear that. Right? In this case, what will I do? Very simple. So now, this overtime premium, how much is the overtime premium? 20 into 5. Am I right? So 20 to 5 is 100. This 100 rupees has to be borne only by job A. Why this is job specific now? Are you all able to understand? Right? How will it be? Simple. So what will you do here? 70 into 10. Guys, entire 70 hours into 10. Plus on this 20 extra I pay how much? 5. Is this clear, guys? So 70 into 10 plus 20 into 5, it comes out to 700 plus 100. 800 rupees will be the labor cost charged to job A. Job B, 50 hours, everything normal time into 10, 500. So it's going to be 1300. So here also entire amount is treated as prime cost, that is direct wages. But look at the composition, 800, 500. Whereas the previous situation, 758 and 542. If you notice the difference, here the entire job A, right, the entire overtime premium was entering into job A. Whereas in this case, the overtime premium was properly apportioned between A and B. That's why B had a cost of 542. Whereas normal time, if I take, it's only 500. Are you clear with this? Now you guys are able to understand the logic here. Ultimately, both the amount, in both the cases, entire amount was treated as a direct wage, but job-wise apportionment was different. Is that clear? This is a very, very important thing to understand. Next one. Sir, overtime is a seasonal demand, sir. Overtime is due to seasonal demand. In this case, what will you do? Sir, this overtime premium is not job specific. What will I do in this case? Simple. 20 into 5, 100 rupees of premium. I will take it to what? Production overheads account. Which means every hour I will charge it only with 10 rupees. Guys, correct? Right? No. Though this 20 hours of overtime was worked on job A, once again, it is not job specific. It was season specific. Guys, correct? This season is very, very hectic. Coincidentally, today in the evening, I worked on job A. Because morning I started with job B, evening time I spent on job A. Had I started the morning with job A, right, I would have spent the evening time, overtime on job B. So in this case also, both the jobs were equally likely to have been worked on this overtime. Guys, correct? So this is not job specific. Is everyone able to understand this? Hence, in this case, what will you do? So this 20 into 5, take it out, 100. Treat it as production overheads. Now, for each of the jobs valued at the rate of 10, so 70 into 10, 700, 50 into 10, 500, that alone will be treated as what? So 70 into 10, 700, 50 into 10, 500, 1200 rupees will only enter into your prime cost component, basically direct wages. So the balance overtime premium, 100 rupees should be taken to POH account. Is that clear? And in the last situation, overtime is due to abnormal reasons. Exactly same as scenario number 3, only one difference. Instead of taking this 100 rupees to POH account, take this 100 to costing P&L. Everything else is the same. Are you all able to understand? That's about the concept of overtime premium. A very, very, very important discussion, guys. Generally, many students tend to mug this up. Please understand the logic why you're doing, and that's about this particular segment of overtime premium. Is that clear, guys? Right? Remember, we're talking about the discussion of overtime premium, not overtime wages. Right, guys? So with this, the third concept called overtime premium is also over. Now, let's move on to the last concept of discussion, which is called as labor turnover. Now, guys, labor turnover. Now, what do you mean by labor turnover? Labor turnover refers to the rate of change in the workforce. So, what do you mean by this? I have a company. Now, every month, some people will come in, new people will come in, existing people will go out. Next month, some more new people will come in, some more existing people will go out. Guys, correct? So, there is a poem, for men may come and men may go, I go on forever. Right? Alfred Lord Tennyson, in his poem called The Brook, he says this, very famous. Now, similarly, the company goes on forever. Correct? Right? For men may come and men may go, the company keeps on going forever. Now, this labor turnover, this is one, we will be seeing about 3 ratios, labor turnover ratios. It captures the rate of change in the workforce. Is that clear, guys? Are you all able to understand this? Are you all able to understand this? Yes. Now, in this labor turnover segment, now for your examination purpose, now there are 2 types of questions which you can expect. One type of question is about calculating labor turnover ratios. The other type of question is regarding calculation of profit foregone because of labor turnover. Now, guys, labor turnover, you guys tell me. Now, when I am recruiting a new person, right? Now, obviously, there will be recruitment related cost. I will have to find the right talent, right? And I need to hire him, and I need to train him. And of course, during the course of his employment, I need to make sure that he works properly and all that. Training is very much required. Is correct? Now, suppose an employee comes, he gets trained, 3 months he stays and he leaves. Now you tell me, once again I need to find another employee, train him and do all these things. Basically, if the labor turnover is high, Now it results in huge amount of cost for the company, guys. Correct? Now, because of a high labor turnover, what is the impact of profit is what we will be computing in the next second segment of, the second type of problems in this area called as labor turnover. Is that clear, guys? Are you all able to understand this? Yes. Now, high labor turnover represents frequent entry and exit of employees. Is that good? Definitely not. It is bad. Then, sir, low labor turnover, is that good? That is also bad. Why? It means there is no movement of employees, which means when a person joins, it is like on government job. He will stay there forever, right? Till 60, 65. So he will also stay along with the company. He will also keep saying this, I will also go on forever. Now, old talent, you will not get fresh blood. Young talent you will not get. You will be exposed to old talent only. Now, when he joined, maybe Indira Gandhi was a prime minister. So at that point he would have joined. So he would have been used to writing letters and all, right? Instead of using systems, computers, message and all. So if he still continues and he says, no sir, accounting, I will put only debit, credit, no system. Obviously the company cannot go on forever. So what happens in this case? No, you are not attracting fresh talent. Guys, correct? So remember, a high labor turnover represents a frequent entry and exit of workforce, which is bad. And a low labor turnover represents what? A very rare movement of workforce, which is also bad. There has to be a balance. Is that clear? Is that clear, guys? Fine. Any problem, any issues here? Now, quickly, let's have a look at the different labor turnover ratios available. Different labor turnover ratios available. Now, one second. Labor turnover ratios. Yes. Now, labor turnover ratios. There are three popular methods in which you can compute the labor turnover ratio. One is called the replacement method. Then you have a method called separation method. Then you have a method called the flux method. Replacement method. How will you compute your labor turnover? Very simple. Number of replacements divided by average number of workers into 100. Separation method. Number of separations divided by average number of workers into 100. Now first, what do you mean by average number of workers? Opening number of workers plus closing number of workers divided by 2 is called as average number of workers. Is that clear? In a month, let us say opening workers were 120, closing workers were 80. What is the average workers? 180 plus 80 by 2, which is 100. Am I right, guys? Are you all able to understand? Fine. Now, replacement method, separation method, the first two methods. First, we will see what do you mean by separation. Simple, guys. Separation means the total number of people who have moved out of my company. I have a company. The total number of people who have moved out in this particular period, right? It could be a month or a year, whatever it is. Let us say a total of 50 people in this month moved out of my company. Sir, why, sir? There could be so many reasons. One, retirement, or I actually forced them to resign. I threw them out, or death. There could be so many reasons why people move out. They are saying, so under the separation method, how do you compute the labor turnover? Turnover does not sales, guys. So here what will you do? Total number of people who have moved out, separations, divided by average into 100. Very simple, no? Yes. Next, replacement method. Now replacement method, how will you compute? Simple. Total number of replacements divided by average number of workers into 100. Sir, what do you mean by replacement? I will tell you. Now, guys, let us say this month totally 5 people moved out of my company. 5 people moved out of my company, right? Now, let us say I hired 8 new people. How many people moved out? Everyone? 5. But I hired how many people? 8 people. Sir, why did you hire 8? I will tell you. Out of these 8 people, 4 people took the positions which these people vacated. That is, 5 people moved out of the company. Now, out of these 5 existing job vacations, the newcomers, 4 newcomers took the positions. Is that clear? Or in other words, 4 people replaced my existing workforce. Is that clear? So then what happened to this one? I thought this one position is not even required. I don't know why I had this guy. That's why I only sent him out. Is that clear? So in this case, the number of replacement is how much? 4. Are you all able to understand? Replacement means what? The number of people that I've hired who will replace the existing people who went out. Are you all able to understand? Sir, but you hired 8 people, no? Out of that, 4 are only replacements. Who are the balance 4? Now, these 4, now I hired them because I am having an expansion program. I created 4 new job positions. Is that clear, guys? Are you all able to understand? Hence, in this case, under replacement method, I will not take 8. I will only take 4 as the number of replacement. So, replacement method, what is the formula? Number of replacements divided by average number of workforce into 100. Is that clear? Separation method, number of separations divided by average number of workers into 100. Is that clear, guys? Now, understand one thing. In this case, I hired 8 people new. 4 people were replacements. 4 people were new joinees. Is correct? Are you understanding? Sum total of your replacements and new joinees, or in other words, it's going to be 8 people. This is called as accessions. Accessions means what? The total number of additions made. Is that clear, guys? That's called as accessions. Are you all able to understand? Now, let's go on to the third method. The third method is called as flux method. What is it called as? Flux method. Now, what it says, very simple. Flux method says total number of separations means what? People who have moved out plus total number of accessions means what? Replacements plus new joinees, or in other words, simple. Separation, exit, accessions, entry, total exit plus total entry divided by average number of workers into 100. Is that clear? Very simple to remember, guys. Correct. So, flux method captures both the entry and the exit. Separation method captures only the exit. Replacement method captures only the entry of those people who exited. Is that clear? Not the total entry also. Is this clear, guys? Are you all able to understand? That's all, guys. Now, with these 3 methods, sir, so I get some percentage ratio, no? So, what is the meaning of that? It has no meaning by itself. So, you compute your company's ratio, compare that with your industry's ratio. So, generally in this industry, this much is allowed. Now, compare your ratio with the industry ratio and see whether your employee turnover is more or less, or more or less the same. Is that clear, guys? For that purpose only, we do this employee turnover ratio calculation. Is this clear? Guys, are you all able to understand this? Right? And that's about this particular segment called as employee turnover ratios. Is that clear, guys? Now I put a doubt buster here. The accessions represents the total number of workers joined, including the replacements. Is this clear? Fine, guys. That's about this particular segment called as labor turnover ratio. Now let's move on to the second part of this labor turnover ratio, which is profit foregone. Now this has some marginal costing related concept. We've already revised marginal costing. So now let's get started here. Now, profit foregone. Because of the change in the workforce, now what is the impact on my profitability? We will be seeing it here. So please take, I think it's question number, one second. I think it's question number 14, if I'm not wrong. 14, no? Yes, question number 14. Now, guys, a very important question. Now, the management of BR Limited is worried about their increasing employee turnover in the factory, and before analyzing the causes and taking remedial steps, it wants you to have an idea of the profit foregone as a result of employee turnover last year. Now, what are they saying? Last year, the sales amounted to 83,03,300. The PV ratio was 20%, which means how much is the contribution? So 83,03,300 into 0.2. How much is that? Yes, it's going to be how much? So the contribution made was 16,60,660 rupees. Correct? Yes, in the previous period. Right. Now, what are they saying? The actual number of hours worked by the direct employee force was 4.45 lakh hours. Means what? In the last year, the total number of actual hours worked was how much? 4,45,000 hours. The actual direct employee hours included 30 hours attributable to training new recruits, out of which half of the hours were unproductive. Now, what are they saying? Now, in the last year, the actual direct labor hours were how much? 30,000 hours. Now, out of this 30,000 hours, 50% of the time were unproductive. Means what? They actually worked for 30,000 hours. Since I was training them, they were slow. They obviously initially they will be very slow, right? So ideally 50% of the time was unproductive, which means whatever they took, whatever time they took, that is 30,000 hours, ideally speaking, the job could have been done in 15,000 hours, which means the balance 15,000 hours were actually unproductive. Is that clear, guys? Is that clear? Which means this 4,45,000 hours included 15,000 unproductive hours. Am I right, guys? Which means in the last year, effective productive hours were how much? Just 4,30,000 hours. Is that clear? By spending 4,30,000 hours, they were able to generate a contribution of 16,60,660. Am I right, guys? Fine. Have this in your mind. Next. As a result of the delays by the personnel department in filling the vacancies due to employee turnover, 1 lakh potentially productive hours, excluding the unproductive training hours, were lost. What are they saying? Now, whenever an employee went out of my company, immediately my HR team should have hired someone new. Had I hired someone new, then I would have put them to work immediately. Now, but these guys, what they did, there were some delays in filling the vacancy. Because of that, I lost 1 lakh potentially productive hours. Means what? This 1 lakh is not included here. This 1 lakh was never worked at all. Had they properly and hired them timely, what would have happened? I would have got 1 lakh hours more. But I didn't get these 1 lakh hours because of this delay in recruitment and all. So literally because of the delay in recruitment, I've lost 1 lakh potentially productive hours, guys. Correct? Had I employed this, maybe for every hour I'm making them work, I would have generated some contribution. Am I right, guys? Now, the costs incurred consequent on employee turnover revealed on analysis the following. Over and above all these things. Now, for whoever is exiting, I need to pay them settlement cost. Then fresh people, recruitment, selection cost, training cost, which means all these 4 are extra costs that I will incur because of employee turnover. Assuming the potential production lost as a consequence of employee turnover could have been sold at prevailing prices, find the profit foregone last year on account of employee turnover. Now, what should you do? Simple. Last year, they were able to generate a contribution of how much? 16,60,660 by effectively spending how many productive hours? 445,000 minus 15,000, that is 30,000 out of 0.5. 30,000 is 0.5. It's 15,000 hours. 4,45,000 minus 15,000 gives you 4,30,000, which means for every hour spent, what is the contribution they can generate? 16,60,660 divided by 4,30,000. How much is that? For every hour they make their workers work productively, they will be able to generate a contribution of how much? 3.862. But because of all this labor turnover related issue, what is the total number of hours they lost? One is this 1 lakh plus out of this 30,000 also 50% was lost. So 15,000 hours were lost. Overall, how many hours were lost? 1,15,000 hours are lost. Had there not been this labor turnover, I could have saved this 1,15,000 hours, and on each hour I would have generated a contribution of 3.862. So 3.862 into 1,15,000 gives me how much, guys? So I could have generated a profit, extra profit of, or contribution of 4,44,130. Is that clear, guys? So this is the total contribution foregone. Guys, correct? Not the total profit foregone. This is the total contribution foregone. Guys, correct? And on top of that, I am also incurring these 4 expenses. Add up all these things, you will get the total profit foregone. Is this clear, guys? So 443,130 is the contribution foregone. On top of this, add all the extra costs that you spend. Add it up. This is the total amount of profit foregone. Is this clear, guys? It comes out to 5,57,930. I'm not getting into the calculation, but this is what it is. Are you all able to understand? Isn't this simple, guys? Isn't this simple? So what you need to do, arrive at the contribution per effective productive hour, right, and multiply that with what the total productive hours lost. So you will arrive at the total contribution loss. On top of that, add all the extra costs that you will incur. So you will get what? The total amount of profit foregone. Is this clear, guys? Are you all able to understand? And that's about this particular area of your employee turnover. And in fact, that's about this particular chapter also. And one more thing, guys. Then you have This one, direct expense, nothing great. We have already done this. We have already done this in in our cost sheet area, right? Direct expenses. This is nothing but expenses other than direct material and direct labor, which can be directly traced, right, per unit. Now examples we've seen: royalty, higher charges for specific equipment, then product specific design drawing, product specific software, even your job charges. You've seen those sums as well, right? All those things will come under direct expenses. That's about it, guys. Nothing beyond this. They just wanted to keep one more area on the face of your syllabus. That's the reason why ICAI has done this. As simple as that. Is that clear, guys? Fine. With this, we have completely covered and revised this particular chapter of employee cost and direct expenses. Fine. So now let's get started with the revision of the next chapter called service costing, right? So this chapter is also called as operating costing, right? Service or operating costing, not operation costing, operating costing. Now guys, once again, this chapter is a common chapter for CA and as well as CMA students. If you're doing CMA also, then this chapter is there in your paper 8 cost accounting. Now guys, coming back here. Now this chapter, once again, gets tested every single attempt. At times for 10 marks or at least for 5 marks, it gets tested. This is how this chapter is, and the importance of this chapter is all other chapters revolve around the production and manufacturing of goods, whereas this is the only chapter that deals with your service sector. Hence, this chapter is important both from an economy perspective, real life, as well as from your examination perspective. Now guys, in this chapter, as per the syllabus, we have different service sector costing. Transportation sector, under transportation sector we have goods transportation, passenger transportation. Then we have hotels and lodges, hospitals, information technology, IT companies like Cognizant, Wipro and all, toll roads, educational institutes, insurance, financial institutions, and or electricity related companies, powerhouses, right? Koli powerhouse, right? Now guys, most important sector is this transportation sector. This is the most important sector for us, right? And apart from that, hotel and hospitals, these two are also important. Generally, your exam questions will come from these areas. It can also come from other areas, but other areas are nothing great. They are not that difficult and all. They are very direct. The biggest challenge is with respect to these areas, more specifically to the transportation sector. That's where you have different varieties of problems as well. Fine, guys? Right. Now, in this chapter, the most important and the crucial point in service costing is that now in case of a manufacturing company, right, I will compute the cost per unit. Let us say I am a pen manufacturer. For me, what do I sell? I sell the pen, right? So I compute the cost per pen, right? Arrive at the profit, add the profit, arrive at the selling price, guys. Correct? I know what is my cost object. What do you mean by cost object? The object for which I am computing the cost. For example, I am saying 20 rupees. Sir, 20 rupees. What is 20 rupees? 20 rupees for what? 20 rupees per pen. Which means here, pen is the cost object. The object for which I compute the cost is actually called as cost object. If I am in the manufacturing sector, the cost object is easily identifiable. So, the product that I manufacture is called as a cost object. Whereas in case of a service sector, now identifying the cost object is the first major challenge for us. For example, I am in a transportation business, right? Now, Ola, Uber, you guys book. Now, here, Ola, Uber, what business are they into? Selling car? No, they use this car, they provide a service to you, they only transport you from one place to another, guys. Correct? Right? In this case, what is their cost object? How do they arrive at the cost? How will they fix the selling price? On what should everything be calculated is the question, guys. Hence, in transportation in our service sector, sector wise, my cost object will be different. Is that clear, guys? That is the first and foremost important thing here. Are you all able to get this? Yes. Now, guys, let me take an example. Now, in this chapter, the most important thing is find out the cost object. Now, how many of you have gone to IRCTC website? Almost all of you, right? Now, if you go to IRCTC website for booking your train tickets, now, two things they will ask you for sure. One is your starting point and destination. The other one is your number of passengers. Right, guys? Yes. Now, why do they need these two data? Now, I will tell you. In case of your transportation sector, in this case, passenger transportation. Now, what they do is their charges are arrived on the basis of per passenger per kilometer. It's popularly called passenger kilometer. Let us say they will have a tariff. Now, for one passenger to transport that one passenger for 1 kilometer, let us say I will charge 1 rupee. This is how they will actually, here the cost object is passenger kilometer. Sir, why, sir? I will tell you. Now, they ask the starting point and destination. With this, they can arrive at the distance. Let us say I'm traveling from Chennai to Hyderabad, right? Let us say approximately the distance is 800 kilometers, right? Now, they will know per kilometer, they will charge 1 rupee, which means you're going to travel 800 kilometers, they will charge 800 rupees. Guys, correct? Now, you said, okay, sir, very happy. Suppose they are saying the tariff is 1 rupee per kilometer. That's all. They're saying, what will you do? No problem, sir. What is the distance? 800. 800 into 1, 800. So you will pay 800 rupees and you will take 100 people with you. Now, is it fair? No. What is the meaning of that, sir? The charge is 1 rupee per passenger per kilometer. For us to transport one passenger for 1 kilometer, the charges are 1 rupee. Guys, correct? Now, that's the reason why they ask for the second detail. How many passengers are there? Are you all able to understand this? Right? Which means, suppose 800 kilometers are there. 2 passenger, you are booking the ticket. What will they do? So, per passenger per kilometer, it is going to be 1 rupee. So, 1 into 800, it is going to be 800 rupees per passenger. Into 2 you need to do, only then you'll get the total ticket value of 1600 rupees. Are you all able to understand? Or in other words, they are transporting 2 passengers for 800 kilometers, right? 2 into 800 is going to be 1600 passenger kilometers, right? Per passenger per kilometer, the charge is 1600 into 1, 1600. That way also you can arrive. Are you all able to understand? Or in other words, in service sector, you don't have a single cost object, you have multiple cost object. This is popularly called as composite cost object. Composition means what? More than one. So composite cost object means there is more than one cost object together that drives my cost. Are you all able to understand? This is one uniqueness about service sector. And another uniqueness about service sector is there is no concept of closing stock, opening stock. You can't stock service, no, you're not dealing in a product. Are you all able to understand? Hence, the stock valuation issue and all is not there in this sector at all. Are you all able to understand? These are the 2 major issues in our service sector. Is that clear? Now, let us take an example. Hotel sector. Now, let us say you want to book a hotel room. You have gone somewhere for, let us say you have gone for, a vacation, right? You want to book a hotel room. Now, how will they charge you? Now, if they say 1000 rupees per room, sir, what will you do? What will you do? You will pay 1000 rupees, right? You will pay 1000 rupees and stay in that room for 1 month. Will they accept? No. They will say, sir, 1000 rupees per room per day. So here room days per room per day will be the cost object. Clear with this, guys? If they just say, sir, 1000 rupees per day, sir, then what will you do? You will pay 1000 rupees. One day only you will say, but you will take, sir, entire hotel, there are 50 rooms, no? I will take all the 50 rooms, so only 1000 rupees I will pay. Why? You said 1000 per day only. You wouldn't say whether it is per room or not. So it is very clear, 1000 rupees per room per day. If you want to take one room for one day, the cost is 1000. Is that clear, guys? Hence, it is also driven by composite cost object. Are you all able to understand? This is one very important thing that you need to get it. Is that clear, guys? Fine. So now, similarly, if I am in goods transportation, they will say per ton per kilometer we will charge you so much. So to transport 1 ton for 1 kilometer, so much is the charge. Is that clear, guys? So if you want us to transport 50 tons, multiply that with 50 and number of kilometers you multiply. Is that clear, guys? Are you all able to understand? Here the ton kilometers is going to be your cost object. Are you all able to understand this? This is a very, very important understanding in service sector. Is that clear, guys? Now with this background, let's get started with the first sector called as your transportation sector. Under the transportation sector, now we will do one sum under your goods transportation and one sum we will do under passenger transportation. Shall we get started? Yes. Now guys, in goods transportation, right, let us take an example of goods transportation. I told you what is going to be the cost object? Ton kilometers. Am I right, guys? Now this ton kilometers can be calculated either using weighted average method or using simple average method. Weighted average method is also known as absolute ton kilometers or absolute method. Simple average is also known as commercial ton kilometer or commercial basis. Is that clear, guys? Now the manner of computing my ton kilometers, for example, let us say, guys, let us say I'm a pen manufacturer. I incur a total cost of 1 lakh to produce how many pens? Let us say 10,000 pens, 10,000 units. The cost per unit is how much? Rupees 10, guys, correct? Now in the denominator I have units, no? This is my cost object. Now in case of a service sector, what is the cost object? In this case, that is your goods transportation, the ton kilometers is going to be your total ton kilometers is going to be your cost object. Am I right? Now what will I do? So the total cost incurred divided by total ton kilometers, I will arrive at the cost per ton kilometer. Right? Now I know for every unit that I am dealing it, in this case it is ton kilometer, what is the cost? Accordingly, I can charge my customers, guys, correct? Or in other words, the ton kilometers is nothing but your denominator computation. Am I right? Now how do I compute the denominator? There are two ways in which you can compute it. One is weighted average method, also known as absolute basis. The other one is simple average method, also known as commercial basis. What are these two methods, sir? How do you compute? We will see this with the help of the first question. So please go and take, this is in volume number 2. The page number is continuous only, but this is in volume number 2, right, guys? So if you notice, this is in our volume 2 of our solved question bank. So please take this, right? If you notice, in your first volume, these chapters are there. Second volume, service marginal standard, budget, and all these things, MCQs and all are there. Fine. Now let's go on to this first question. Look at this. A lorry starts with a load of 20 MT, stands for metric tons, of goods from station A. It unloads 8 tons in station B and the balance goods in station C. In return trip, it reaches station A with a load of 16 metric tons loaded at station C. The distance between A to B, B to C, and C to A are 80, 120, and 160 respectively. Compute absolute metric ton kilometer, commercial metric ton kilometer. What are they saying? Now, there are 3 stations, A, B, C. Now, distance between A to B is how much? Given here, 80 kilometers, right? Next, distance between B to C is 120 kilometers given. Distance between C to A is 160 kilometers given. Now, A to B, I transport how many weight? What is the weight I transport? How many metric tons? 20 metric tons. B to C, I transport how many metric tons? I transport 12 metric tons. Am I right? It's given. How do you know 12? Now, they have given here, lorry A, it starts from A, it goes to B. At B, it unloads 8 metric tons. Means what? So, out of the 20, it unloads 8 here. The balance weight is 12. And the balance goods, it drops at C. Which means from B to C, it is carrying a weight of 12 metric ton. On the return trip, it reaches station A with a load of 16 metric tons loaded at C. Here, once again, it gets loaded with 16 metric tons and it comes back to A. Is that clear, guys? Are you all able to understand this? Now, how do you compute the total metric ton? That is the total denominator for you. I would have incurred some total cost. Leave that. Divided by total metric ton. Only then I'll get the cost per metric ton. Am I right? Sir, what is the total metric ton handled? Two ways of computing are there. One is called absolute basis, also known as weighted average basis. In this case, what will you do? Simple. Sir, for each of this 80 kilometers, what is the weight I carried? 20 metric tons. So 20 into 80 plus 12 into 120 plus 16 into 160. Now, the respective distance multiplied with the respective weights, if you do, this method of computing your denominator is called as absolute basis, also known as a weighted average basis. Is this clear, guys? Right? So this is what they have done. 20 to 80 plus 12 into 120 plus 16 into 160. If you do that, you arrive at 5,600 metric ton kilometers. This way of computing the denominator is called as a absolute basis, also known as a weighted average basis. Is that clear? Now, there is another method called simple average or commercial basis. How would you compute that? Very simple. First, sir, I am not bothered about for which stretch what was the weight I carried. No. First tell me what is the total distance? 80 plus 120 plus 160. How much is it? 200 plus 160, 360 kilometers. Overall, I traveled 360 kilometers. On an average, sir, what is the total weight I carried? First journey I carried 20. Second journey I carried 12. Third journey I carried 16. Simple average is going to be 20 plus 12 plus 16 divided by 3. Is that clear? How much is that? How much is that? How much is that, ma? 16, huh? So on an average, the weight I carried was 16. So I am not taking the respective roots into respective weight. I'm taking the total distance and multiplying with a simple average of the weight I carried on an average. So we get a total of how much? 5,760 metric ton kilometers. This method of computing your denominator is called as simple average or commercial basis. Is this clear, guys? Now obviously the answer will be different under the two alternatives. It will not match. That's what the method says, right? Depending on the method asked in the question, you can use the appropriate method. Is this clear, guys? So in simple average, what will you do? Take the total number of kilometers, right? Multiply it with simple average weight. Simple average weight is what? Total weight divided by number of journeys. Here 3 is number of journeys. Is that clear, guys? Are you all able to understand? Are you all able to understand? There are two ways in which the denominator can be computed. And generally, there's no hard and fast rule. Generally, in goods transportation, they use metric ton concept. I mean, they use absolute basis concept. In passenger transportation, they use commercial basis, simple average concept, right? Generally, they use it. There is no hard and fast rule, but generally, that's how the sums are framed. Is that clear, guys? Fine. So that's about the first question. Please go and update your library of adjustments. Write down computation of composite service cost units. Computation of composite service cost units hyphen simple average and weighted average. Hyphen simple average and weighted average. So that's about the first question. Now let's go to question number 3. A very good sum and a very important sum as well from an examination perspective. Shall we get started? Yes. Now a very, very important question. Mark this as important. You can expect this kind of question in your exam. SMC is a public school having 5 buses, each plying in different directions for the transport of its school students. In view of larger number of students availing of the bus service, the buses work in 2 shifts daily, both in the morning and in the afternoon. The buses are garaged in the school. The workload of the students has been so arranged that in the morning, the first trip picks up the senior students and the second trip plying an hour later picks up junior students. Similarly, in the afternoon, first trip takes the junior students and an hour later, the second trip takes senior students home. The distance traveled by each bus one way is 8 kilometers. Fine. Now the school works for 25 days in a month and it remains closed for vacations in May, June and December. The bus fee, however, is payable by the students for all 12 months in a year. The details of expenses for a year are as under. Driver's salary given, cleaner salary given. Salary is payable for all 12 months for the driver and the cleaner, and one cleaner is employed for all 5 buses. Means what? I have 5 buses, but only one cleaner is enough to clean all 5 buses. Now, how about driver? Can I have one driver? No. Parallelly, every day 5 buses need to function. I can't have one driver. So it is understood that 5 drivers are needed, but only one cleaner. How one cleaner can clean? Guys, when the bus is stationed at the garage, only then the cleaning will happen. No. Guys, correct? Yes. Next, license fee, taxes is given. Insurance, repairs and maintenance, purchase price, life of each bus, scrap value. Why are these details given? With this you can compute depreciation. Very good. Next, diesel cost is given 45 rupees per liter. Each bus gives an average mileage of 4 kilometers per liter of diesel. Right? Now, how do you compute the total diesel cost? Simple. If I put 1 liter, right, I will get how many kilometers? 4 kilometers. What is the cost of 1 liter? 45. If 45 rupees is the cost for running 4 kilometers, how much will be the cost for running total number of kilometers which we need to compute? Is that clear, guys? Next, the seating capacity of each bus is 50. The seating capacity is fully occupied during the whole year. Now, the students picked up and dropped within a range up to 4 kilometers of distance in the school are charged half fare, and 50% of the students traveling in each trip are in this category. Now, what are they saying? The school has a method of arriving at the tariff. What they are saying, look, if the student is staying within 4 kilometers from the school, I will charge him only half ticket, half fare. If the student is staying beyond 4 kilometers, I will charge him full ticket. So here we need to arrive. First we will read it. Ignore interest. Fine. Since the charges are to be based on average cost, you are required to, number 1, prepare a statement showing the expenses of operating a single bus and a fleet of 5 buses for a year. This easily we can do. Prepare a statement. Arrive at cost for running 1 bus. Cost for running 5 buses. Very simple. Collect all the cost. Next, work out the average cost per student per month in respect of students coming up to 4 kilometers, means half ticket student, and beyond 4 kilometers full ticket student. We need to compute how much amount we need to charge for half ticket student, how much amount we need to charge for full ticket student. This is one issue in the question. Is that clear, guys? Right? Now they are saying in this case, you need not compute passenger kilometer and all. No, directly they have said, because if you compute passenger kilometer based on the kilometers you travel, we will charge. Here they have a different policy of computing. What? Less than 4 kilometers if you're staying, right, will charge half fare. That's all. Means what? Whether you are staying 1 kilometer, 2 kilometer, 3 kilometer or 4 kilometer, half ticket. If you are staying within 5, 6, 7, 8 kilometers from the school, you will be charged full ticket. So here we can't do it based on passenger kilometer. So total cost divided by total number of students, you will get the cost per students. Guys, correct? But there is a catch here. What catch? Now there are some students, half the students are half ticket, half the students are full ticket. I can't add the half ticket students with the full ticket students directly because they are dissimilar items. Hence, what should I do? Convert all the students into equivalent half tickets, or convert all the students into equivalent full ticket students and then do the calculation. Only then you will arrive at cost per equivalent half ticket student or cost per equivalent full ticket student. If you compute the cost per equivalent half ticket student, then multiply that into 2, you will get the cost for one full ticket student. Is that clear? Suppose if you are computing the cost for equivalent full ticket student into 0.5, half of that, you will arrive at the cost per half ticket student. Is this clear, guys? This is the approach to this particular numerical problem. Right? Now, with this, shall we get started? Shall we get started? Yes. Now, let's get started with this question. A very, very good and an excellent numerical problem. Right? Mark this as important, guys. A very good sum. Now, first thing, what we need to do here is, guys, understand always in transportation sector, We need to prepare that statement of cost. No? Simply add all the costs, total it. You can do it like that. But institute expects you to actually present it in a certain way. Now, they want you to categorize the numerator, total cost, into three. One part is called as standing charges. What do you mean by standing charges? Those items of cost which are fixed in nature. Then you have something called running charges, which are variable in nature. Then you should have maintenance charges. Basically, this is neither fixed nor variable. Maintenance cost. For every 1000 kilometers, once you should do maintenance. Is correct? It is not variable. But it is also not fixed. Once the 1000 kilometer reaches, you need to maintain. Is correct? Hence, they are expecting you to present it like this. That's all. The manner of computation will be given in the question. Don't worry about that. They expect you to present the answer like this. Is that clear, guys? Now, for that, first, now, one of the components of cost is diesel cost. Am I right, guys? Now, diesel cost, how will you find? I told you. For 1 liter, what is the cost? 45. By incurring 45 rupees, I run 4 kilometers. What will be the cost for total number of kilometers? Now, for the total number of kilometers, right? First, we need to calculate total number of kilometers. Now, how do you compute total number of kilometers? Read the question, an excellent adjustment. Now, what have they mentioned? Every bus travels for a trip of 8 kilometers. Am I right, guys? Now, understand, I travel 8 kilometers. Correct? Now, once I go, obviously I have to come back to school, which means into 2. One round trip is 8 into 2. Am I right? Now, remember, in the morning itself, the same bus will first go and pick up seniors. Once again, it will go in the same route, pick up juniors. Am I right, guys? So, once again into 2. Are you all able to understand? Why this 2? Senior, junior. Now, all these things that we did right now are only in the morning. Once again, the same thing will repeat in the afternoon for dropping them. Am I right, guys? So, once again into 2. This 2 is for what? Dropping. Pick up plus drop. Guys, correct? Now, like this, in a month, how many days do I work? 25 days. Like that, in a year, how many months are there? Not 12 months. Read the question. Yes, May, June, December are holidays. Bus will not function. So, into 9 months. This is the calculation for total number of kilometers. The first step is to calculate the total number of kilometers. Is that clear, guys? That's what you need to do. So, 8 kilometers one way, into 2, one round trip, into 2, senior plus junior, like that into 2 for morning and afternoon. Like that I have 25 days in a month. Like that I have 9 months in a year. If you multiply, I get a total of 14,400 kilometers. Every bus travels 14,400 kilometers. Are you clear with this? Yes, guys. Now, what will be the diesel cost? 45 rupees is the cost for running 4 kilometers. How much will it be for 14,400? 45 by 4 into 14,400. It gives you 1,62,000 rupees. Are you all able to understand? Is that clear, guys? That's about it. That's about it. With this, now we can prepare the statement of expenses for operating a single bus and a fleet of 5 buses. Shall we get started? Yes. Now, what do you do? First, take up all the standing charges. Now, what are the standing charges I've got? Driver salary. How much is it? 4,500 per month per driver. So, 4,500 into 12. How much is that? 54,000 is the driver cost per bus. For 5 buses, it will be into 5. Guys, correct? It's going to be 2,70,000. Next, what is cleaner's salary? 3,500 into month. So, 3,500 per month. 3,500 into 12. How much is that? 42,000 is the cost for 5 buses. Single cleaner, 5 bus. Guys, correct? Hence, fill this here. That's why I have marked this as a red ink. Many students will commit a mistake. Now, what is the cost per bus? Divide this by 5. You will arrive at 8,400. Are you all able to understand? Look how beautifully they have drafted this sum. Right? Next one. Next one. License fee. Fix it only, no? 8,600 per bus per annum. 8,600 into 5. You will get this figure. Any problem? No. Next one. Insurance. Fixed. So, 10,000 per bus. 50,000 for 5 buses. Done. Next, repairs and maintenance, separate line item we have. Semi-variable. Depreciation, that's fixed. Purchase cost, 15 lakh. Scrap value, 3 lakh. So 15 minus 3, 12 lakhs divided by 12 years. Per bus depreciation is 1 lakh rupee. 5 buses, 5 lakh rupees. So 1 lakh and 5 lakh. Total, you get the total standing charges. Is that clear? Running charges, only one line item, diesel cost. How much was that? We calculated 1,62,000 per bus, 5 buses into 5. You get this. Is that clear, guys? Are you all able to understand? Yes, once again, I'm telling you, in our regular batch and Evo batch, we do it fully, right? That solution only I'm taking right now. This is all hand done. I mean, worked out in the marathon. Fine, I'm quickly discussing. It's more to do with a revision. That's the reason we are doing it like this. Next one, maintenance charges. How much the maintenance charges, guys? So now, I think it's given in the question, 35,000 per bus per annum. 35 into 5 you get for 5 buses. Is that clear, guys? You get the total cost here. For running a single bus, it's going to be 3,78,000. For running 5 buses, this is the total cost. Is that clear, guys? Into 5. Are you clear? Or you can subtotal this. Now, per month, what is the cost? Divide this by 12. How much is it? 3,78,000 divided by 31,500. I mean, 378,000 divided by 12, you get 31,500. 18,90,000 divided by 12, you get 1,57,500. Now, guys, why are we dividing it by 12? The bus is running only for 9 months, no? Why are we dividing it by 12? Yes, you said something. Tell me, ma. Yes, you are right. Yes, excellent. They have mentioned clearly. However, the fee is payable in 12 installments. That is, it is payable for all 12 months. Am I right? Which means the total cost divided by 12 per month, the total amount I need to recover from every student, I mean, from all the students put together, is going to be 31,500 for one bus. Are you all able to understand? Is that clear, guys? Now, what do we need to calculate? Second part of the question. Tell me, what is the average cost per student coming within 4 kilometers? That is half ticket student. What is the cost I need to charge for full ticket student? Now, first of all, one thing you tell me, guys. How many students travel in one bus? Use one bus facility. One bus is being used by how many students? How many students? 100. How did you get 100? 50 juniors pick up, drop. Once again, 50 seniors pick up, drop. First senior, then junior. So literally the same bus is being used by 100 students. Remember that. Is that clear, guys? 50 at a time. But in a day, morning first I pick up a senior, then I pick up junior. Once again, first I drop junior, then I drop senior. So a single bus is used by 100 students. Like that, each of the 5 buses are used by 100 different students. Are you clear with this? Maybe totally there are 500 students overall availing the bus facility. Per bus it is enough for me to calculate. Per bus, how many students avail the facility? 100 students. Guys, correct? Now, 31,500 divided by 100, can I do? No. Why? Now, out of this 100 students, now half of them, right, are what? They are only half ticket students, half fare students. Half of them are full fare students. If I divide it by 100, I will be charging everyone the same amount. I can't do it like this. First of all, half fare students and full fare students, I can't actually add them as such. So what will I do? Now, in this case, we need to compute equivalent full fare students, or you can compute equivalent half fare students. That is, convert everyone into full ticket or convert everyone into half ticket. We will convert everyone into half fare students. So first we need to compute the equivalent half fare students per bus. Now, what is the seating capacity of the bus, guys? 50. Now, out of this 50 students, now half of them are half fare students. They have mentioned in the question, no? 50% traveling in each trip are in this category, half fare category, guys, correct? Which means 25 students are half ticket students, balance 25 are full ticket students, guys, correct? Are you all clear with this? Now, how many full ticket students are there? 25. Can I say one full ticket student is equal to 2 half ticket students, guys, correct? The amount that I need to collect from one full ticket student is equivalent to the amount I collect from 2 half ticket student, or the amount I need to collect from 25 full ticket student will be equal to the amount I should collect from 50 half ticket students. Am I right, guys? Hence, the equivalent half fare students, the full fare students converted into half fare will be 25 into 2. How much is it? 50. Plus, already I have half fare students. How much is it? 25. So, in a trip, that is, juniors alone, I have how much? 75 equivalent half fare students per trip. Are you all able to understand? Similar 75, I have senior students also. Guys, correct? Because a bus is used by both seniors and juniors. Hence, total equivalent half-fare students per bus is going to be 75 into 2. It's going to be 150. Or you can say senior plus junior, 75 plus 75. It is 150. Are you all able to understand? Is there any issue here? No. Which means now this 31,500 rupees need to be borne by 150 equivalent half-fare students. Am I right, guys? So 31,000 divided by 150. So every half-fare student should pay how much? 210 rupees. Then how much should a full fare student pay me? 2 times this. So 210 into 2. Every full fare student should pay me how much? 420 rupees. Are you all able to understand this? Is everyone able to get this, guys? Are you all able to understand? Now, such a beautiful concept provided if you understand it conceptually and crack it, this is going to be a cakewalk for you. As simple as that, guys. That's all it takes. Is that clear, everyone? Is that clear, everyone? You guys got it? So in this sum, we saw the concept of equivalent service cost unit. Is that clear? So please go and update your library of adjustments. Write down transport costing hyphen students transportation with students traveling multiple distances within bracket concept of equivalent service cost unit within bracket concept of equivalent service cost unit. So that's about this particular transportation sector. We did one sum under goods transportation and we did one question under passenger transportation, right? For the purpose of marathon. In a regular batch, we do it fully, but marathon for revision purpose, I want to take one concept from this area, respective area, and do it. Now, guys, let's move on to the next sector called as hotel costing. So please take question number 8. Please take question number 8. So please take question number 8. Yes. Once again, guys, this is also another important question. You can expect this kind of question in your exam. Now, guys, I'm talking about a hotel sector. In a hotel sector, what is going to be my service cost unit? What is the cost object per room per day? That is, room days is the cost object. Am I right? Perfect. Have this in mind. Let's do this. A company runs a holiday home. For this purpose, it has hired a building at rent of rupees 10,000 per month along with a 5% on total taking. What do you mean by a total taking? The total revenue on the sales value. Now, you need to pay how much? 5%. So, rent is going to be fixed 10,000 per month plus 5% of the turnover. Now, it has 3 types of suites. This is not suit, this is suites, right? Suit means coat suit. Suites, basically, that's how they call it. Suites means different variety of rooms for its customer. Basically, single room, double room, and triple room. Now, what have they mentioned? Single room, they have 100 single rooms. Every single day, occupancy is 100%. Means what? All the 100 rooms are fully occupied every day. Double rooms, how many rooms they've got? 50. Only 80% of the double rooms are occupied every day. Triple rooms, they have 30 and only 60% of these 30 rooms are occupied on an average every day. Is that clear? Next, the rent of a double room is to be fixed at 2.5 times of the single room, which means the double room's rent is 2.5 times the single room rent. Guys, correct? Correct? Fine. And what have they given? And that of a triple room as twice of the double room. The rent charged by triple room is 2 times the rent charged by double room, or 2 times into 2.5, it's going to be 5 times the rent charged by a single room. Is that clear, guys? Are you all able to understand? Why do we need this? To convert all the rooms into equivalent single rooms. Are you all able to understand? Because we need to compute room days. I can't add the room days of single with double with triple. So I need to convert this double and triple into equivalent single room days, and only then I can do the calculation. Guys, are you all clear with this? Right. Now what have they given here? All other expenses, staff salaries, room attendant wages, lighting, heating, power, repairs and renovation, laundry charges, interior decor, and sundries are provided. Provide the profit at 20% on total taking. Total taking means revenue. And assume 360 days in a year. You are required to calculate the rent to be charged for each type of suite. Right? Bloody sweet. Yes. So now we need to do this sum. First, how do we do? Simple. Total cost, right, plus required profit gives me the total takings. Total takings divided by total number of room days. I will know how much to charge per room per day. Now, the denominator, room days, I have single room day, double room day, triple room day. Now, I can't add them as such. So, what do? I convert everything into equivalent single room day, and denominator I take it as a equivalent single room day. I arrive at the rate I need to charge for a single room per day. That into 2.5 will give me the tariff for double room, and into 5 times will give me the tariff for triple room. As simple as that. Is that clear, guys? Shall we do the sum right now? Yes. Let's get started. Now, first this was I think question number 8. Okay, just a minute. Yes. Now the first thing we need to do is to calculate the room days. Now guys, tell me, single room, 100 rooms are occupied 100%, which means every day how many rooms are occupied? 100. And how many days are there in a year? 360. So 100 into 100% into 360. So ideally I have 336,000 single room days. Guys, correct? For every room per day. Do I have 36,000 rooms? No. I have only 100 rooms. All the 100 rooms are occupied for 360 days. Guys, correct? Which means, look. Per room per day I generate revenue. But this room per room is occupied on all the 360 days, which means one room will generate me 360 days revenue. Guys, correct? Like that I have 100 rooms occupied. So which means I generate revenue from 36,000 room days, single room days alone. Is that clear, guys? And one single room is equal to one single room only. Guys, correct? 36,000 into 1, 36,000. Is that clear? Now, how about double room days? How many double rooms do I have? 50. All 50 are occupied. Now, only 80% of that are occupied, right? And how many days are there in a year? 360. So 50 into 80%, you get 40 rooms. 40 rooms are occupied for 360 days. How many double room days you get? 14,400. Now, I can't add the single room with double room. What should I do? This double room, convert it into equivalent single room. How will you do? Sir, one double room will give me revenue that 2.5 single rooms will give. Guys, correct? Which means 14,400 into 2.5. How much is that? 36,000. Can I say 14,400 double rooms are equivalent to 36,000 single rooms? Guys, correct? Now these two can be added right now. Are you all able to understand? Next, I have triple rooms also. How many triple rooms? Totally 30 rooms are there, sir. But only 60% occupancy, which means 18. Yes, only 18 rooms are occupied every day. Like that, it's occupied for 360 days. 18 into 360 gives you, it's going to 6480. Now, one triple room day is equivalent to 5 single room days. So, it's going to be 6480 into 5. You get 32,400. Now, these can't be added as such. Whereas, now all these are equivalent single room days. So, 36,000 plus 36,000 plus 32,400. It's going to be how much? 1,04,400 equivalent single room days are there. Are you all able to understand? Is that clear, guys? Now we need to prepare the statement of total cost. Guys, correct? Now, statement of total cost. Here in a hotel sector, you need not bifurcate cost into those 3 segments: standing, running, repairs and maintenance. No such concept. That is only there for transportation sector. Now what do? Whatever figures you think they have given, all the figures you copy paste. Right? The sum total of this, how much does it come out to? 14,25,000 plus 4,50,000 plus 2,15,000 plus 123,500 plus 80,500 plus 74,000 plus 153,000 gives you 25 lakh 21,000. 25 lakh 21,000 is going to be my total cost. Am I right? Guys, correct? But remember one thing. Remember one thing. You have missed out. What? You have missed out building rent. How much is building rent? Not 10,000. That is per month. So into 12, how much is it? 1,20,000 is the building rent plus 5% on total takings, means revenue. So now the total cost here comes out to how much? 25,21,000. To this add 1,20,000. How much you get? So total cost is 26,41,000 plus 5% on sales. That is total takings. Is that clear? That's what I have mentioned here. 26,41,000 plus 5% on total takings is my total cost. Are you all able to understand? Now, can I say total takings revenue is equal to total cost, that is 26,41,000 plus 5% on total takings plus profit. How much is the required profit? 20% on total takings. Am I right, guys? Now, let me take the total takings as X. Can I say X is equal to 26,41,000 plus 0.05X, that is your variable component of rent, plus 0.20X. What is this? Profit. Or 0.05 plus 0.2 gives you 0.25X. This 0.25x goes to the other side. X minus 0.25x gives you 0.75x. 0.75x is equal to 26,41,000. X is equal to 26,41,000 divided by 0.75 gives you how much? 35,21,333.333. This is going to be the total amount of revenue that you should generate. Are you all able to understand? Now, what will be the single room rent? Simple. The total revenue that you should generate divided by total equivalent single room days, 1,04,400. How much you get? So 33.729. So round off to 33.73. So for a single room per day, how much the tariff I should charge? 33.73. If it is a double room, what should be the rent I should charge? Into 2.5 times. So into 2.5, how much you get? 84.33. If it is a triple room day, so what is going to be triple room rent? It is going to be 33.73 into 5. So how much is that? 168.65. Is that clear, guys? So with this, we have found out what should be the rent that should be charged for every single type of room. Are you all able to understand? Here, how do we do that? First, we use the concept of equivalent room days. With that, what we do is we arrive at the total equivalent single room days, take the total cost, and of course here you had the rent as some 5% on takings and all. So you keep the total takings as X, reverse work, arrive at the total amount of takings, divide it with the equivalent single room days. You will arrive at the rent per single room day and multiply that into 2.5, arrive at the double room rent, into 5, you will arrive at the triple room rent. As simple as that, guys. Are you all able to understand? Yes, here these room days are nothing but the units I produce. In a production, in a manufacturing entity, I call it as units. Here, I can't call it as units. Depending on the industry, I use ton kilometers, passenger kilometers, or I will use room days and all. Are you all able to understand this? Right? And that's about this particular question. Right? Please go and update your library of adjustments. That's about this particular question. Write down hotel costing hyphen multiple types of suites, SUITES, multiple types of suites, semicolon, calculation of room rent to be charged. Calculation of room rent to be charged. Is that clear, everyone? Right? So that's about your hotel sector. Now, let's move on to the next sector called as hospital sector. Shall we? Yes, guys? Fine. Now, in hospital sector, basically, guys, now what happens in hospitals? Now, basically, patients are admitted, right? Now, if you notice, hospital has now become more like an hospitality sector. Okay. So, yes, really. So they have all this fancy, it looks like 5-star hotels and all, right? Now, there also, how they charge is, they have this room rent and all. There also, you guys are aware, similar to hotel, only they have a tariff, right? Separate over and above their medical charges, medical bills and all that. The main thing for them is they also charge room rent, guys, correct? How they will do is per patient per day This is the amount we need to charge. That's how they arrive at it. Or they will say per bed per day. Bed or patient. One patient will take only one bed. Guys, correct? So per bed per day, how much is going to be the charge is how they will compute. Is that clear, guys? Are you all able to understand? So there, the cost object is going to be what? Bed days or patient days. Is that clear? Are you all able to understand? Now, with this background, let's go and do one question from your hospital sector. A very important question. A very important question. Shall we begin? Yes. Now, question number 10. Right? Mark this as important. Now, ABC hospital runs a CCU, means a critical care unit, ICU, CCU, in a hired building. Now, guys, read the question carefully. The CCU consists of 35 beds. Means what? The CCU has a capacity of having 35 beds. And they have some space where if you want, you can add maximum 5 more beds. Now, they have clearly given the cost structure of this hospital. Rent per month, 75,000. Supervisor, 2 people, 25,000 per month each. Nurse, 4 persons, 20,000 per month each. Ward boys, 4 persons, 5,000 per month each. Doctors are paid 2,50,000 per month. They are paid on the basis of number of patients attended and the time spent by them. Other expenses for the year are as follows. Repairs, fixed, 81,000. Food to patients, variable, figure is given. Other services to patients, variable. Laundry charges, variable. Medicines, variable. Other fixed expenses, admin expenses, allocated. Now, it was expected that for 150 days in a year, 35 beds are occupied. And for 80 days, only 25 beds are occupied. Now, the hospital hired 750 beds at a charge of rupees 100 per bed per day to accommodate the flow of patients. However, this does not exceed more than 5 extra beds over and above the normal capacity of 35 beds in any day. You are required, number 1, calculate the profit per patient day. So, per patient per day, what is the profit? So, here, profit per unit. Unit is patient days. So, total patients into number of days gives you patient day. Correct? Now, calculate the profit per patient day if the hospital recovers on an average, 2,000 per day from patients, which means they have given the selling price. So, per patient per day, I recover how much? 2,000 rupees. Next, calculate the break-even point for the hospital. We have seen this in marginal costing, right? Calculate the break-even point, right? This is what they have asked. Now, guys, first, for you to do this, the first thing you need to do is you need to calculate totally how many patient days are there. Is correct? Or bed days or patient days. Tell me how many bed days are there. Patient day or bed day, both are same. Can anyone tell me how many patient days are there? If you want, read the question, pause the video, read the question, and then continue back. Now, guys, how do you compute the patient days here? Sir, for 150 days, 35 beds were occupied. So 150 into 35. And for 80 days, 25 beds were occupied. Plus 80 into 25. This is what you think? No. No. Read the question carefully. What have they given? What have they given? This hospital consists of 35 beds. 5 more beds can be added if required. Now, what have they given? It was estimated that for 150 days in a year, 35 beds are occupied. And 80 days, only 25 beds are occupied. Correct? Guys, correct? Now, you guys tell me, 150 days, how many beds are occupied? Everyone, 35 beds. What is the figure? 150 into 35? Yes, you get 5250 bed days. Next, for 80 days, how many beds are occupied? 25 beds are occupied. How much is that? 80 into 25? 2000 beds. Now, guys, read this properly. The hospital hired 750 beds. Wait, what is the meaning of the 750 beds? Can anyone tell me how they arrived at the 750 beds? 750 beds. 5 into 150. What is that calculation? Excellent. Very good. Now, look at this. On 150, how many fixed beds they have? 35. If they want, they can take 5 extra beds at any given point of time. On 150 days, all the 35 beds were occupied. But number of patients, maybe it could have been much more. Now, on these 150 days alone, they would have needed that 5 extra beds. Is correct? So, they did not hire 750 beds. They hired only 5 beds for 150 days. Ideally, this is 750 bed days. They have confused it. They deliberately wanted to confuse you, right? So 5 beds were hired, additional beds on 150 days. So which means 5 into 150 is 750. Literally, that is the breakup here. That is also bed days only. Are you all able to understand? So only 5 beds were hired. For how many days? 750 days. Hence, that is the breakup of this. You need not mention this. You need not mention it. But for your purpose, I am just mentioning 150 days alone. I am having what? 5 beds extra. How do you know, sir? On this 80 days, I don't need extra beds. No, I have 35, but only 25 were occupied. If someone comes in, I can accommodate in the balance 10 beds I have. Is correct? They first forget that they only 25 beds were occupied. Why will I take extra? Existing beds are itself not filling. Are you all able to understand? So only on these 150 days, all my beds were filled and I had to take additional beds here. Very good. Excellent observation. Is that clear, guys? Hence, the bed day should also include this 750. Now you total up how much you get. 5250 plus 2000 plus 750 gives you 8000 bed days you've got. That is the first part of this answer. So you should first know that the total bed days are going to be 8000 bed days. Is that clear? Now, every bed day, I will generate a turnover of how much? 2000. So, total turnover for them is 8000 into 2000. How much is that? 160 lakhs. 1 crore 60 lakhs is going to be my total revenue. Is that clear, guys? Now, since they had asked for break-even point, what is the formula for break-even point? Fixed cost divided by contribution per unit. So it is going to be fixed cost divided by contribution per unit. Now here 1 unit is what? 1 patient day. Guys, correct? So now for this purpose I need to prepare this under marginal costing income statement. Marginal costing income statement is what? Sales minus variable cost gives you contribution minus fixed cost gives you profit. For this reason only, they had categorized which expenses are variable, which expenses are fixed. Is this clear, guys? This is something that you need to identify. They have linked marginal costing with the service costing and they have tested. Is that clear? Only one sum is there with respect to hospital sector. Is that clear, guys? Now, what do? Sales, 1 crore 60 lakhs. Now, from this, subtract all the variable cost. What are all the variable costs we have got? Yes, go in the same order. Yes, sir. You have food to patients, 8,80,000. Other services, 3 lakh. Laundry, 6 lakh. Medicines, 7,50,000. That's all. That's all. That's all. Salaries are fixed, ma. Which salary you want? Huh? Now, very important, doctor salary will come under variable. Sir, how, sir? Why should we do it? Read the question. They are paid fixed. No, sir. It is not fixed. They have done some back-end computation. They have given you. They have given. It is computed on the basis of number of patients attended and the time spent by them. So this should also be considered as a variable. That's all, right? No. Any other cost? No, huh? Bed charge is there, no. Bed is variable. Guys, correct. So, 750 bed days into 100 per bed per day, 75,000 rupees. This is another variable cost which you will miss out. Clear with this? 2 catches. One is doctor fees considered to be variable. Reason given in the question. Number 2, higher charges. Bed higher charges. Is that clear, guys? So, predominantly students will forget this and bed hire charges this. If you add up, you will get the total variable cost. So sales minus variable cost gives you the contribution. From the contribution, subtract all the fixed costs. What are all the fixed costs you've got? Rent per month, so 75,000 into 12. Supervisor, 25,000 into 12. Like that, I have 2 supervisors. Nurses, 20,000 into 4 into 12. Ward boys, 5,000 into 4 into 12. Is that clear? Then repairs 81,000 given per annum. Next 10 lakh 80 other fixed admin, it's going to be 10 lakh rupees. Is that clear, guys? All these items should come here. Are you all able to understand? So total up the fixed cost. So now contribution minus fixed cost, you will arrive at the total profit. Is that clear, guys? And what have they asked in this particular question? Arrive at the profit per patient day. Am I right? Is correct? So by profit, they mean variable profit. They refer to contribution because only contribution per unit can be calculated. Guys, correct? So now, how much is it going to be? 1 crore 3 lakh 95,000 divided by your total number of patient days, bed days. How much is that? 8,000. So 1 crore 3 lakh 95,000 divided by 8,000. So per patient per day, what is the contribution that you get? 1299.375. Is that clear, guys? Now you arrive at the break-even point. What is the break-even point? Total fixed cost 48,61,000 divided by the contribution per patient per day. It's going to be 1299.375. So you arrive at 48,61,000 divided by 1299.375. You get 3,741.0 something. You can't have decimals. So 3,741 patient days. Means what? If you are able to achieve 3,741 patient days, you will be able to recover your entire fixed cost. So if you're having any patient days beyond this, you will have that is going to feed your profit. That's basically your margin of safety. Is that clear, guys? That's about this particular question. Once again, a good question where you had marginal costing concepts involved in your service sector. So now service costing, please go and update your library of adjustments. Write down hospital costing hyphen computation of hospital costing hyphen computation of, write down hospital costing hyphen computation of contribution per patient day, computation of contribution per patient day and break even point computation of profit per patient day and break even point. Right, guys? So that's about this particular sector. The other sectors are pretty much straightforward. In terms of complications, these three are the major sectors where you can actually face a problem. Right, guys? Fine. So that's about this particular chapter. So now let's get started with the revision of next chapter called as budget and budgetary control. Now, before I get started with this particular chapter, now once again, guys, this chapter is a common chapter in your CA Intermediate paper 4 cost and management accounting, as well as in your CMA Intermediate in paper 8 cost accounting. Exactly the same chapter is there, as well as in CMA Inter paper 12 management accounting, the same chapter is there. In CMA Intermediate paper 12, if you notice, guys, right now there, this chapter is called forecasting, budgeting and budgetary control. Name alone they have added forecasting, but for that, right, exactly everything is going to be the same only. Clear with this? So once again, guys, this is a common chapter for your CA as well as CMA Intermediate, right? In CMA Intermediate, both the papers have this particular chapter. And now this marathon, in this marathon revision, right, I am having a common session for revising this particular budgetary control, right, for CA and CMA Intermediate. However, in our regular and exam oriented batches, the recordings are all separately done for CA Inter, and even in CMA Inter paper 8 paper 12 separate recordings are done, and the books are all 3 different books for each of these 3 courses, right? We have our concept decoder and solve question bank separately for every single subject paper here. But since this is a revision marathon, I am having a common session across the courses for all the students, so that even those students who are actually appearing for CA and CMA, or maybe group 1 and group 2 of CMA, everyone, these guys can actually spend one session for a common topic. So that is the reason why I'm making this as a common recording. Clear with this, guys? Now, on that note, let's get started with this particular chapter called budget and budgetary control. So please have this in mind. So in all our paid courses, we have it as a separate recordings. It's not a combined recording of CA and CMA. coming back here, right? Now, this chapter, budget and budgetary control, goes on to achieve two objectives: decision making and control. Two objectives. Overall, our subject has three objectives, right? So, stock valuation, profit computation, decision making, and control. Now, this particular chapter goes on to achieve the objective of decision making and control. Sir, how, sir? First of all, before that, what do you mean by a budget? Budget is basically a plan of action. Now, all of us do budgets in our everyday life. For example, let's say your exams are, your exams are going to happen, or your exams are going to be scheduled 2 months from now. Now, what do? You prepare a budget. Okay, so 2 months I have, right? So 2 into 30, overall I have 60 days. So per day, let us say I'm going to study for 10 hours. So 60 into 10, 600 hours I have, divided by the number of subjects. Per subject, what is the time I have? Basically, it's a plan of action. Similarly, before the start of every single period or a financial year, or maybe a particular month, as the case may be, the frequency could be different. Every company comes up with their own budget, right? Now, I told you this chapter budget goes on to achieve two objectives: decision making and control. Sir, how is that possible? Now, first we will see how budget goes on to achieve the objective of decision making. Now, let us say, guys, in the board meeting where the board of directors decide for the upcoming year, right? The board of directors have two choices, right? Now, they are planning to fix the selling price for their product, right? Let us say option number 1, they can fix the selling price at 10 rupees. If they fix the selling price at 10 rupees, they will be able to sell, let us say, 1 lakh units. Or option number 2, suppose instead of 10 rupees, if they reduce the selling price to 9 rupees, they will be able to sell, let us say, 1,10,000 units. Example, right? Obviously, if you reduce the selling price, the volume will increase. Now, what should be the ideal selling price the company should fix? 10 rupees or 9 rupees? Now, with this data, we can't decide, but what the company will do, if they fix the selling price at 10 rupees, they will arrive at the profit. If they fix the selling price as 9 rupees, they will arrive at the profit. Now, out of these two options, whichever will give the maximum profit for the company, they will go for that particular option. Or in other words, first, to fix a budget, a company has to choose between multiple alternatives. This way, it helps them to enable the objective of decision making. Let us say option 2 is more feasible because that gives them the maximum profit. Now, having chosen this option, now what they do, they set this as the target, right? And they inform the team that, look, this year we have to produce and sell 1,10,000 units. The selling price needs to be 9 rupees. Accordingly, they plan their cost, schedule their production and all these things. Now, they set this as the target which needs to be followed by their team members, right? And this target is compared with the actuals, and now they are able to exercise control over their organization. Now, at the end of the period, they compare the performance which they should have done, the employee should have done, they compare that with the actual performance done by their employees, and they analyze for the variance or deviations, and accordingly they take any corrective actions, or maybe in case these guys have outperformed, they will reward them. This process helps them enable the objective of control. Or in other words, budget helps in two objectives: decision making as well as in the objective of control. And always remember, this is something that is done right before the start of a particular period. Clear with us, guys? Now, that's about a brief introduction to this particular chapter. Now, guys, in this particular chapter, broadly, there are two segments for discussion. Segment number 1 deals with preparation of functional budgets, and segment number 2 deals with preparation of flexible budget, right? Now, this part, functional budget, is kind of similar to cost sheet area, and this flexible budget, it is kind of similar to your concepts that you studied in marginal costing, right? So these are the two segments which we are going to learn in this particular chapter. Right, guys? Now, fairly a simple chapter. It's not big as well, and kind of it's very easy to score in this particular chapter. On that note, let's get started with the first segment of discussion called as functional budget. Now, what do you mean by a functional budget? Preparing a budget for every single function in the organization is called as a functional budget. Sir, what are the functions, sir? Sales, production, purchase, your material consumption, labor. So for every single function, right, if you are preparing a budget, it is called as functional budget. Now I'm just opening the concept decoder note of CA Inter, right? This is more or less whatever we study here is same as what we see in your CMA Inter paper 8, right, as well as in CMA Inter paper 12. Wait 1 second, I will open and show it to you. Right here you have this chapter, this is chapter number 16. 1 second. Yes, this is yes, chapter number 16. It's on page 169. I'll quickly open it up for you. Yes, look at this. More or less, everything is the same in terms of numerical problem, concepts covered. It's all exactly the same, guys, right? That is the reason why here, since it is a common topic, right, I am making a common discussion, but all our courses are recorded exclusively, even in CMA Inter paper 8 separate recording, paper 12 separate recording, because these are all different books that I've used. So obviously it is all one and the same. I mean, the recordings are completely different, but in a marathon when we are revising, right, I thought maybe it's easier for students to combine everything, right, because it's a common topic across all the courses. So obviously we can actually, it's easy to put it in one place, so that even if you are studying multiple courses, it will be easy for you to correlate. That's the reason why clearly I'm mentioning which concept is covered, or which chapter is available in which particular paper, and in what name it is actually being present in everything, right? Just give me a minute. I have this here. One second. Yes, look at this. Forecasting, budgeting, and budgetary control, right? So this is in your paper 12 concept decoder book. This is your paper 8 concept decoder book, chapter number 16, right? This is basically your CA Inter concept decoder book. There it's chapter 15, budget and budgetary control. Everywhere it is exactly the same, guys, right? So in fact, I will be doing a couple of numerical problems, and with that we will be revising this entire chapter beautifully. That's about it, right? And everything is conceptual here. Now guys, now the first one here, what are the different functional budgets? So preparing budget for every single function is called as a functional budget. Different functional budgets: your sales budget, production budget, plant utilization budget, direct material usage budget, direct material purchase budget, direct labor budget, your factory overheads, production cost, your closing inventory, cost of goods sold budget, selling and distribution budget, administration budget, R&D budget, capital expenditure budget, cash budget. These are all different variants of budget. What is every single budget? Theoretically, it's been explained, but practically, quickly, we will just be covering all these areas, right? So these are all the different varieties of functional budget. But remember one thing, practically, to solve numerical problems and all, the first budget that you should have is your sales budget. You should always prepare the sales budget first. Once you prepare the sales budget, the next budget you should prepare is your production budget. It has to be in the same order. Reason I will tell you, right, with a numerical example. So first you need to prepare sales budget, then you need to prepare a production budget, and once these two budgets are, once production budget is available, then all other cost related budget can be prepared. Clear with this, guys? Sir, why is it that I need to maintain, or I need to prepare budgets in the same order? Now guys, always remember, sales is the starting point. Always remember, sales is a starting point. Now if you notice, right, in a factory, in an FG area, right, let us say I have an opening stock of FG, right? Then I have, let us say, for example, I have 1000 units of opening stock of FG, right? Guys, clear with this? Then let us say the closing stock of FG that I need to maintain is 2000 units. I'm just giving you guys an example, right? And let us say I am planning to sell, example, 10,000 units of FG, right? Now, in this upcoming year, first, the company is planning to sell 10,000 units, right? Now, sir, let us produce 10,000 units. Wait, they also want you to maintain a closing stock of 2000 units of FG, which means, sir, I have to sell 10,000 units of FG. Over and above that, I need to maintain at the end of the year a stock of how much? 2000 units of FG, which means totally, sir, I need to have how many units of FG with me? 12,000 units of FG with me. Sir, which means, should I produce 12,000 units of FG? Wait, now you need to have 12,000 units of FG, but already you have with you 1,000 units of FG, which means at present, in this current period, you are only required to produce how many units? The production is going to be how much? The balancing figure. So 12,000, right, minus 1,000, it is enough if you produce 11,000 units right now. Are you guys clear with this? Or in other words, for you to first arrive at the production budget, you first need how many units you are going to sell, right? Sales plus closing stock gives you the total requirement, right? From that, minus the opening stock which you already have, now you will be getting the figure which you need to produce in this particular period. Clear with this, guys? Or in other words, I can say sales plus closing stock minus opening stock gives me the production. In this case, I need to sell 10,000 units. On top of it, I need to have 2000 units as a closing stock, but wait, I already have with me 1000 units of opening stock, which means net off, I need to produce how many units? I need to produce only 11,000 units in this particular period. Are you guys clear with this? Right? So now, for me, first I need the sales budget. Using the sales budget only, I can arrive at the production budget. Clear with this, guys? And now once I have the production budget, now all other budgets I can prepare. For example, let us say, guys, 1 unit of FG requires 2 kgs of raw material. Now, with this, I can say totally how many kgs of raw material should I need? What is the total raw material consumption budget? Can I say raw material consumption is going to be, sir, for every unit of FG, I need 2 kgs of raw material, but in this year, I'm going to produce 11,000 units of FG, which means totally I need how many kgs of raw material? 11,000 into 2, I need a total of 22,000 kgs of raw material. Alright, so this is my raw material consumption budget. Clear with this, guys? Now, on top of it, the company wants to maintain a closing stock of raw material. Let us say the company wants to maintain a closing stock of 3,000 kgs of raw material, which means now I should have with me what? 22 kgs for the purpose of production I need to consume, plus 3,000 kgs I need to maintain, which means overall, so 25,000 kgs you need to purchase, right? But wait, minus I already have with me, let us say I already have with me 5,000 kgs of opening stock, which means totally I need 25,000, out of which already 5,000 is available in my opening stock, which means net of now I only need to purchase how much? I need to purchase 20,000 kgs of stock or raw material. Are you guys clear with this? This is called as raw material purchases budget. Are you guys clear with this? Let us say 1 kg of raw material is purchase rate of 10 rupees. So now this 20,000 kgs into 10 gives you 2 lakh rupees in value. Are you guys clear with this? So now the first point was sales budget. From the sales budget, we arrived at the production budget. Using the production budget, we could arrive at the raw material consumption budget. Using the raw material consumption budget, we could arrive at the raw material purchases budget. Clear with this, guys? Suppose, for example, right, 1 unit of FG requires 3 labor hours, which means what is the total labor requirement budget for you? 11,000 units into 3. I will say, sir, totally I need 33,000 labor hours in this particular period. Clear with this, guys? So using the production budget, now you can arrive at your labor requirement budget, and all other budgets will stem out of your production budget only. Are you guys able to understand? So always remember, the first budget you need to prepare is what? Sales budget. From the sales budget, production budget can be arrived. From the production budget, your raw material consumption budget, raw material purchases budget, your labor requirement budget, all other budgets you can prepare using the production budget. Are you guys clear with this? And that is all about, right, this particular concept of your functional budget. Now directly on this note, let's go and solve one numerical problem. That's about the first segment. So let's go and solve one numerical problem. Once again, guys, this is a common question for both CA and CMA students. So please take the first question, right, from your CA intermediate, solved question bank. Now do not think that, sir, CA question, sir, it is not applicable for me. Absolutely not. This question is equally applicable for CMA intermediate paper 8 cost accounting students as well as paper 12 management accounting students. I am just taking one sum so that it's a proper revision for you to complete this entire concept of functional budget. As simple as that. Don't think that it's not a part of your syllabus. It's applicable for everybody. Clear with this, guys? On this note, let's get started here. Now what have they given? Prepare a quantitative production, material usage means material consumption, and purchases budget from the following data of a particular month. Product A, product B. Budgeted sales quantity for each of the products is given. Material consumption per unit is given. Right? So product A requires 2 kgs of material B and 1/8 kgs of material Q. Right? Similarly, product B requires 4 kgs of B and 1 kg of Q. Basically, guys, there are 2 different products and each of the product requires 2 different types of raw material. Right? Now what have they given here? The stocks of the products and materials are as under. Product A and B, guys, please be careful here. A and B are FG and material P and Q are raw material. Now A and B, FG, they have given the opening stock and the closing stock. Right? The figures are given. Raw material P and raw material Q, opening stocks are given, closing stock are not given. Read the question below. The company wishes to operate a JIT material inventory system. JIT means just in time, right? Which means they don't maintain much of stock, right? Whenever it is required, only then, when they get a customer order, only then they will purchase and they will keep the raw material, right? Now what is JIT is not required in this particular question. They themselves have given. As an initial procedure, it wishes to maintain a minimum stock of material equivalent to 2 days worth of consumption. Right? Sir, whatever I am going to consume in 2 days, that will be the amount of closing stock for P and Q. Clear with this, guys? Now there are 28 working days in a month. Based on this, you can calculate what your closing stock. Basically, what we will do is monthly consumption divided by 28 into 2. If you do, you will arrive at your raw material P and raw material Q's closing stock values. Clear with this, guys? So now, what do we do about, how do we go about with this particular question? The first thing that we need to do here, guys, the first thing we need to do here is what? Using the sales, first we need to arrive at our production budget, correct? Once we arrive at the production budget, now what we can do is, based on the production budget, we can arrive at the raw material consumption budget, and then we can arrive at the raw material purchase budget and other things. Clear with this, guys? So on this note, let's get started here. First, guys, let's talk about these 2 output products, FG products, product A and product B. Now, what is the sales value here given? 15,000, 17,500. Now, sales plus closing stock. How much is the closing stock? 1750, 3375. So 1750, 3375 minus opening stock. How much is the opening stock? 750 and 875. Reduce this, 750 and 875. Net of, so what is going to be, how many units of A should be produced? 15,000 plus 1750 minus 750. Literally you need to produce 16,000 units of A. And how many units of B? 17,500 plus 3375 minus 875 gives you 20,000 units of B. So first we arrived at the production budget. We calculate how many units of A and how many units of B needs to be produced. Are you clear with this? Now based on this we can prepare the material consumption budget in kgs. Now what are the two different types of raw material? Material P and material Q. First, material P and material Q. Now what happens here? Now first, product A. How many units of product A I'm going to manufacture? 16,000 units of product A I'm going to manufacture. And please have this in mind, to produce every unit of A I need 2 kgs of material P and 3 1/8 kgs of material Q. Clear with this, guys? So now 16,000 units of A require totally how many kgs of P? So 16,000 into 2, I need how much? 32,000 kgs of product P, raw material P. Are you guys clear with this? So for producing 16,000 units of A, right, every unit of A requires 2 kgs of raw material P. So 16,000 into 2, I need 32,000 kgs of P, plus every unit of A requires 3 1/8 kgs of what? Raw material Q. So simple, 3 1/8 is basically how much? So 1/8 is 0.125. So 3.125, right, kgs of Q is what I need. So every unit of A requires 3.125 kgs of, right, raw material Q. So here I will say it is 16,000 units into 3.125. How did you arrive at 3.125? 3 1/8. So 1/8 you do. How much you get? 0.125. So 3 plus 1/8. That is 3 plus 0.125, 3.125 kgs. So to produce 1 unit of A, I need 3.125 kgs of Q. So to produce 16,000 units of A, how many kgs of Q do I need? 3.125. So 16,000 into 3.125. Overall, I need 50,000 kgs of Q. Are you guys clear with this? Next one. How about B? How many units of B are we going to produce? So we are going to produce a total of 20,000 units of B. And every unit of B requires 4 kgs of P and 1 kgs of Q. Very simple. 20,000 into 4, 80,000 kgs of P, and 20,000 into 1. So that's going to be 20,000 kgs of Q. Clear with this, guys? So overall, how many kgs of P is required for consumption? 32,000 plus 80,000. It gives me a total of 1,12,000. And how many kgs of Q? 50,000 plus 20,000. It gives me a total of 70,000 kgs of Q. Are you guys clear with this? Or in other words, overall, the raw material consumption budget is going to be 1,12,000 kgs of P I'm going to consume in this particular month, and 70,000 kgs of Q I'm going to consume in the particular month. Clear with this, guys? So the upcoming month requires this particular consumption of P and Q. Clear with this, guys? Now, from this, we need to calculate the material purchases budget. How do you arrive at the material purchases budget? Simple, raw material consumption plus closing stock minus opening stock net off gives you your material purchases budget. As simple as that, right? Now, what do we do here? Simple, guys. First, raw material consumption. We know P, 1,12,000 I need to consume. Perfect. And Q, 70,000 I need to consume. Clear with this, guys? Perfect. Plus closing stock minus opening stock. Now in the question, I have the opening stock figures, 12,000 kgs and 8,000 kgs. Very simple. This figure I can populate 12,000, 8,000 respectively. Consumption also we have. Now how will you compute the closing stock of raw material? Simple. In the question they have given, the company is planning to maintain minimum stock which is equivalent to 2 days worth of consumption. Right? Now let us take product P. Now product P, in a month I am planning to consume how many kgs? 1,12,000 kgs. So 1,12,000 kgs is for a period of 1 month, having how many days? 28 days. So if this is the consumption required for 28 days, how many kgs do I consume for 2 days? 1,12,000 divided by 28 into 2. Basically, I am going to consume 8,000 kgs for 2 days. So 2 days equivalent consumption is what I'm going to stock as my closing stock. Hence, 8,000 kgs is going to be my closing stock for raw material P. Are you guys clear with this? Right? This is a good adjustment in this question. Now, the other one for product Q, Again, 2 days equivalent stock. So 70,000 is the consumption required for 1 month having 28 days. How much will be the equivalent consumption for 2 days? 70,000 by 28 into 2. That gives you how much? 5,000 kgs. Are you guys clear with this? So 5,000 kgs is going to be my closing stock of raw material Q. So P has a closing stock of 8,000 and Q has a closing stock of 5,000. So now what do we do here? So what is going to be my total purchases, raw material purchases budget? Raw material consumption 1,12,000, right? So plus closing stock 8,000 minus opening stock of 12,000. So 1,12,000 plus 8,000 minus 12,000 gives you 1,08,000 is going to be the total number of kgs which I need to purchase in this particular period. And how about product Q? It's going to be 70,000 plus 5,000 kgs, right, of closing stock, right, minus 8,000. So 70,000 plus 5,000 minus 8,000 gives you 67,000 kgs I have to purchase raw material Q. Are you guys clear with this? This is going to be the raw material purchases budget in kgs. Now if I want to convert it into value, simple, every unit, every kg of P has a purchase price of 3 rupees and every kg of Q has a purchase price of 2 rupees. Multiply this respectively with 3 and 2. So 1,08,000 into 3 gives you 3,24,000 and 67,000 into 2 gives you how much? 1,34,000. Clear with this, guys? So this is going to be the raw material purchase budget in value and this is going to be raw material purchases budget in kgs. Clear with this, guys? So this is the purchase budget in kgs and this is going to be the purchase budget in value. Are you guys able to understand? As simple as that. So first what you need to do, sales data is that sales plus closing stock of FG minus opening stock of FG gives you production. So production, right, into the number of kgs required per unit, you arrive at the consumption budget. Now consumption, raw material consumption plus closing stock, this is ideally plus closing stock minus opening stock gives you your raw material purchases in kgs. Multiply that with the rate, you will arrive at the raw material kgs to be purchased, the purchases budget in value. As simple as that, guys. Very, very simple and straightforward, provided you have this particular line of thinking. That's all it is. That's all it is. Clear with this, guys? This is all we need to do in this particular area of functional budget. Clear with this, guys? So with this, we have completed this particular question. So let's go and update our library of adjustments. So write down functional budget hyphen functional budget hyphen production budget semicolon production budget semicolon raw material consumption budget semicolon raw material purchases budget, right, semicolon calculation of closing stock of raw material. That was a good adjustment in this question. So that is also something we did here. Clear with this, guys? Right? So exactly on the same line is how we compute the remaining functional budgets, like your labor hour requirement budget, your labor budget, right? Then your production overhead budget, selling overhead budget. So all other functional budgets are prepared at the same line. The base is first, sales is a starting point. Sales plus closing stock of FG minus opening stock of FG gives you production. This production budget is the base for all other functional budgets. Clear with this, guys? And that's about this overall area of your production budget. So since this is a marathon, right, I just wanted to do one representative numerical problem for functional budget, right? In our batches we do it in detail, but since this being a marathon, right, I wanted to do one representative question from functional budget and leave it there. Now let's move on to the second segment called as flexible budget. Let's move on to the second segment called as flexible budget. Now let's move on to the next segment of discussion called as flexible budget. Now guys, what is this concept of flexible budget? Now let me take an example. Now let us say they have given the following data, right? Now for 80,000 units of volume, let us say this is an example, let us say this is a given data. The per unit cost of direct material is 8 rupees. Direct wages, let us say per unit is 4 rupees, right? This is a random example I'm giving you. Then let us say the variable production overheads is going to be 4 rupees per unit. Okay, let me just take it as 6 rupees per unit. Anything is fine. Fixed production overheads, let us say, is 2 rupees per unit. Similarly, your variable administration overhead is, let us say, 5 rupees. Fixed administration overheads is, let us say, 3 rupees. Then your variable selling overheads is 2 rupees. And let us say your fixed selling overheads is 7 rupees. Just an example, right? Now, this is the data given, right, for an output level of 80,000 units. Now, using this budgeted data, they are asking you to prepare a budget for 90,000 units level. Suppose I'm going to produce 90,000 units. What is going to be the cost, right, of all these components, direct material, direct wages, variable production overheads, fixed productions, or fixed production overheads and all for 90,000 units capacity level. Now, how will you do this? Simple, guys. So first, what we will do is, now out of these components, we will first identify what are all the variable components: direct material, direct wages, variable production overheads, variable administration overheads, variable selling overheads. These are all variable costs, right? Now, we know that variable costs will remain constant on a per unit level, whereas fixed cost remains constant in total. So now what we do is, in the given budget, right, first what we do, right, we arrive at all the total amount also. So here 80,000 into 8 is equal to 6,40,000. 4 is equal to 3,20,000. 6 is equal to 4,80,000. Right? 2 is equal to 1,60,000. Right? 5 is equal to 4 lakhs. Right? 3 is equal to 2,40,000. Then 2 is equal to 1,60,000. Right? And 7 is equal to 5,60,000. So now what we did, now component wise we have the per unit figure and the total figure with us. Now what will we do? Now this is a budget which is available with us, right? This is called as a static budget or a fixed budget. What is the meaning of that? A budget prepared for one given volume level is called as a static budget, right? Now using the static budget, if you are preparing a budget for a completely different output level, that is called as a flexible budget. Now, in this case, now we need to prepare a budget for 90,000 units level, right? Once again, we need to arrive at the per unit and the total column. Now, first, how will we do that? Simple, guys. We know variable costs will remain constant on a per unit level, whereas the fixed costs will remain constant in a total level. So what we will do, first identify the variable costs. Now, direct material is a variable cost, right? So irrespective of the output level, it will remain constant on a per unit level, right? Direct wages 4 rupees, variable production overheads 6 rupees, right? Whereas fixed production overheads, it is a fixed cost, it remains constant in total. So fill the total column, 1,60,000, right? Similarly, variable administration overheads, fill the per unit column. Fixed administration overheads, fill the total column. Similarly, variable selling overheads, fill the per unit column. Fixed selling overheads, fill the total column. Clear with this, guys? So these are all. Once again, I will just take it out here. I'll just copy paste the figures. Okay, yes. Right. So I'm just taking this and slightly I'm moving it off here so that it's easier for us to capture. Right. So now what we do, guys, now from this static budget, right, or a fixed budget, first we picked the variable components, and the variable component column alone we filled the per unit column. With respect to the fixed components, we took the total column and we filled here. Clear with this, guys? Now, what we need to do, why we did this? Because of the cost behavior pattern, right? Variable cost remains constant on a per unit level, fixed cost remains constant in total. Now, we can just complete the remaining parts. Now, for the variable components, we have the per unit data, multiply it with the output, you will arrive at the total column. Now, with respect to the fixed cost, you have the total column divided with the output, you arrive at the per unit column. As simple as that. Clear with this, guys, right? And that is all we need to do here. Let me just rearrange this. 1 second. Right, and here we have this. That's about it. Right, 1 second. That's all it is. Clear with this, guys? So now this is called as a static budget, right? A static budget means what? A budget which is available for a given volume level. Using the data given in the static budget, if I flex it and prepare a budget for a completely different volume level, it is called as a flexible budget. Here we use the concepts of variable cost and fixed cost, right? The cost behavior pattern is being used. Basically what we do is variable cost remains constant on a per unit level, fixed cost remains constant in total. Based on this, we can prepare a budget for any given volume level. This basically is called as a flexible budget. Now, an advanced level sum would be, right? It might not be as simple as this. We'll be doing one numerical problem where now for a different output level, we need to prepare a budget where in the next year, maybe we need to prepare a completely different budget for a different volume level with some changes in cost and all. And maybe on certain items of cost might not be constant on a per unit level. It might not be constant in total also. In that case, what we need to do, we need to segregate the total cost into variable component, fixed component, because if it is neither constant on a per unit level nor is it constant in total, it is basically called as your semi-variable cost and all. So that needs to be necessarily segregated into variable and fixed component and needs to be dealt with accordingly. All these issues, we will be taking one good numerical example, and with the help of that particular numerical question, we will be covering this entire concept of flexible budget. That's about it, guys. So once again, please go to your solved question bank of your CA intermediate material. All right, so please go to question number 9. Once again, I'm telling you, this question is equally applicable for CMA intermediate students, both paper 8 as well as paper 12 students, cost accounting and management accounting students of CMA intermediate. You can definitely follow this sum because it is also equally applicable for you guys. And again, I want to reiterate that in all our courses, the recordings are separate. I'm not mixing any recordings. For the purpose of marathon, I am just combining it just so that the concepts are similar. So you have everything in one particular place. Clear with this, guys? So here, let's go on to question number 9. Yes, let's go to this particular question, a good question. Right? So one question, I'm taking a comprehensive question and I'm doing it in the marathon itself. We are also covering the numerical problem. So now let's get started here. ABC Limited is currently operating at 75% capacity, and in the past 2 years the levels of operations were 55 and 65% respectively. The present production is 75,000 units. Wait, so 75% capacity represents 75,000 units, which means 100% capacity will represent 1 lakh units, 75,000 by 75%. Now the company is planning for 85% capacity level, which means in the next year they are planning for a capacity level of 85,000 units, and the cost details are available as follows. Now what have they given here? For 55% capacity, basically means 55,000 units volume level, the cost data are given. 65,000 units, the cost data is given. 75,000 units level, the cost data is given. Right, guys? Fine. Now, what have they given? Direct material, direct labor, factory overheads, selling overheads, admin overheads. Remember, all these figures are given in total, right? And they have totaled up all the line items as well. The profit is estimated at 20% on sales, right? So profit is going to be what? On top of this cost, you need to add a profit which is equal to 20% on sales, right? You need to arrive the sales value. Now, the following increase in the costs are expected in the next year. First, guys, 3 different volume level is given, right? In the next year, the company is planning for what percentage of capacity? 85%, which means they are planning for an output of how much? 85,000 units, right? So obviously what we need to do, analyze which are all the variable costs. Variable cost remains constant on a per unit level, whereas fixed cost remains constant in total, right? Now over and above this, look at this. The following increase in costs are also expected during the next year. First, direct material, they're expecting an 8% increase. Direct labor, 5% increase. Variable factory overheads, 5% increase. Variable selling overheads, 8% increase. Fixed factory overheads, 10% increase. Fixed selling overheads, 15% increase. And administration overheads, a flat 10% increase. Prepare a flexible budget for the next period, that is 20x2, x3 at 85% capacity level, right? Also ascertain the profit and the amount of contribution. This is what they have asked in this particular question. So now since they have asked for profit and contribution, so you need to prepare this in a marginal costing income statement format. Sales minus all the variable costs gives you contribution, right? Minus fixed cost gives you what? Your profit, right? But before that, once, how will you get the sales? For you to get the sales figure, first you need to arrive at the total cost, because total cost plus profit is only sales figure, right? So basically what we will do, first we will arrive at all the variable costs, to that add all the fixed costs separately, right? Arrive at the total cost. From that add whatever is the markup profit required, we arrive at the sales value, and then finally we list down sales minus variable cost equal to contribution, right? And the sales minus total cost gives you profit. That way also we can do it. Clear with this, guys? But before that, first let us get started with this question. Maybe if you want, pause the video now and try to attempt this by yourself. A masterpiece, good question, right? To cover a representative coverage of this flexible budget, a good sum to revise the day before your exam, right, guys? Of course, in our regular and exam oriented batches, every single sum I will be doing, right? However, in a marathon, I didn't want to actually omit the sums and all. At least one representative sum from concept I want to do, so that it will be a very good effective way of revising this entire chapter. Fine, guys, maybe if you want, you can pause the video now and try to attempt this particular question by yourself. Now let's get started. First one, sir, I want to, first what I need to do, I need to segregate the cost into variable component or fixed component. First, how do we do? Guys, ideally speaking, any two levels is enough. In this question, they have given 3 levels of output. Sir, first, why do we need so many levels of output, sir? Now, which costs are variable, which costs are fixed? How do we know? Simple. Now, first, direct material. Let us take 55% capacity level and 75% capacity level. Take extremes, right? Now, calculate the direct material cost per unit. First, you tell me, is direct material fixed? Definitely not. Why? Had it been fixed, it would have been constant in total. Now, is it variable? Let us check. How will we check? Arrive at the per unit cost of direct material. So if it is constant on a per unit level, it is going to be your variable cost. Now 11 lakh divided by 55,000, how much is it? So it's going to be 20 rupees per unit here. How about 75% capacity level? 15 lakhs divided by 75,000 gives you how much? 20 rupees only, which means now this is constant on a per unit level, hence this is a variable cost, and it varies at the rate of how much? It is going to be 20 rupees per unit. Next, labor. 5 lakh 50 divided by 55,000, how much is it? 10 rupees per unit. Take the extreme level. 7 lakh 50 divided by 75,000, how much is it? 10 rupees per unit. Clearly this is also a variable cost. Next one, take your factory overheads. Is it fixed? 3 lakh 10, 3 lakh 30, 3 lakh 50. No, it is not constant in total. Clearly it's not fixed. Let us check whether this is variable. Now 3 lakh 10,000 divided by 55,000, how much is it? You get 5.63 something. Now is it okay? So at 75% capacity level, 3 lakh 50,000 divided by 75,000, how much you get? You get 4.66 something. Now if you see, it is not constant in total, and it is also not constant on a per unit level. So clearly this is a semi variable cost, and if you have a semi variable cost, what you need to do, segregate this into fixed and variable component. How will you do that? Literally, this is something that we have actually learned in both basic concepts, I mean, which I generally do in our regular and fast EVO batches. But anyways, even in this marathon, we have covered in volume analysis, right? That is difference in total cost divided by difference in units. You will be able to get your variable cost per unit, and with that you can segregate your total cost into variable and fixed components, which I'll be doing here, right? Next one, selling overheads. Now, is it fixed? 3 lakh 20, 3 lakh 60, 4 lakh. It is not constant, it total. Let's check whether this is variable. 3 lakh 20 by 55,000. How much is it? It's going to be 5.818181. Here it's 4 lakh divided by 75,000 is going to be 5.33 something. So it is not constant in total. It is not constant on a per unit level also. This is also a semi-variable cost, which means it needs to be segregated into variable and fixed component. Next, admin overheads. Is it fixed? Yes. 1 lakh 60, 1 lakh 60, 1 lakh 60. So clearly my admin cost is going to be a fixed cost. Clear with this, guys? So now the first thing I need to do is segregate, right, my factory overheads and selling overheads. I need to segregate it into variable component and fixed component. Clear with this, guys? So how do we do that? That is the first part of discussion in this particular question. So now quickly let's get started here. So now first one, factory overheads. So please have the question with you. So this is question number 9. Question number 9. The first one, I'm having a working note for factory overheads, right? So factory overheads. Now clearly, guys, for 55,000 units level, how much is my factory overheads? Yes, it was 3,10,000, right? And for 75,000 units level, how much was it? It was 3,50,000 rupees, right, guys? This was units. So now can I say variable component is going to be difference in fixed cost? How much is the difference in the total cost? How much is the difference here? It's going to be 40,000 rupees. So 40,000 divided by difference in the units. How much is the difference in units? So 75 minus 55, basically it's going to be 20,000 units. Or in other words, logically, my overall cost increased by 40,000 rupees because my units increased by how much? 20,000 units. Guys, clear with this? So the increase in the total cost is purely on account of the variable cost incurred for the incremental units. Or in other words, how much is the variable cost per unit? 40,000 divided by 20,000, you get how much? So rupees 2 per unit. Now with this, you can arrive at your fixed cost. Fixed cost is equal to, right, total cost minus variable cost. Now you take any one volume level, right? Let us take 55,000 units as the volume level. At 55,000 units, how much is the total cost? 3,10,000. That is the total fixed over in total factory overheads, right? Minus how much is the variable component? 55,000 into 2, right? So basically you get 3,10,000 minus 55,000 into 2 is going to be 1,10,000. So basically you get how much? Rupees 2 lakh. Clear with this, guys? Right? So now my fixed component of your factory overheads is going to be 2 lakh rupees. Variable component is going to be 2 rupees per unit. Are you guys clear with this? Right? So this is something that you need to actually have in mind, as simple as that, right? And of course, in this particular question, this is subject to some price increase and all. What it is, we will just see it later. But as of now, clearly we know that the variable factory overheads is how much? So factory overheads, if you see, 1 second. So here, so factory overheads, if you see, variable component is 2 rupees per unit. It's 2 rupees per unit. The fixed component is going to be rupees 2 lakh in total. Clear with this, guys? Right? This is the story about your factory overheads. Next one. What is the other one that they have mentioned? The next one is regarding your selling overheads. This is also semi-variable. Now let's take the two extreme volume levels, 55,000, 75,000. How much is the figure? 3,20,000 and 4 lakh. Let's take these two figures. All right. So this is a separate working note for what? it is a separate working note for selling overheads. Now guys, 55,000 units level, that is 55% capacity. So 55,000 units. The other one is how much? 75,000 units. I'm just taking the two extreme, the two extreme output level. Now, units. In this case, how much is my selling overheads? At 55,000 units level, it's going to be rupees 3,20,000. And at 75% level, it's going to be how much? Rupees 4 lakh. Right? So my variable cost is going to be the difference in the total cost, which is going to be how much? The difference in the total cost is going to be, right? How much is it, guys? The difference in the total cost is going to be here 80,000 divided by the difference in the total units. How much is it? So it's going to be 75,000 minus 55,000. How much is that, guys? It's going to be 20,000 units. So basically, I'll say 80,000 rupees is the variable cost pertaining to 20,000 units. How much is going to be on a per unit level? It's going to be rupees 4 per unit. Now, how much is the fixed component here? So the fixed cost is equal to total cost minus variable cost. So take any one volume level. 75,000 units volume level. What is the total cost of selling overheads? 4 lakh minus how much will be the variable component? 75,000 into 4. Right? So how much is 75,000 into 4? It's going to be 3 lakh. So 4 lakh minus 3 lakh, you get how much? You get 1 lakh rupees as the fixed component of selling overheads. So basically, guys, selling overhead, variable component, fixed component. Variable component is going to be 4 rupees per unit, and the fixed component is going to be rupees 1 lakh. Are you guys clear with this? Right? Are you guys clear with this? Right? And that is all about this particular part of this particular question. Right, guys? So selling overheads we have, and production overheads, factory overheads we have. Now the other parts are readily available. Direct material 20 rupees per unit, variable component, right? Only variable. And your direct labor, it is going to be 20 rupees per unit. These are all variable components, right? And how about your admin overheads? It's fully fixed, 1,60,000 rupees. Clear with this, guys? So now let us just list out the summary. Let us just list out the summary. Now quickly here, I'm just writing out summary. Now, what are all the line items of variable costs here? Line items of variable cost. First, you have direct material. How much is direct material? Just now we saw 20 rupees per unit, correct? Present cost, how much? 20 rupees per unit. Wait, this is subject to change. That I'm not coming to. I've not come to that, as of now. We will do that. Don't worry. Next up, how much is the direct labor? Fully variable, 10 rupees per unit. So direct labor, 10 rupees per unit. Right? Next one. Third, then what is the other variable component? Now I have factory overheads, variable component, 2 rupees. So variable factory overheads, rupees 2 per unit. Fourth one, variable selling overheads is going to be how much? 4 rupees per unit. Right? These are the ingredients of your variable costs. Next, what are the things you have in your fixed costs? In fixed costs, we have first one, factory overheads. So first one, factory overheads. How much is that, guys? It's going to be 2 lakh rupees. We saw here. So write it up here. It's going to be rupees 2 lakh. This remains constant in total. Number 2, your selling overheads. You have fixed component. How much is it? 1 lakh rupee. We calculated it, right? It's going to be rupees 1 lakh. And the third one is your administration overheads. It is fully fixed. We saw here how much was that? 1,60,000. Right? So it's going to be rupees 1,60,000. These are all the ingredients of the cost as of now. Right? Now let's go further and read the question. What have they said? In the upcoming years, sir, variable cost clearly on a per unit level I have. Fixed cost I have it in total. Wait. Now they are saying there is a following increase in the costs. Direct material costs are going to increase by 8%. Labor costs are going to increase by 5%, variable factory overheads by 5%, variable selling overheads by 8%, fixed factory overheads by 10%, fixed selling overheads by 15%, administration overheads by 10%. Now we need to apply all these changes, but remember that changes, right, should be applied. For the variable cost, the changes should be applied on a per unit level, and for the fixed cost, the changes should be applied in total. Now let's apply all the changes and we will arrive at the revised figures. Now guys, first one, direct material cost, it is going to increase by how much? 8%, which means in the upcoming year it's going to be 20 into 108% or 1.08. How much is this? 20 into 1.08. It is going to be how much? Rupees 21.60 per unit. So for the upcoming year, the direct material cost is not going to be 20 rupees. It's going to be 20 rupees into 108% because 8% increase is going to be there. Next, direct labor is going to increase by how much? 5%. So into 1.05. So 10 into 1.05 gives you how much? Rupees 10.50 per unit. Next, fixed variable factory overheads. How much is it going to increase? It's going to increase by another 5%. So into 105%, how much is this? 2 into 1.05 gives you how much? 2.10 rupees per unit. Clear with this, guys? And how much is the variable selling overheads? It is going to increase by how much? 8%. So into 108%. So or into 1.08. How much is that? It's going to be rupees 4.32 per unit. Clear with this? That's about it. Next one. How about your fixed cost? My fixed factory overheads is going to increase by 10%. Please have the question with you. So into 110%, how much is that going to be? It's going to be rupees 2,20,000 as a whole. So please be careful. For variable cost, I'm applying the change on a per unit level. For fixed cost, I'm applying the change in total. How about your fixed selling overheads is going to increase by 15%. So into 115%, how much is that going to be? 1,15,000. Right? Right, 1,15,000. Then administration overheads is going to increase by 10%. So into 110%, how much is that? 1,16,000 into 1.1 gives you rupees 1,76,000. Are you guys clear with this? So now for the upcoming year, we need to prepare a particular flexible budget for 85% capacity level, 85,000 units level. Very simple. So 85,000 units level, all the variable costs we have on a per unit level, right? Respective variable cost multiply with 85,000 rupees, 85,000 units, you will arrive at the total column, right? And the fixed costs are readily available in total. These figures you can directly apply. That is what they have also mentioned here. Budget for 85% capacity level. Now, first, direct material. How much is it? 21.6. This is what we also found out. Right? Next, direct labor. How much is it? 10.50. This is what we found out. Next, direct variable factory overheads 2.10. Look at this, 2.10. Variable selling overheads was 4.32. Look at this, 4.32. Right? Now the respective figures you have, multiply this with 85,000, you will arrive at the total column, right? The total variable cost, and you will get the per unit and the total figure. Next, fixed costs. How much you get? Fixed factory overheads was 2,20,000. Look at this, 2,20,000. Fixed selling overheads was 1,15,000. Yes, you get 1,15,000. And fixed AOH was 1,76,000. You get 1,76,000. So the sum total of all the fixed costs comes out to the sum of these three. How much was that? 2,20,000 plus 1,15,000 plus 1,76,000. You got a total fixed cost of 5,11,000. Clear with this, guys? So the total variable cost, here is a figure. The total of fixed cost 5,11,000. So what do you get? 32,74,200 plus 5,11,000. How much you get as a whole? The total cost for the company is going to be 37,85,200 rupees. Now they are saying the company expects. How do you fix your profit? I mean, how do you fix your selling price? Your total cost, add a profit. How much is the profit? 20% on sales. What is the meaning of this? What is the meaning of this? Now, cost, profit, selling price. Now they are saying profit is 20% on sales. So which it is on sales. Hence, if you keep your selling price as 100, profit will be 20. How much will be the cost? 100 minus 20, cost will be 80. Guys, clear with this? So now I have this. So now if my cost, right, is equal to 80, how much will be my profit, right? So if 80, so 37 lakh 85,200 is 80, how much is equal to 20? Reverse calculate. So 37 lakh 85,200 divided by 80 into 20, if you do, you will get a profit of how much? 9 lakh 46,300. So 37 lakh 85,200 plus 9 lakh 46,300, you will get the total sales as how much? 47 lakh 31,500 rupees. Clear with this, guys? With this, you arrive at the sales figure, you arrive at the profit. This profit was also asked in the question. We arrived at it. How do you calculate the profit? 37 lakh 85,200 divided by 80 into 20. That's how you arrive at the profit. Guys, clear with this? Now, they had also asked for contribution. Simple. Sales minus variable cost gives you contribution. That is 47 lakh 31,500 minus 32 lakh 74,200. You get how much? 14 lakh 57,300. That also you can arrive at it. Clear with this, guys? And with this entire sum is over. And all these things we have actually done. Clear with this, guys? A very good and a comprehensive question wherein we saw the concept of flexible budget with changes in your cost. And this sum we had to analyze and find out which costs are all variable, which costs are all fixed, and which costs were all semi-variable. And for those semi-variable costs, we had to segregate it into variable component, fixed component, and on these costs we had to apply some changes and arrive at the revised cost for the upcoming year, and on that cost add the profit, arrive at the sales, and having arrived at the sales, now arrive at the contribution, which is sales minus variable cost. A very good numerical problem to actually sum up the entire concept of fixed and flexible budget. Clear with this, guys? So please go and update your library of adjustments. Please go and update your library of adjustments. Write down flexible budget hyphen identification of costs into VC and FC, variable cost and fixed cost, semicolon, segregation of semi-variable costs. Write down segregation of semi-variable costs, semicolon, segregation of semi-variable cost, semicolon, increase in costs. Write down increase in costs. This was also given. Increase in costs, semicolon, calculation of expected sales. Calculation of expected sales. It was completely a reverse working question, a beautiful question, and in my opinion, this question is a must visit the day before your exam, whether you are a CA intermediate student or a CMA intermediate student, be it paper 8 cost accounting or paper 12 management accounting. This is a masterpiece problem which I would suggest is applicable for everybody, right? Though I am taking this from CA Institute, from our CA question bank, right, which I have prepared, right? I'm telling you this concept and this particular question itself is equally applicable even for CMA intermediate students, right? There in CMA intermediate courses, I would have done certain questions directly from the CMA Institute study material, but for the purpose of revision, I'm telling you, definitely this kind of question can be expected across all the courses. Clear with this, guys? And with this, literally, this entire chapter of budget and budgetary control is over. Clear with this, guys, right? And that's about this particular chapter. Now, in your management accounting, right, literally the same chapter is only there in your CMA intermediate. I'm telling you, paper 12, you have the same chapter, but it is called forecasting, budgeting, and budgetary control. What do you mean by a forecast? Basically, it is only theoretical in nature. Forecast basically represents, right, a short, a short budget, a shorter version of budget. Sir, what do you mean by this? Now, let me just quickly walk you through, just 2 minutes time, and with that we will be done. Now, please take page number 119. This is there only for CMA intermediate paper 12 students. right? So management accounting students, right? Quickly, that's all. 5 minutes and we are done, right? Now look at this difference between forecast and a budget. First, I will tell you, budget is basically a detailed plan of action which we prepare. Let us say for this upcoming year, right? Whatever we prepare in detail. Project production budget, your sales budget, and everything. We prepare it in detail. Now, having prepared the budget, let us say the first month got over. So now, based on the actual trends which happened in the first month, right? Now, if I am predicting what is going to happen in the next month, let us say in the month of May, first month was April, whatever has happened, though for the entire year the budget has been prepared, based on the current trends, sir, the first month has started. Based on that, I am predicting the probable events. I am predicting the probable events for the upcoming month, right? For a shorter period of time. This is called a forecast. Sir, why do we do that? Simple. Though I have a budget in place, I generally have a forecast just to make sure that whether I'm going in track with the budget or not. At least the next month, will I be going in track with the budget or not? Clear with this, guys? This is just a prediction or an estimate that I make. Now, based on this budget, we don't do any variance analysis calculation and all, right? Maybe this estimate or this particular forecast can be useful for preparing future budgets also. Are you guys clear with this? Now, based on this in mind, you just read it. Now, that's why they say weather forecast, right? In weather, right, when they are predicting the climate and all, they do a weather forecast. They don't do a weather budget. Forecast is basically for a shorter period, 1 week, 1 month, right? That's all. They don't predict the weather for the entire period, for the entire year. Clear with this, guys? Budget is generally for a slightly longer period of time, or forecast is basically for a shorter span of time. Now you can read this. Now, forecast is an assessment of probable future events. Budget is a planned result which a business wants to achieve. Forecast is an estimation based on past and the present data. Clear with this, guys? After the first month, based on the trends, I am analyzing what is going to be happening in the next month. Budget is a financial plans expressed in number. Forecast, it focuses on what a business will achieve, whereas budget focuses on what a business wants to achieve, right? This is what you are supposed to do. Whereas forecast, sir, first month this happens, sir. I know second month more or less this will only happen. It's a prediction, right? Based on a forecast, we don't set any target. We only give a prediction. Whereas budget, it sets a target, right? Forecast, it is updated at regular intervals. Monthly I do, or quarterly or annual. Budgets usually are done on an annual basis. Now you guys are able to understand, right? Using a forecast, variance analysis is not required. Whereas using a budget, we do variance analysis, favorable, adverse variances, all these things we do in standard costing, right? Now, forecast, it precedes budgeting. That is, it acts as an input for variables like sales, prices, wages. Based on the forecast, maybe I can provide an input for the future budgets. Whereas, right, when it comes to budget, it uses the forecast data to create a budget. Past forecast data are used to create future budgets, right? Now, scope, forecast projects operations, customer reach, revenue, profitability, and all these things. Budget, it generally guides for profit planning and cost control. All these things they have given. Basically, guys, forecast is a prediction done for a shorter span of time, but budget is generally an entire detailed plan of action saying this is the sales I want to achieve, this is the cost you are allowed to incur overall, this is the budget profit and all. Clear with this, guys? Only theoretical thing is there in your CMA intermediate paper 12, but for that there is no difference at all. Clear with this, guys? Numerical problems, everything is the same both in CA Inter as well as in CMA Inter paper 8 and in paper 12. All these things are the same. Clear with this, guys? And with this, we have completely covered this chapter called as budget and budgetary control. Clear with this, guys? Right? So now on this note, let's move on to the next chapter.